today, and you're seeing the underperformance in small caps versus large tech, that sort of frames the query really well, because firms with pricing power that can pass through the cost to consumers are going to do a lot better than those companies that can't. And importantly, we may see good revenue numbers, but we have to remember those are nominal numbers. And so everything now, whether it's economic data or revenue growth, has to be framed within a new inflationary paradigm.
And that paradigm, you think, is different to the previous cycle. Is that right, Pete? We've broken out of that low inflation regime.
Yeah, look, I've been in the disinflation, deflation camp for a long time because of globalization and technology. And by the way, inflation is always somewhat temporary because it either kills itself or the central bank kills it. We're in one of those periods, and just because it's not going to last forever doesn't necessarily mean that it's not going to do some damage.
The range of opinions on Wall Street right now I find to be absolutely fascinating. We hear it again this morning. Esty, just to wrap things up with you, it seems to me you see nothing that will shorten or derail this recovery. Nothing so far, at least. Is that true?
Well, that would be a very bold statement. But I do think that there are definitely risks. And we have seen that over the last few months, especially in September and October, that investors had to climb that wall of worry, had to get over fears. But it feels like we're kind of at that peak inflation fear, peak supply chain disruption fear, peak growth fears, peak Fed fears, with the market almost getting a little bit ahead of itself. And thinking that rate hikes are going to come sooner and much more aggressively. So there's always obstacles, and when we don't expect them, you usually have something else coming. But right now, I have to say, I think looking a few quarters out, I do still think that growth is going to last. And even if inflation stays, and probably will stay, higher for longer, that doesn't derail growth either.
Esty, thank you. As always, Esty Dweck there. Clinton Warren and Peter Cecchini on this equity market. A ton of earnings coming up through the week. We get about 10% of the S&P 500 after the close alone in two names, in Microsoft and Alphabet. Then on to Thursday when we hear from Apple and Amazon. Coming up on this programme next, markets debating the potential fallout from fresh virus cases throughout China.
I do think the overall impact should be quite short-lived.
That conversation up next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Extremely thankful. They don't know what to say. Again, they can't even fathom that they're out of Afghanistan. They're still in a state of shock and can't believe it.
What we have built through this process is essentially a mechanism for getting oppressed women and girls out of Afghanistan. So we're actually going to circle up and see what resources we have left, to see what options we have left, what mechanisms we have left, and actually look at potentially trying to get more women and girls out of the country as well.
We've been through a lot, us as a team. I know sleepless nights, but you know what? There's nothing more satisfying than knowing that you've saved many lives, and will continue to support these girls on their missions.
From New York City,
in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
to recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
I'm strategically focused on China. Absolutely. Who can't be, right? We know the country very well. We're very successful in the country, both in the onshore business and the offshore business. We have a very good combination of businesses in the wealth, IB, and asset management business, and we plan to invest more.
Full bull. The word from Ralph Hammers there. Manus Cranney, my good friend, catching up with the UBS boss, betting on China despite a number of lingering concerns. HSBC sharing the bullish sentiment, upgrading Chinese equities to overweight and writing the following. The baby is being thrown out with the bathwater. Yes, China is struggling with growth and a stronger US dollar, but that's now well known and well priced. For more, let's bring in Damien Sasser of Bloomberg Intelligence. Damien, I just wonder how much of this is well known, A, and well priced, B.
Well, I think you're right to focus on this. Comes down to the COVID outbreak in the north. China's zero policy toward COVID. In fact, just overnight, they said they're going to start administering vaccines to children as young as 3 years of age. So for me, this is about supply bottlenecks. That's what's driving the GDP forecast to go down in China. Well, yes, I agree that equities might be undervalued at current levels. Very difficult to price, especially given the liquidity constraints that surround A shares in China. So for me, this is going to be about supply. It's going to be about variant outbreaks. It's going to be about COVID and how the economy can bounce back quickly and efficiently.
What did you think of the Chinese government leaning on the Evergrande founder and leader, Damien, to use his personal wealth to pay off some of that debt?
Yeah, Hui Kai-yan, who's the founder of Evergrande, I think some estimates place his total net worth as something on the order of $7.8 billion. We all know Evergrande has $300 billion of liabilities. So, look, it's very possible that, he may have to dip into his pocket, alleviate some of the pressure, but it's not going to be alleviating pressure on creditors. Let me make that clear, Jonathan. It's going to be about, completing the unfinished homes. That's what China wants the money to be used for, not to repay dollar creditors on missed coupon payments or that like.
Then before you go, this dropped across the Bloomberg just moments ago. Goldman now looking for a 150 basis point hike in Brazil tomorrow. They're not alone, Damien. How big is that hike going to be, and is it enough?
Well, you got me yesterday. I mean, what did I say, 7.25? We're now talking 7.75 on the Selic rate in Brazil, wow. Jonathan. So, that's really what we're talking about. And it might not be enough. I mean, even though real rates are positive at the 2-year level in Brazil, I mean, it just might not be enough. Many of the people who I speak with are still paying in Brazilian rates and think that, the belly's going to go higher here and follow the U.S. So, it's anyone's guess as to what this is going to do, but certainly the fiscal spending is getting a bit egregious ahead of next year's elections.
Damien, thank you. As always, Damien Sasser there of Bloomberg Intelligence. Just looking ahead to that decision out of Brazil. So many central banks hiking in emerging markets. China an exception. Maybe they can go the other way. Turkey, another exception, different reason. The median estimate 763. Right now 625. The high estimate 775. The low estimate 725. We could have a 150 basis point hike, according to the team out of Goldman. On the politics of the situation between China and the United States, let's start there. They're holding another round of talks. We've had them. China calling its conversation with Secretary Yellen, quote, pragmatic, candid and constructive. The US issuing its own statement, writing the following. They discussed macroeconomic and financial developments. Secretary Yellen also frankly raised issues of concern. Let's get a take on this from Bloomberg's Joe Matthew, who joins us down in DC. Joe, what is the latest here?
Well, issues of concern. What else is new? I guess we're seeing, Jonathan, the slow roll here, the slow drip of news coming off President Biden's phone conversation with President Xi at the beginning of September. Not a lot of love on that phone call, as we understand, but there have been a couple of meetings. Jake Sullivan meeting with his counterpart in China, and now again, Janet Yellen holding the second phone call in 4 months. It should tell us a lot when the screaming headlines say news, when it's a phone call that results really in nothing. There was no actual progress to hang our hats on here, but this is the slow roll to an actual summit, Jonathan. Biden and Xi, it will be virtual, but they have agreed in principle to speak about real issues before the end of the year. You don't leave it all up to the leaders, though. They're trying to hammer out some of their differences, and climate is a huge one as President Biden heads to COP26 next week. John Kerry, the climate czar in the White House, has been pushing for a commitment, some sort of commitment on climate change, specifically to coal-fired power plants in China. Jake Sullivan, the national security advisor, sees a little bit differently, though, and said recently that the United States is not in the business of trading cooperation with China on the climate as some sort of favor from Beijing. So there's a little bit of chest thumping going on here, even as the temperature appears to be cooling a little bit.
President Xi will not be at that climate change conference in Scotland. President Putin will not be at that climate change conference in Glasgow. And there is a hope, Joe, that this president can get something agreed here. That's where the focus is right now, firmly on domestic issues. Joe, we've heard from Senator Joe Manchin in the last hour, talking to our friend David Rubenstein. What have we learned?
Yeah. Well, we've learned that not a lot has changed. He is in favor of a 15% corporate minimum rate. I thought that was actually pretty compelling, knowing that Joe Manchin is not a fan of hiking the corporate tax rate, just like Kyrsten Sinema. But what's going to happen here? He says there'll be a vote on Wednesday on the BIF, the bipartisan infrastructure deal, and that does seem to be a call that's growing louder here in Washington. The question is, will they actually have a framework on reconciliation? And that gets to your question a little bit more. That's where the climate provisions would be that Joe Biden wants to bring to Europe. But of course, Joe Manchin is the reason why the centerpiece of this, the clean power centerpiece of this that would reward utilities for using green power, penalize them for not, is not going to be in this plan. So does Joe Biden go to Glasgow to trump the age of EVs? There'll be lots of incentives for EVs and charging stations. Jonathan, just unclear if there'll be anything else.
Hey, Joe, maybe they should send the other Joe, given that he seems to be the man in control.
I floated that idea.
I know.
Might be a good partner to bring.
I know. I think you mentioned it earlier this morning. Joe Matthew, it's good to catch up, sir. Looking forward to Sound On Bloomberg Radio with Joe Matthew a little bit later on this evening, 5 p.m. Eastern Time. Let's get you some sector price action on this equity market with our stocks editor, Dave Wilson. Hey, Dave.
Hey, John. You got 9 of the 11 main industry groups in the S&P 500 higher in early trading, and it really is a big tech-driven rally with one notable exception we'll get to in a moment. The consumer discretionary category leading the way. That's where you find Tesla. Rose above $1 trillion in market value yesterday for the first time and is moving higher again today. And then you have, technology stocks. Microsoft will be out with earnings after the close. That kind of figures into the gains there. Communication services, though, that other big tech influence group just not keeping up. And it's the declines we're seeing in Facebook after its earnings were out late yesterday that are largely responsible. I mean, story there, third quarter didn't measure up to what analysts were looking for. And Facebook's fourth quarter sales outlook didn't either. So, definitely some back and forth there. It's worth taking a closer look, though, at what's called the FANG Plus group, because Facebook fits into that rather nicely. The group set a record yesterday. Tesla is part of the plus, and that's a big reason why. And, the group's up again today. The 10 stocks in the NYSE FANG Plus index. Actually, it's NVIDIA, the chip maker, leading the way. Amazon.com, which has earnings out later this week, also higher.
Dave, thank you. Dave Wilson there, our stocks editor. That move in Tesla, unreal. 5 days of gains. It's the longest winning streak, I think, since earlier in October. 5 days of gains, and over those 5 days, that stock is up 23%. A $4.2 billion deal with Hertz, adding $120 billion to the market cap of Tesla, a $1 trillion market cap on a junk-rated company. In the credit market, junk rated. In the equity market, a $1 trillion market cap. What was interesting in the past 24 hours is hearing from Elon Musk himself. This is what he had to say on that particular deal that we broke, Eric Schatzer broke here at Bloomberg. Strange that moved the valuation, as Tesla is very much a production ramp problem, not a demand problem. They are the words of the CEO himself. Straneship moved the valuation as Tesla is very much a production ramp problem and not a demand problem. He goes on to say, to be clear, the cars sold to Hertz have no discount, same price as the consumers. That stock over the last 5 days is flying. And it's not exactly a penny stock, is it? 5 days and up by almost a quarter. Coming up, the market moving events you need to be watching. Your trading diary just around the corner from New York City. Big day of earnings after the close later. Bigger day for me and many others on Thursday when we hear from Amazon and Apple. And then into next week when we get a Federal Reserve decision on the Wednesday, a live Bank of England decision on the Thursday, and payrolls Friday just around the corner too. From New York City this morning, good morning. This is Bloomberg.
Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop
great.
The bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Google is saying it has accelerated innovation in the country and it's planning to appeal the FTC's decision. What's your take on this and how do you plan for further scrutinies?
We are going to see what they make and what changes they are actually putting to this market.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
We get to the price action about 25 minutes in, call it 26, positive 0.5% on the S&P, all-time highs on the S&P 500, on the Nasdaq up 0.6%. We gap lower from September 7th, then we come all the way back and basically fill that gap in a little more than a month. What happened to that correction? The earnings so far so good. Switch up the board and get to the earnings this morning. UPS on quite a daily winning streak right now. That stock is up by more than 6%. The numbers from 3M, General Electric, so far so good. GE up by more than 5%. In the bond market, no big disruption coming from the Treasury market this week. It's all about next week, that Fed decision and payrolls Friday. And for me and many others, what it means for the very front end of the yield curve. What it means for twos, add to fives. Your two-year yield up another basis point to 45 basis points on a two-year yield this morning. That's the bond market. That's the price action. Let's get to the trading diary. As for the two-year, you'll get $60 billion in two-year notes at 1 p.m. Eastern. A little bit of supply coming up a little bit later. Then the big tech earnings continue with Alphabet, Microsoft and Twitter all after the close. Apple reporting on a busy Thursday when we'll also get US GDP and initial jobless claims. An ECB rate decision just around the corner on Thursday. And finally rounding out the week with personal income and spending numbers on Friday. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. For our audience worldwide, this is Bloomberg.
engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in engine number one on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year. Yeah. And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
In New York, 3 p.m. in London, 30 minutes into the trading day right here in the U.S. From New York, I'm Alex Steele. Danny Berger is over in London. Guy Johnson is still off on this Tuesday. Welcome to Bloomberg Markets. Danny, it looks like earnings are going to party like it's 1999. I mean, really good numbers, in some ways surprising the street.
Yeah, really good numbers, perhaps enough to propel us to new highs, not since 1999 on record, Alex. But I do want to just point out, breath not great. Tesla gained 11 points out of the S&P 500's 21-point gain yesterday.
Fair point. Fair point. So it's weighted. That's a little bit different. All right, let's get a check in on the markets a little bit deeper here. So it is an earnings flurry. Like I mentioned, the best run of earnings since 1999. The S&P up by 0.4%, led by consumer discretionary. Really powerful numbers from some of these guys, like even Bed Bath & Beyond, for example, doing really well and holding up. Maybe something we weren't expecting as you have the supply chain issues and concerns about demand. On the downside, though, there are some guys that are there. That's Lockheed Martin down by over 10%. You're looking at cash flow that missed estimates. Yes, they're returning a lot of money to shareholders. Not enough because the forecast really missing there. Now, aside from the equity market, I do just want to highlight one thing in the bond market, and that's what's happening in the UK. UK gilt yields are now down by another 3 basis points. There seems to be now an expectation that the BOE is going to try and walk back money market pricing for a rate hike. We've now walked that back from November, and it looks like the market's now expecting the BOE to push a little harder against that narrative if we've gotten too high over our skis here, Danny.
Yeah, certainly an interesting one to watch. But I do want to go back to the U.S., Alex. We're getting breaking news just crossing the line on September new home sales. Those are rising 14% from August, coming in at 800,000 at an annualized rate. That's beating the estimate of 756,000. A lot of that buoyed by really strong consumer demand, of course, really in the face of rising prices and limited supply, Alex.
Yeah, and it's, a similar story when it comes to the Conference Board consumer confidence. 113, pretty strong. Present situation, 147, very strong. Expectations, 91.3, up from what we saw in September. So that demand destruction from higher prices that we may expected to have seen, not seeing it as of yet. At the same time, want to head to D.C. Senate Democrats trying to move closer now to an agreement on President Biden's economic agenda. And you might blame fiscal for all the demand resilience that we're seeing. So Senator Joe Manchin spoke earlier to David Rubenstein, Carlyle Group co-founder at the Economic Club of Washington, D.C. this morning. Well, he did. He did speak at the Economic Club in Washington, D.C. this morning, and also sort of still saying that there appears that there could be a deal closer than we think. Bloomberg Washington correspondent Anne-Marie Hordern joins us. Hey, Anne-Marie, what did you take away from that?
He certainly did speak, and he's wrapping that up now. He reiterated the fact when it comes to taxes, Alex, which is something that is being discussed on Capitol Hill. You know, we still don't have the text for what a new billionaire's tax would look like. He reiterated the fact that he supports a 15% minimum corporate tax rate. Potentially, there is the path forward for the Trump tax cuts to last through this democratically controlled Senate, House, and White House. So we're still waiting to see on how they're going to pay for it. That's one of the holdups. Also, what happens with paid leave and climate. And then on the top line figure, Senator Manchin seemed to soften his stance a bit. He said he couldn't say for sure what the top line figure would be, but he reiterated that, of course, he thought was fair was $1.5 trillion, and that in Washington we just talk about billions now as chunk change. But it seemed that he softened on that stance. So it does look like the top line figure still remains within that $2.2 trillion stance. But Alex, they are trying to wrap this up with at least a framework before the president heads to Europe, or at least by October 31st on Sunday, which is that soft deadline for the hard infrastructure. But the thing is, even if they have a meeting of the minds and a framework, will the progressives think that is enough to sign up and vote for that hard infrastructure package? Because what we hear from the progressives is that they want these two bills to vote together. And Senator Manchin says that is a high probability, but in a few months.
Yep, clock is certainly ticking. Anne-Marie, thanks for staying on top of this for us. That's our Anne-Marie Hordern. Now let's get back to those consumer confidence numbers that Alex was just talking about at the top of the hour. Bloomberg's international economics and policy correspondent Michael McKee is looking into the details. So, Mike, stronger numbers when it comes to consumer confidence and new home sales. What was your takeaway from it?
Well, a couple of interesting things, and interesting goof up in our graphics here where the chart I wanted to show you went away just a second ago. But basically it's this. We saw earlier today, Case-Shiller, year-over-year home prices up 19.7%. The new homes number that just came out a few moments ago, the new homes prices over the year up 18.7%. Two things that should feed into inflation and have some people worried about the 1970s and that kind of inflation. But the thing is, in 1983, and I wish I could show you, but I can't, they changed the way they calculate home prices in the CPI, and it changed everything. We don't get that kind of big jump anymore. So that's something to keep in mind as we go forward. It is a concern, higher home prices, but it's not going to be the 1970s. We'll see if there's other 1970s information in the rest of the data that comes out this week. September trade balance, remember last month was the widest ever, and that suggests that we could see a cut in third quarter GDP, and we'll get that on Thursday. 2.6% is the estimate, the consensus estimate, but you've got some on Wall Street seeing it higher than that. The Atlanta Fed says only 0.5%. This is going to be a very interesting release. And then Friday, we get the employment cost index is tight labor markets pushing up the cost of hiring people. And then we get the PCE inflation. That's the one the Fed watches, 4.4%. So a lot of inflation numbers this week, income and spending. And the spending we'll look at in terms of consumer confidence. People don't, at this point, buy as much stuff as the consumer confidence numbers would suggest. They used to be very well correlated, but they are not anymore. And you can see that in this chart here, how consumer confidence went up and consumer spending just kind of stays where it is. And then we got to the pandemic, and everything's kind of gone haywire. What they do correlate with in terms of the consumer confidence number is jobs plentiful. And Americans think that jobs are still quite plentiful, and we'll see if that influences spending.
All right, Mike, good to see you back. Great setup for the rest of the week. Bloomberg's Michael McKee joining us. Also, what we're all looking forward to, I'm obviously biased, is a panel of vaccine experts meeting today to decide whether the FDA should grant emergency authorization to the Pfizer-BioNTech coronavirus vaccine for kids 5 to 11 years old. Now, here with the details, Drew Armstrong, a Bloomberg senior editor for healthcare. Hey, Drew, what are we going to expect over the next kind of 8 hours? When do we get a decision? And then what? Hey, Drew, can you hear me?
Yes, sorry about that.
All right.
We're going to see this panel of FDA outside experts go ahead and debate the data around these, around whether or not 5 to 11-year-olds should be eligible for vaccines, and essentially, consider and then make a recommendation to the agency about what they should do. The agency doesn't have to follow their recommendations, but typically does, and they usually act pretty quickly. So I think after this wraps up and we see the votes, we should expect FDA action on this, typically within days.
All right, Drew, thanks so much for the update. That's Bloomberg's Drew Armstrong there. Now, along with that panel, other things we're watching out for, we had a bunch of industrial names out with results today. We had GE, for example, topping estimates and boosting its profit forecast, while Post-it maker 3M sees gains in school supplies. Here with more details is Brooke Sutherland, Bloomberg opinion columnist. So, Brooke, what did we learn in these earnings?
It is really all about the supply chain. I just got off listening to the GE and 3M earnings calls, and I think, 1 out of every 2 questions is about supply chain, inflation. What are these companies seeing? GE talks about how it missed out on 9 points of growth in its healthcare business because of the supply chain disruptions. That's really where it's seeing it right now, because that's its most shorter cycle business. It expects inflation to pick up in 2022 for those businesses with longer production cycles. 3M is seeing a higher inflationary impact than it expected even as recently as September on its full year 2021 earnings, but it is boosting its organic sales guidance, which gets back to what Alex was talking about earlier. We are not seeing the demand destruction. You're seeing companies raise prices, battle all sorts of supply chain pressures, but customers just keep buying. You mentioned school supplies for 3M, which I think is a really interesting data point. They tied that to a return to school. Child care concerns has been a key constraint on labor availability. So is this a turning point? Could we see this have maybe broader implications?
Yep, and we're seeing that sort of like in Hasbro, for example, like I mentioned, Bed Bath. Thanks so much. I really appreciate it, Brooke Sutherland, a Bloomberg opinion. And we're going to have more with earnings from Raytheon with Greg Hayes, Raytheon Technology Chairman and CEO. That's coming up 12:30 New York time, 5:30 in London. Don't miss that. This is Bloomberg.
第18条第2項におり本院において内閣総理大臣に指名することにこの際暫時休憩いたします。
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
Live from New York, I'm Alex Steele. It's Annie Berger over in London. This is Bloomberg Markets. Now, about a third of S&P names report this week. Earnings coming in very strong. Kriti Gupta of Bloomberg is looking at the beats and misses. I was saying best earnings streak since, what, 1999?
A pretty good streak, and a lot of it has to do with those transportation stocks in particular, a lot of those shipping companies. And let's just kick it off with UPS, because, of course, we know this is that major bellwether stock, and they actually got not only higher prices, but more package deliveries as well. So the stock doing really well, and on top of that, they're expecting more of the same next quarter. You have JetBlue as well. This is really important. A smaller than expected loss. Alex, we know that a lot of these airlines have been dealing with those higher fuel costs, and JetBlue is no exception. That's something you're going to want to watch in the quarters ahead. And I want to end on the positive note with GE. They actually came back roaring, beating those estimates. A lot of that had to do with jet engine demand, but coming with a little bit of a warning, no surprise here, I should say, commodities and labor, something that's very much on their radar, which brings me to our downside stocks. We should look at Lockheed Martin, expecting their sales to drop a whopping $1 billion in 2022. That's about 1.5% of their entire business. And next year, that's all because of shortages and delays. Once again, coming back to those supply chain issues. I want to hit Corning, though. This is the company that makes the glass on some of your smartphones, the screen essentially. And they're actually coming out and saying, well, demand has been pretty good and higher sales have been good, but profit isn't so much because they're absorbing those costs from higher inflation and those supply chain shortages, specifically from chips. And lastly, Polaris, snowmobiles and motorcycles, they are in. People want them, but capacity, once again, an issue. Coming back to those raw materials. So let's broaden this out. How are earnings performing broadly? You don't want to miss on your earnings, right? Because your stock is going to drop naturally. But it seems like stocks are being punished even more than usual if your EPS misses. On the total, that just means on the next day, you end up flat. So the question here is, downside surprises, they're okay, but not as great as upside surprises. You will, however, get punished if you miss your earnings.
Kriti, really comprehensive there. Really appreciate it. That's Bloomberg's Kriti Gupta with Everything Earnings. Let's dig into the story more now. Joining us is Olivia Engel, State Street Global Advisor, CIO of Active Quantitative Equity. Olivia, first off, thanks so much for joining us. I want to pick up on that point that Kriti left off with, that we're seeing misses just being punished so severely in this market. One stat from JP Morgan had it the most since 2007 or thereabouts. What do you make of that?
Yeah, I think that's a real sign that we really need to be careful about the outlook for the 2022 earnings. We're definitely starting to see that in aggregate, the FY22 is starting to look a little bit soggy, a little bit soft, and that could be pose a little bit of vulnerability for equity markets in general. Where we're seeing that is pretty much everywhere, developed markets and emerging markets. There are some areas in emerging markets which have been reasonably resilient. For example, emerging market small cap is actually looking reasonable on FY22 because I think for the first time in a very long time, EM small cap companies have got much more pricing power than they've ever had in the past. But that vulnerability in the equity markets in general, with the all-time highs and peak growth probably being behind us, we just need to be careful there.
Well, then this sort of piggybacks off of the small cap EM thesis that you just stated. What we are seeing here in the U.S. is that really strong demand. Like, that is holding up. In some ways, very much surprising. We weren't thinking that momentum was going to sustain necessarily into this quarter. Are we underestimating the ability for companies to deliver earnings as the demand holds up?
I think it's probably still just the remnants of the recovery persisting. We definitely think that in the next couple of quarters, we'll start to see this growth, the demand, the pricing, the inflation start to slow in the next couple of quarters. So middle of next year, inflation will probably start to look a lot more moderate than it is currently.
I do wonder, though, Olivia, with these companies that do have that pricing power, that are able to raise prices, consumers are willing to pay it. How compelling is a story of that into the future when we don't have these supply chain bottlenecks and perhaps they're able to retain those higher prices and really improve profitability?
Yeah, I just think the growth will probably not likely support it the way it is right now because the peak growth experience is really probably behind us coming out of the pandemic. So while the fundamentals are looking really good currently, I think we've got to be careful that coming into next year, we just get an aggregate slowing in that demand. And that means that the kinds of support for equity markets we're getting at the moment, which are underpinned by fundamentals, would only be supported if it's multiple expansion. And that's a much more vulnerable place for equity markets to be in. So talk to me then about the momentum and the rotation that we might see. I mean, I'm just taking a look at half year to date, right? You have financials up 11%, consumer discretionary up 11%, and energy up 11%. Where do you feel like we could see more upside, and where do you need to rotate into and out of? Yeah, well, our preferred segments right now are probably energy. We've had that positioning for some time, but we're a little bit mindful of the volatility from that sector because it can turn any moment there's a change in the oil price. Healthcare, you know that I love to talk about the healthcare sector. We've got still great support in the European pharmaceuticals and in the equipment and services sector in the US. I think there's still resilient secular growth support for that segment. The places where we think we should avoid is still real estate and some of the consumer names because they've just gotten so expensive. And again, that slowing makes them vulnerable. And so it's consumer, both staples and discretionary, where we're not seeing much that's attractive at all there.
Speaking of things getting expensive, Olivia, we're looking at Tesla at a $1 trillion market cap. It's up another almost 5% today. Do you see areas in this market that would suggest to you that perhaps in some ways we're getting disconnected from fundamentals? Probably not at this point. I think still the fundamentals are supporting prices, but that's why we just got such an acute focus on FY22 earnings, because as soon as if that really starts to roll over, we need to check for rotation in what the leadership is going to look like within the equity market as those forecasts start to change. So, we need to look, we definitely need to just keep an eye on the outlook, keep an eye on FY22, because easily that shift could be made from going from a fundamental supporting equity market to something which is only supported by multiple expansion. All right, Olivia, thanks a lot. We super appreciate it. It's a fun earnings day. Olivia Engel, State Street Global Advisor, CIO of Active Quantitative Equity. Thank you very much. So Chuck Schumer is speaking on the Senate floor. Here's the update from him as it comes to the economic plan. He says the Democrats are going to continue to fight to pass that economic plan, and he says that he is confident that a deal on the Biden plan is within reach. That relatively echoes what Senator Joe Manchin said to David Rubenstein, that we're keeping the options open and there is a high probability that both bills will be passed in a few months. I don't know. In reach in a few months? I don't know what the timeline for that is. 3 months, 5 months? Hard to say. Okay, anyway, still ahead. We got even more earnings out today. E-commerce driving UPS profits as well, despite any higher costs. More on that next. This is Bloomberg.
Energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Fauci and his team shared data about mixing vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm John Hyland. Home prices in the U.S. rose 19.8% in August. That's according to the CoreLogic Case-Shiller Index of property values nationwide. The increase matched the rise the previous month after 14 straight months of accelerating price gains. The pandemic ignited a buying frenzy for a tight supply of homes for sale across the U.S. And former President Trump says the Truth social media platform is only the beginning of Trump Media and Technology Group plans. The company will also launch an on-demand video streaming service to compete with big tech and media players. Shares of the Trump-linked SPAC Digital World rose at the open today, but then fell. And Tesla will help Jaguar Land Rover meet European Union car emission rules. Elon Musk's company will pool its fleet of all-electric vehicles with those of the UK-based automaker. Tesla already pools with Honda, and this year, Tesla has generated about $1.1 billion of revenue from regulatory credits. And that's your Bloomberg Business Flash. Alex.
All right, thanks so much, John. So you got UPS shares soaring this morning. Profit-topping estimates. Bloomberg's Dave Wilson is here to drive into those gains. Demand holding up aside from those price increases.
And this is all about the CEO, Carol Tomei's strategy of better, not bigger. And as that played out in the third quarter, here's one sort of indicator. Revenue per package up 13% from a year ago. And at the same time, the average volume, so the number of packages carried, fell 2%. And then you carry that through, I mean, you see revenue up, beating analyst average estimate in the Bloomberg survey. Similar story with earnings and profitability as well. The operating margin specifically, I mean, they're talking about a 13% margin, just above where they were in the third quarter for the full year. They actually raised that forecast. And if they come through at that level, it would be the highest profit margin on an operating basis since 2015. And who knows, a couple of tenths of a percentage point, it could be an even longer historical comparison there. So in terms of the outlook, I mean, UPS is definitely got things going its way. I mean, and one key piece they pointed out is they're not having to deal with higher labor costs the way a lot of other companies are because their workforce is largely unionized. They have contracts. And so all that cost is locked in, you know, and you look at the business, I mean, it really is split up between the Postal Service, UPS, Amazon, FedEx. Amazon was actually talking yesterday about how they're stepping up their staffing and their planes and all the rest to be able to do more business away from the Postal Service and UPS.
Dave, though, we did see UPS already have a really solid October, big move in their price even before their earnings were out. What's the story behind that?
Well, what's interesting, you know, Danny, is they're not just a package delivery company. They're also involved in the supply chain. And that's been quite the story the last several quarters for a number of companies. And actually, if you looked at UPS's third quarter results, you saw that the supply chain side of the business did better than analysts were looking for in terms of revenue, while you know, the package delivery, whether we're talking U.S. or international, was pretty much in line. So the idea that UPS is increasingly in a position to take advantage of supply issues and they're focusing on healthcare is a big piece of that, you know, may well explain why the stock has been doing as well as it has even before the earnings were out.
All right, Dave, good stuff. Really appreciate it. Thank you very much, Bloomberg's Dave Wilson joining us there. One of our top stories, of course, is what's happening with vaccines for kids. Coming up, we're going to talk about that. You're looking right now at a live shot snapshot of the FDA advisory panel reviewing those vaccines for kids ages 5 to 11. It could probably last all day. We're going to break that down with Gregory Poland, a Mayo Clinic Vaccine Research Group Director. As you're looking at a market right around record highs, a lot of earnings coming in a lot stronger than expected, and you have consumer confidence really holding up as well. Consumer demand has not waned as some had expected, really propping up the market. This is Bloomberg.
Something wrong with her eye. When I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone, and I couldn't get one anyway for like another week. I was just quite worried about, you know, the complications of leaving it for so long.
We've seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
It is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Live from New York, I'm Alex Steele with Danny Berger over in London. This is Bloomberg Markets. We've been talking about that advisors to the U.S. Food and Drug Administration are meeting now to discuss whether to recommend the Pfizer-BioNTech COVID vaccine for kids. Joining us now, Gregory Poland, Mayo Clinic Vaccine Research Group Director. Okay, Greg, what's a timeline here? So they get through today, let's call it like 8 hours of some Q&A. Then what happens?
So they will vote. My expectation is they're going to vote to recommend it. Then the FDA has to formally accept or reject or modify that vote. It will then go to the CDC's advisory committee. November 2nd and 3rd are set for those dates. And then CDC sign off, modify, or reject those recommendations. So I expect that by the end of the first week of November, kids will be able to get their vaccine.
So, Dr. Poland, assuming that that is the case, what do we need to do in order to instill confidence in American parents so they actually push their children, have their children to take these vaccines?
Yeah, I think this is the path back to normal for the kinds of lives we all want our children to have. After all, this is a time when they're developing socialization skills, when they need to be with other kids. The unfortunate part is this is colliding with the colder weather, with a downturn in cases, and so people pretend that the pandemic is over and it's not. And the holidays, when there'll be a lot of indoor gathering. So our plea would be for parents to strongly consider this vaccine. Some 20,000 kids have been hospitalized. 700 or so kids in this age group have died of COVID and its complications. And of course, we have no way of knowing how many have developed long COVID symptoms.
I was going to ask, do kids develop long COVID?
They do. It's not as frequent as adults, but absolutely they do.
So then a quick follow on that. If we do get the Pfizer vaccine, which is the one that's kind of up for grabs here, does it also help against long COVID, even if you can still get the virus?
It does, and that's been true for adolescents, that's been true for adults. There's a rough correlation with long COVID and severity of disease. So by getting the vaccine, now if you do get any breakthrough disease, you're more likely to get asymptomatic or mild disease and less likely to get any kind of long COVID symptoms.
If we do get pretty good take-up, Dr. Pollan, in terms of kids getting vaccinations, what does the classroom need to look like then?
You mean in terms of masks and things like that?
Exactly.
Well, the great thing about kids is even though they'll get a third of the dose than what we got, their immune response was equal or better than ours. I mean, they've got Ferrari-type immune systems, and so they're going to do very, very well with that. Should masks still be used during the wintertime? Yes, that would be a smart move.
Yeah, it's amazing how not gross my daughter's been since she wears masks to school. So this is for the Pfizer vaccine. Do you expect that we're going to get a J&J or Moderna vaccine for kids, particularly considering the myocarditis risk with Moderna?
Yeah, I mean, I think that's a big question, and that remains to be answered. Moderna has supplied FDA with some of their own clinical trial data showing that kids develop a great immune response to it. I think that question is still an ongoing discussion item between Moderna and FDA, but I do think eventually we will see that with Moderna and more than likely with J&J in the future.
Do we also have the data yet as to whether kids have the same effect as adults, where you have some of the effects, some of the protection of vaccines starts to wane off in time and then you need booster shots? Are we expecting a similar trajectory when it comes to kids and their vaccinations as well?
That's a really good question. My guess, and it's pure speculation at this point, is that there will be waning of protection, just like there is when kids get infected with seasonal coronaviruses. It's why we keep getting the common cold and infected with that. But my guess is going to be that it's going to take a lot longer for kids to start having a diminution in that protective response.
To that point, how far can this take us to herd immunity? I feel like that was taken off the table once we learned that we were going to need boosters, and once we learned the vaccine take-up was definitely not going to be 100%. Are we going to talk about herd immunity again, or does this just help us make it more endemic and livable?
I think more the latter, but this is a prime opportunity to say we have a slice in time here when we can dramatically affect the remaining course of this pandemic. We've got the cooler weather, we've got the holidays, and now this large segment, not quite 30 million people, these young kids, this part of America, has the opportunity now to be immunized. And they do spread the disease. I mean, make no mistake, kids get sick with this disease, less likely than with adults, but they also spread the disease to other people. So our way out of this is going to be to try to get as many immunized as we can.
Dr. Pullen, I dread to ask this question to some degree, but I do have to wonder if, considering we're heading into the winter months, we're just perhaps starting to offer vaccinations to kids, how likely is it, do you think, that in order to stem some of more cases of COVID, that we'll have to reapply some of social distancing measures, more mask-wearing measures? How likely do you see that being in the wintertime?
You know, if we had super high immunization rates, which we don't and we're not going to have short of mandates, we're going to have to keep wearing masks. Do I think that that's going to happen this winter? I do. I think that what could happen is we've seen this downturn in cases. It gives people a false reassurance. We've been through this 3 or 4 times already. And then in the wintertime, we have another surge. In addition, we're keeping our eyes on a few variants, one in particular called AY 4.2. That's a little bit concerning, a little more transmissible, it looks like, than even Delta. So it gets called Delta Plus. But you put all of those factors together, and if we're not careful, we'll go through yet another surge.
Right. Well, I live in the UK. Certainly lots of talk of Delta Plus, considering infection rates keep climbing higher. Dr. Gregory Pullen, so great to have you on this morning. We really appreciate it. Mayo Clinic Vaccine Research Group Director. Thanks again. All right. Coming up, we're going to be speaking about the big day for tech and chips. We have Alphabet, Microsoft, Texas Instruments, and AMD after the bell. Certainly a lot to discuss. And we'll discuss it with an analyst who's bullish on chip makers. That's Christopher Rowland of Susquehanna, which is next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
In the fourth quarter were dramatically impacted by the Delta variant. And while bookings bottomed out and we're clearly on the road to recovery now, a lot of the fourth quarter was impacted, and business offices that were going to open in September has been pushed back to January.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Facebook out with third quarter earnings after the market closed yesterday. On deck later, we have Alphabet, Microsoft, and Twitter. Let's get to Bloomberg's Laura Wright with the key takeaways. Laura, what are you looking at this afternoon?
Well, leading up to Facebook earnings, the market was really focused on what are they going to do for advertising revenue? How can they diversify, overcome that negative crescendo of news flow? So the earnings came through, and it was a slight miss on revenue, coming in at $29 billion for the third quarter, and fourth quarter projections, they were at the lower end of analysts' expectations, $31.5 billion. Daily and active monthly users broadly in line with expectations. This is in the context of a stock that year to date has rallied 20%. But Danny, it's still 14% down from its September peak. And if we flip up the board, I can show you some of the most interesting takeaways and the reasons why Facebook missed. Primarily, it's those Apple privacy changes. And on the call, executives cited that as the key reason for the miss. What is really unique is this investment into virtual reality. Facebook is essentially exploring worlds that we can't foresee or imagine at this stage. The Oculus headset. We also had that collaboration with Ray-Bans on smart glasses. The market liked the news of this $50 billion in stock repurchases. That's going to happen going forward. And we learned that Facebook already bought back $14 billion of stock in the third quarter alone. But after the bell today, if we flip up the board, we're going to get results from Alphabet, Microsoft, and Twitter. And year to date, it's really astounding the growth that we have seen in these companies. Alphabet, 58%. We've got the Google services business, the cloud business. That is what the market is really watching for with Alphabet. In Microsoft, the hype remains around the Azure, the cloud business. And for Microsoft, it could be a victim of its own success. Consensus is 18% revenue growth. Finally, for Twitter, it's all about those monetizable daily average users. Danny.
All right, I'll take it up from here, Laura. Thanks very much. Really appreciate that roundup. And look ahead. Let's go deeper here into Google, I should say. Mandeep Singh, a Bloomberg Intelligence Senior Technology Analyst, is joining us. Mandeep, we talked yesterday before about Facebook, and now we get Google. What are you looking for? Where's the good? Where's the bad?
Absolutely. I think in the case of Alphabet, YouTube is the key segment along with cloud. The reason I say that is because when you look at the digital ad market, the fastest growing segment is connected TV and video ads. And that's where, YouTube is the biggest player. We know TikTok is doing very well. And what we gleaned from Facebook last night is their engagement seems to be tapering off. And part of the reason is their lower exposure to videos compared to a YouTube or a TikTok. So I think cloud is another segment, but Google or Alphabet is so well diversified that even if you're going to see some IDFA headwinds in Alphabet's results, I think cloud and YouTube segment should do really well.
Mandeep, did Facebook to any degree give some relief to the market in terms of pressure for online ad sales?
I think what Facebook results showed was the engagement in terms of user growth continues to be strong. What we saw from Facebook was the ad pricing growth seems to be leveling off. And part of the reason is, all the IDFA changes is having an impact on ad targeting. So it will be nice to see, if Alphabet echoes the same or, they come out much stronger. But at the end of the day, Facebook has an engagement problem. And that is what they're trying to solve with the metaverse.
Right, which is a little different, obviously, than for the Google. So how is Google priced then into the report?
Well, so we have had a good multiple expansion in the case of Alphabet. It's one of the best performing mega caps out there. And that's part of that has to do with the diversification element I talked about. In the case of Facebook, it's just an ad company. Well, Alphabet is much bigger. It's got a cash cow in the form of search. And then it's got growing businesses in YouTube and cloud. And that is what has driven that multiple expansion, because investors can see their operating margins will remain stable. In the case of Facebook, you can be assured that operating margins are going down given all the investments they are making in metaverse.
How high is the bar then for this earnings for Google?
Well, obviously, they have to beat the numbers. And in my mind, I think investors will pay close attention to cloud segment margins. So far, cloud segment has had, much lower margins than the likes of AWS and Microsoft Azure. If they keep improving those cloud margins, I think the multiples have room to expand.
Mandeep, thanks so much. Mandeep Singh of Bloomberg Intelligence. Really appreciate the update and what you're looking out for. We're also getting chip makers Texas Instruments and AMD after the bell. Let's dig into those. Christopher Rowland, Susquehanna Financial Group senior analyst, joins us now, and he has a positive rating for both of those names. So, Christopher, what are you looking out for to help you maintain that positive take on both these shares?
Yeah, both names are quite different. AMD is a PC and server story. Additionally, you had mentioned Facebook. One hidden gem in Facebook's numbers were their massive CapEx expectation that we think will benefit guys like AMD, guys like NVIDIA, as they move towards building out their data center and artificial intelligence plays. So we would expect some sort of an update regarding that for AMD. And for TI, it will be about the semi-cycle more generally here. Automotive is a big pain point for everyone out there. TI has been doing its best to try to alleviate those pain points. But we will be super focused on lead times, backlog, and the supply chain overall for TI.
What do you think we're going to learn, Christopher, about when the supply chain issues will resolve themselves? I feel like that timeline's getting pushed out longer and longer, and that obviously has ramifications then in terms of the supply issues that we're seeing, then the price increases that we see. What's your best guess right now?
Yeah, we are the only company that tracks semiconductor lead times since 2013. We started collecting this data, and we had an interesting piece out today that it shows a slowdown in the second derivative for this expansion in lead times, which could be the very, very first sign of something yet to come. So we think there could be an alleviation as we move through the fourth quarter into the first quarter of next year, and maybe mid next year, things start to look a little bit better. In terms of these companies and what they're going to talk about, it is not clear that this is over entirely. Hopefully, we'll have a bit of optimism from these management teams, but it really is a TBD, and I think every vendor may be different.
All right, so a TBD perhaps on the chip shortage, but I wonder what your best guess is in terms of demand. Are we approaching, or are we anywhere close to peak demand?
I think we've had a massive increase in durable orders. What you'll find is that chips go into almost all durable orders these days. Those rates are likely unsustainable. So as we enter the first quarter of next year, I think seasonally, as that's a down period, it'll give chip makers a time to catch up here. I would not expect this. I would expect peak chip demand here right now upon us.
So typically, Christopher, this is a really cyclical sector for exactly this point. A lot of demand, not enough supply, then they invest, they ramp up chip supply, and all of a sudden then there's too many chips and then prices fall. Is this a typical cycle? And or is within the chip sector, are there areas where it's a typical versus atypical cycle?
Yes. So in many ways, this is what a semi-cycle looks like. However, the magnitude of this is beyond anything that we've seen in the last 20 years. Perhaps the closest semiconductor cycle to this was the year 2000. And this may, in fact, exceed that by quite a large magnitude. So this is the biggest that I've ever seen in my career, and probably in the last 40 years, I would say.
Wow.
I wonder then if this is just such a completely different cycle, if what the ramifications of this will be. And I kind of think about clients of some chip makers, the Amazons, the Microsofts of the world, who are now starting to make more chips for themselves. Will that structurally change how this market operates?
No, I would expect them to do more and more and more by themselves. I think, like, for example, Tesla does a lot of their own chips. They're doing a little bit better than some of the other automakers out there. And I think they're realizing that by making your own chips, controlling your own supply chain, you control your own destiny. And so I think a lot of these companies are going to start doing things internally, vertically integrating.
Who wins?
Well, there are foundry guys all around the world. Some of the biggest, most leading edge, I think, are going to be the biggest winners there. You know, Intel has a foundry program. You know, TSM is the world's largest. Samsung has a large one as well. These guys are going to be making the chips for the world, for the Teslas, for the Facebooks of the world. So I would expect them to do quite well.
All right, Christopher, thanks a lot. We really appreciate it. I think it's going to be really interesting to dig into individual names. Christopher Rowland, definitely come back. Susquehanna Financial Group Senior Analyst, thank you very much. This is Bloomberg.
Technology. How should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology, and technology companies as partners. So some
not
of our
rivals.
You know, we know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
Time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm John Hyland. Billionaires Ray Dalio and Larry Fink say they're open to paying more taxes, but only if the money was put to good use. The two spoke today at Saudi Arabia's flagship investment conference. Dalio, the founder of hedge fund Bridgewater Associates, says he would support anything that is going to have the effect of being spent on creating equal opportunity and greater productivity. And Senate Democrats have moved closer to an agreement on President Biden's economic agenda. Senator Joe Manchin expressed optimism there could be a deal this week. He's been pushing to shrink the size of social spending. Manchin's also optimistic about the infrastructure bill.
I sure do think there's a high probability that's going to happen. And I think that basically this infrastructure bill, we'll call it the BIF. The BIF bill we all refer to as the bipartisan infrastructure bill. But the BIF bill, I think, and Debbie would be able to tell me better than anybody here, I would like to hope it passes Wednesday evening. The president needs to take something with him by the end of the week.
Still, some House lawmakers have raised doubts about the terms of the deal being discussed. And Blackstone is planning a hiring spree to target rich investors around the world. The firm has 160 or so employees on its team focused on wealthy individuals and plans to double that figure over the next few years. Blackstone and other alternative investment firms are looking at rich clients as a pool of untapped capital for their private equity, real estate, and credit funds. And that's your Bloomberg Business Flash. Alex, Danny.
All right, thanks so much, John. And, you know, Danny, Blackstone and like everybody else, I mean, the wealthy clients, as we've seen so many of them, the pool of capital is huge, and all the banks and all the private equity that wants to cater to them also huge, and then that's turning into a very real, very expensive talent war.
It really is. They need to pay up for the talent. They're competing with banks. They're competing with tech firms. And of course, it means higher costs as well. But as you say, I mean, there's just so much money behind these mega private equity funds that they typically can be the ones to pay up. And that pipeline usually is from investment bank to private equity funds. So maybe this will just kind of hurry up that pipeline.
Well, I also find it interesting, too. So this is Joan Solitar was talking about this, re Blackstone, and for a social media event in the UK. And she's also been instrumental in helping to create some products for Blackstone that can cater to smaller investors. And then on the flip side, you do the outreach to get the super wealthy. It's like the barbell is kind of where all the money will be at. One, you make the real money. The other, you have the amount of people that you can kind of work with will help to drive some recurring revenue.
Yeah, I do have to say there has been a pretty large effort in the UK. I talked to the Schroeder CEO that they do want to get more people into private equity. They want more investors, which will just require more work and more people to hire for you.
Yeah, and wage competition. All right, so coming up on the European close, a very positive day in the equity market. Rupert Thompson, Kingswood Holdings CIO, will be joining us next. Earnings really starting to trickle out. Reception pretty positive, near record highs on European equities. This is Bloomberg.
So the 1972 Madison Square Garden eyelet jumpsuit, which is arguably, from what we're finding out, probably one of the most important jumpsuits of Elvis's entire career. So it marked so many milestones, really, for him. It was used for an album cover. It was used when he performed Madison Square Garden, and he was the first performer to ever sell out 4 nights straight in Madison Square Garden. So he really started that whole thing that we see now in pop culture, where when you make it big, you do Madison Square Garden. So we're super honored to have it. I can honestly say that COVID has been unbelievable for internet-based and e-commerce businesses, because we have a captive audience. We have people home that really want something to do and need entertainment, so we do our best to try to give it to them.
From New York City,
in London, in Sydney, in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
This virus is here to stay for quite a bit, because has been spread all over the world and has this ability to create mutations and variants.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Here is everything you need to know from Europe at this hour. Happy Tuesday. You got UBS crushes on deal making. The bank sees a 78% jump in M&A advisory fees and lags its peers in trading revenue. And no thanks, Entain. DraftKings walks away from a potential $22.4 billion offer for the sports betting firm, throwing some cold water on the gambling frenzy. And $100 oil prices. BlackRock's Larry Fink says the world will live with energy inflation for a long time as the world gears up for COP26. I'm Alex Steele here in New York. Danny Berger over in London. Guy Johnson still on vacation. Danny, not only that, but you have the White House Press Secretary Jen Psaki talking right now, and she's saying that U.S. is still concerned about gas prices. They're going to continue to talk to OPEC. It does feel like these high energy prices are percolating, despite the fact that earnings are really crushing it right now.
So true. We also had the Aramco CEO, my morning, Alex, likely your nighttime there in the U.S., saying that we still have this strong demand, really tight supply. So all of it, that lending itself again to these issues of higher energy, though margins pretty much maintained for a lot of the earnings we're seeing.
Yeah, exactly. And we're still right near record highs for European equities.
Yeah, we are so close to record highs, Alex. We definitely aren't there yet. We saw them in the U.S. I want to get a quick check on the markets. So just about 30 minutes away here from the European close, and we're looking at a stock 600 that's on track for its third day of gains at a rise of 0.7%. That is trading at its highest since August. So again, not at record highs, but we certainly are trying to make our way there, really being led by a lot of retail companies and strong earnings there. I also wanted to show us the euro pound cross. We talk a lot about cable and how weak the U.S. dollar pound cross is. However, we're looking at the euro at its weakest since Feb 2020 versus the pound. Valentin Marinoff over at Credit Agricole is saying that his clients, they don't want to take short positions out on the pound just because there is generally more positive global risk sentiment. So for all the doom and gloom surrounding cable, Alex, we're seeing it outperform pretty remarkably against the euro.
Yeah, also I wonder how money markets repricing a rate hike from the BOE is all factoring into that. Here in the U.S., straight up earnings. You have green on the screen at the NASDAQ 100 up by over 1%. We get Google, Microsoft after the bell today, Facebook, the market very much liking their $50 billion buyback plan. Individually, there's some idiosyncratic stories, but all of it points to very strong demand, and that's what helped UPS. They may not be shipping as much because of the supply shortage, but they're definitely making a nice chunk of change, up by about 7%. Lockheed Martin, idiosyncratic on the downside. They actually saw some cash flow missing estimates. They're returning money to shareholders, but not enough, as you have sales missing estimates as well. But what we did learn, and we saw it in the consumer confidence data here in the U.S. this morning at 10 o'clock, is that demand is there. Demand destruction has not shown up like maybe some had been expecting. Now, talk about demand destruction. Just wait and see what happens at 1 o'clock. $60 billion coming in 2-year notes. Let's see what that takedown is. We could see some more supply, a good amount of supply coming on next week. You're seeing a touch of selling here. You have yields up by about 1 basis point, Danny.
Yeah, well, let's talk about that corporate earning picture. And here in Europe, it certainly is driving European equities to their best month since March. But the topic of concern really for most of these earnings calls, it continues to be supply chain constraints.
We can definitely see supply chain impacts impacting our customers. It's also denting confidence.
The bottleneck at the moment is transportation logistics. There are many countries in the world where procuring truck drivers is becoming the most important element of our supply chain.
It's really a matter of both chips and ships. We have a shortage of e-components, and we see the delays in the shipping industry and the congestions in the ports.
We cannot guarantee more than we are working on it, and we're also needing to pass some of these costs on to customers. So there are many challenging discussions.
Our supply chain team's done a great job on semiconductors. We've not shipped short. We've been able to secure semiconductors for our entire business globally. We've been very fortunate, I'd say. I mean, we have a very resilient supply chain, a really world-class manufacturing organization built around technologies and platforms. And because we have this global network, global footprint, we've been able to flex across the various sides of our supply chain and avoid any significant disruption.
Let's add another smart voice to the conversation. Joining us now is Rupert Thompson, Chief Investment Officer at Kingswood. Rupert, we heard from executives there talking about the supply chain issues they're facing or lack of issues, but we still have seen pretty solid margins throughout this earnings season. Are you a buyer of European equities on the earnings picture?
Certainly in the medium term, I'd be a buyer. I think short-term markets have come quite fast, as you're saying. We're almost touching new highs. All of a couple of weeks ago, we were looking at a 5% correction. We've recovered all of that. So sure, the earnings environment is reasonably positive at the moment. It's better than people feared. Companies do seem to be able to pass on to consumers these cost pressures. But at the end of the day, you're still looking at the central banks are starting to get more worried about inflation. You've got the UK hiking rates next week. You've got the Fed starting tapering. So I think maybe the markets become, as far as they're going to go, short term at least.
So what do you like? What kind of sectors do you think are going to hold up as we're seeing a lot of surprises to the upside, and even the beats can be pretty significant?
Yeah, I mean, to be honest, it's a pretty choppy environment at the moment. So just sort of stepping back a bit and looking at the last few weeks, you've had these runs in particular sectors, and then, as it were, they go into reverse and another sector takes up the running. If you look at sort of growth versus value, again, it's been pretty choppy. And our feeling is that this is actually going to continue for the next sort of few weeks, few months. And the one sector which arguably there is now a sort of sustainable uptrend or reason for sustained outperformance is the financials. You've had very good results, as you sort of commented earlier, from HSBC, UBS today. But clearly interest rates are going to be heading higher on a sort of sustained basis. And, the most obvious sector which benefits from that is financial. And they may have recovered some of their underperformance, but they're still pretty cheap.
I wonder what you then make of Bank of America analysts, Rupert, who say that they expect a correction in European equities, considering we're starting to see bond yields move higher, yet growth isn't anything to really write home about. What do you make of that thesis?
I think there's definitely a reason for a bit of caution, as I say. We do think markets are going to be choppy, but I think what we've sort of learned over the last year is that equities can withstand a rise in bond yields. Unless bond yields shoot higher in a very short space of time, which naturally causes a bit of turbulence for equities, actually equity markets are able to withstand that. And part of the reason for that is that, if bond yields head higher, not too fast, and equities are still looking reasonably good value against bonds. And also, if bond yields are heading higher, because everyone's still at the end of the day reasonably confident about growth, sure, we've got supply-side issues, but this is really delaying the recovery rather than sort of abolishing the recovery, then actually equities should still be able to do reasonably well despite rising bond yields.
Hey, Rupert, flip side, what happens if we don't get higher bond yields? What if we've kind of topped out for the moment? And I say that because HSBC says they don't think the BOE is going to hike now in November. You definitely see some money market pricing over in the UK pushing back on that November rate hike as well, and that 100 basis point rate hike that we were kind of all looking at over the last week. What if we don't? What do you do?
I think it depends why you think you're not getting the rise in bond yields. If you don't get any further rise in bond yields, if that's because growth fears are going up, then in a sense you want to rotate back to sort of tech would be the most obvious sector. And we'll obviously find out from the big tech names this evening, or some of the big tech names this evening, whether that stellar performance is going to continue. But if bond yields don't go any higher, then I think our view is that the tech growth models there are still very much in place, and the one headwind you've got at the moment is higher rates, and if that isn't in place, then tech should continue to do very well. And also defensive sectors, they've been hit pretty hard, and if you do get growth faltering, it could, which is reflected in stable bond yields or falling bond yields, then again you'll probably get a bit of rotation back into the defensive sectors, which are starting to look pretty cheap.
All right, Rupert, look, we really appreciate your perspective. It's a really interesting earnings day here. Rupert Thompson, Kingswood CIO, thank you very much. Well, Danny and I were just talking about energy, and EU energy ministers very concerned about the energy crisis. So they're clashing right now in an emergency meeting to address what to do about those high energy and power prices. We're going to break down that next, what it all means into COP26. This is Bloomberg.
is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating. I am no Sinophobe, very far from it. Do
you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you look
drop
great.
The bow tie. Drop the bow tie.
What,
skinny tie? Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
COP26 kicks off this weekend in Glasgow. The EU wants to see how China will step up in climate ambitions. You got Frans Timmermans, the EU climate chief, is meeting with China's special envoy on climate change tomorrow. Timmermans spoke to Bloomberg's Maria Tadeo earlier about his expectations.
I hope I can get a clear idea on when they think they can peak out their emissions, so when they reach the highest level of emissions and then go down after that. And I want to hear from them how they see the COP process going on now, how they see the G20 happening and what we need to do to create a success at COP in the next couple of weeks.
And with regards to the Chinese, it's very public now that they've said we want to be also more engaged on climate. But by the same token, the Chinese government has also said when it comes to coal this year, we're going all out. We don't want anyone in China to have a rough winter. President Xi is very now conscious about what he says is almost person-driven recovery in China. This is very ideological. Can the two of them come together and say we're going all out for coal and we also want to be climate neutral? Do you trust them?
Well, I think we all know that there's no future in coal. In the immediate, they might need coal to keep people warm in winter. But in the mid and long term, we all know that coal has no future. So exiting out of coal is going to be one of our main tasks in the next years. We will set the example in the European Union to show that you can do this in a way that is just, that you offer a real opportunity for a better future for the coal mining regions, that you keep everybody employed, all the coal miners in new jobs. We want to show that.
I wonder, are you disappointed, however, that in Europe, we're talking about this energy crisis, again, this idea of whether or not we should use nuclear energy to build from this transition from fossil into green? Is that something that you feel it wasn't the right time to bring up again this debate, especially going into COP?
Well, frankly, I believe that if there's such an energy crunch, I mean, these prices are soaring. All politicians with national responsibility are nervous because they don't want their citizens to suffer. And I have full understanding for that. But we need to make sure we don't throw away the baby with the bathwater. Transition to renewable energy is the best answer to this crisis, because had we done that 5 years earlier, we would not be in the situation that we would need so much natural gas, that we would be seeing these soaring prices.
That was Frans Timmermans, EU climate chief with Bloomberg's Maria Tadeo. And Alex, as we see this, I mean, really just continue to see the price of oil also go up. There's this question of energy shifting, energy usage shifting as well, that really just continues to impact the entirety of the energy space.
Yeah, and that sort of led Larry Fink to say we could see $100 oil, and then you had Schwartzman of Blackstone talking about the fact that you could see some social unrest. But Danny, what I think is really interesting is that no doubt you need more wind, solar, and storage. Those are like the three things you most definitely need right now. But the higher material cost that we're seeing is also impacting the cost of those things. So the stuff that we need then becomes more expensive, which then in some ways puts our reliance back on the likes of natural gas and oil. And I think walking that line is going to be really tricky. And we heard President Jen Psaki, the press secretary, say they're going to put some pressure on OPEC, that Biden's still going to talk to them. It doesn't look like, from what you're reading there, that OPEC cares about that.
Right. And then there's also this question, does OPEC even have the spare capacity to meet some of these demands, to really meet the global thirst for energy? We heard from the Aramco CEO earlier this morning that I mentioned before, him basically saying it's just a really huge concern that spare capacity is shrinking, that should aviation pick up to pre-pandemic levels, we're going to be in a lot of trouble.
Yeah, which is why they're not going to pump more now, which means the oil in the ground is now worth something again, maybe more than what we thought 12 to 18 months ago.
Yeah, absolutely. And of course, this has ramifications for earnings. Costs are an issue as well. Definitely a very prominent part of the past week of what we've heard, Alex.
Yeah, and energy ministers also are trying to work that out, too, because as you heard from Maria as well as Franz Timmerman, they need the LNG. You still need coal at this point, but you still need to transition. It puts everyone in a really tough spot.
Yeah, Alex, let's definitely dig into that, because as you were saying, we had the EU energy ministers, and they were butting heads at an emergency meeting over how to cushion consumers and companies from soaring power prices. John Anger, Bloomberg climate reporter, joins us now. John, did we get any closer to an agreement, to a plan coming out of the EU nations?
In short, no. Basically, EU leaders, I think, have reached the conclusion that there aren't going to be any short-term things that they can do right now. It's all about lining up some medium-term measures for after this winter has passed, after the price increases have passed. Things like gas procurement, possibly going back to look at the electricity market and the energy markets and to stop manipulation within that. But right now, I think it's just trying to get through the winter.
So, John, how are they going to get through the winter at this point?
Well, that's a very good question. I mean, at the moment, the EU has unveiled its toolbox of things that EU leaders can do to help cushion the most vulnerable in society. And that involves things like direct grants to consumers and companies or short-term tax cuts. But really, there are countries which are pushing for more than that, the likes of Poland and Spain. Spain came out with a paper today which showed how they want to see other measures implemented, like trying to stop speculators in financial markets, as well as altering how the electricity market actually works by decoupling it from gas, which would mean that prices would come down sooner. But that's a policy that's been criticised for perhaps disincentivising the use of renewables.
How does the picture look in the UK? Because there are some idiosyncratic issues there, issues with having lorry drivers. You had energy suppliers going out of business as well. How is that shaping up?
Well, I think the UK is definitely struggling. Obviously, with Brexit and everything, it's definitely an issue here. We learnt today that nuclear, the UK government's going to start trying to fund nuclear more effectively. And nuclear, again, as we saw in the energy ministers meeting, is increasingly being seen as a potential solution to this crisis, being a form of energy that doesn't run low when the wind stops blowing or the sun stops shining.
What I find really tricky, John, is to understand how all these separate countries, aside from the UK, are going to work together to find any kind of solution, because it reminds me very much of how they're fragmented fiscally also. They're very fragmented in terms of energy, how they get their energy, how they supply their energy, etc. How do they solve for something like that?
Well, yeah, you saw Maria speak to Franz Timmerman's sources. Sure. Most countries within the EU have some kind of renewable energy available. It's just about boosting that. Timmerman said as well that had the transition started 5 years earlier, then Europe wouldn't be in this position now. So that's something the Commission is definitely trying to nail down, is getting through their package of renewable energy measures in time for a 55% reduction in emissions by 2030.
All right, John, thanks a lot. Really appreciate Bloomberg's John Anger joining us there. And just to point out, this is what I was talking about earlier in terms of Rystad came out and said that manufacturing costs for PV models have surged to about 28 cents. That's a lot. That's like 8 cents more than what we were expecting. The point being, it's really much more expensive now to install those solar panels because of the supply and energy shortage. Go figure. All right, coming up, it's the world's leading cities are failing working women. Bloomberg Businessweek has an amazing article out, and they ranked 15 business cities. It's our Bloomberg Big Take coming up next. This is Bloomberg.
20 countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm John Hyland. Switzerland has approved the use of the Moderna COVID booster for high-risk groups. That comes a day after a European Union panel recommended the use of the company's booster. Meanwhile, in the U.S., FDA advisors are meeting today to discuss whether to recommend the Pfizer-BioNTech shot for children as young as 5. And Tesla will help Jaguar Land Rover meet European Union car emission rules. Elon Musk's company will pool its fleet of all-electric vehicles with those of the UK-based automaker. Tesla already pools with Honda, and this year Tesla has generated about $1.1 billion of revenue from regulatory credits. And Blackstone co-founder Stephen Schwartzman says the firm had trouble recruiting women until it asked them why the prospect of working there was turning them away. Schwartzman told a conference in Saudi Arabia that women were scared of joining Blackstone. He said the firm tackled the problem by speaking to female university students and offering them the chance to experience working there. And that's the latest Bloomberg Business Flash. Danny.
John, thanks so much. Now it's time for today's Bloomberg Big Take story. You can get it by going to NI Big Take Go on your terminal. And Bloomberg Business Week has analyzed how 15 cities ranked women's careers and found each failed in several categories. Joining us now to walk us through it is Ruth David, Bloomberg senior UK correspondent. Ruth, I know this took a lot of time, a lot of effort went into it. 7 months is what you told me of how long it took to put this together. So let's start with the index itself. What exactly does it do?
It looks at 5 metrics, which is safety, mobility, maternity, equality, and wealth, and rates 15 of the world's leading business cities. We wanted to look at cities that were hubs, seeing a good flow of immigration, so they were seen as desirable places to work. The one key thing to keep in mind is that no city scored above 4 in this. The highest scorer was Toronto, and it came in at 3.66 out of a 5. So every city is not doing enough to keep women safe and to give them opportunities to advance in the workspace at the same time.
Ruth, first of all, congratulations. 7 months of work is a really big deal. What surprised you the most in this? Like, where are we lacking the most?
To me, one of the surprises was Germany, because this is a market that has had so much in terms of a female leader for nearly 2 decades, right? And they have legal provisions that make it easier for women in the workplace, but they don't have a good school and kindergarten system, which means that women step back. And one of the statistics we found out was because women step back from the workforce when they have children, they end up retiring with 50% less in pensions. And of course, there's an 18% gender wage gap. And on top of that, you don't have women in senior management roles. And the other interesting thing I noticed was the culture of a region. It is so interesting to see how that plays out in the workplace. In Japan, for instance, there is a culture where once a woman gets married, she is expected to stay at home and raise the kids. Similarly, in Hong Kong. If you look at Japan, in our rankings, they have 13% of women in managerial positions, which is the lowest number in the 15 cities that we looked at. And it's not just that they need companies to do something differently. It's also a mindset that needs to change around there, right?
It's a really interesting piece, and I suggest everyone reads it as well. Also, security, I think, really stood out to me as something that was lacking in a lot of cities that I really wasn't expecting. Ruth, great work. Congratulations. Thanks so much for joining us. Bloomberg's Ruth David joining us there. Yeah, Danny, I thought that was so interesting on the security part, that it's just sometimes in some cities it's not safe, literally, for women to like walk home from work.
Yeah, and Alex, look, it is a huge deal here in the UK and really relevant after the murder of Sarah Everard. It is just such an important topic right now for women.
Yeah. All right. Interesting stuff. Definitely check it out. All right. Coming up, you got UBS reporting super solid quarter. Stocks flying higher here. The close is up next. This is Bloomberg.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year. Yeah. And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
Stocks just finishing up the trading day here in Europe. About 30 seconds to go until the close. We're looking at a very positive day when it comes to this European equity session. Mostly green on the screen. You're seeing some outperformance when it comes to the DAX, for example. That's ending up higher by more than 1%. So a lot of these higher beta plays outperforming today. You'll notice some underperformance from the UK market. That is only up 0.7%, again, compared to gains of close to 1%. A lot of that having to do with the currency effect, a slightly stronger pound today. Of course, that usually affects some of those big multinational companies. Therefore, we don't see as strong of gains coming from the region. CAC around up nearly 1%. FTSE MIB up about 0.7%. So on a headline level, that means that the stock 600 is on track or just now closing its third day of gains. We're looking at a gain of 0.8%. So at this level of 475, that means that we are now at our highest level in 3 months. We're not at record highs like the U.S., but there certainly is a a boost coming through to earnings, really helping propel the index higher. So with that said, let's dive into the sectors, because you really do see that earnings story playing through when it comes to that. That's because we have, for example, the retail sector doing very well. We had earnings throughout the sector, and really throughout the week, we've had those type of earnings that have really helped those companies. There's a lot of optimism that we will continue to see strong demand, and that pricing power can continue to go through. So travel and leisure also doing very well today. That was the top performing stock sector, up nearly 2%. And it's remarkable to look at this board and just see one single sector is falling, and that's basic resources. The energy crisis is ongoing in Europe. Prices are high. It really is a stretch for a lot of these basic resources. And I just should say, looking right now at where we have closed, a 0.8%, that is setting for a record high close for the Stock 600. So there you go, finally matching that of the U.S. with nearly all, I should say, of these sector gainings. Now, when it comes to the individual stock stories, we did have some standouts. UBS, for example, being one of them. It is the season for European bank earnings, and we did have strong results coming from UBS. Net interest income surprising the most since the financial crisis. It is a gain of 1.25%. Perhaps it's not even stronger despite those really solid results, because we did have UBS warning that in terms of client activity, which was very strong for the quarter, that could start to wane given the issues that we're seeing in terms of inflation, geopolitical issues. So that warning, again, made for UBS at some points today, it was indeed declining. Reckitt Benckiser as well, Benckiser, I should say, up more than 6%. This is a consumer goods company. They make a lot of hand sanitizer. They make cold medicine, saying that they were able to pass on prices to their consumers. And so a lot of optimism that this means their profitability will be very strong. Kind of the bummer here, though, is Reckitt Benckiser. Part of the reason their earnings were really good, too, is because they were just selling so much cold medicine. So people are getting sick again now that they're not wearing masks. It's that super cold going around. All right, finally, Entain. Alex, I know this is a stock you and Guy have been watching a lot. We had thought that DraftKings, we knew that DraftKings was looking at them. This would have been a big deal. This is the gambling space. If you live in the UK, you see a lot of Entain's companies out there. For example, they own Ladbrokes, they own Coral. But DraftKings saying that they won't make a bid. So we saw DraftKings rise during the session, Entain, for its part, falling more than 6%, Alex.
Yeah, let's dig into that a little bit, because since the U.S. Supreme Court allowed sports betting to expand beyond Nevada in 2018, U.S. gambling companies have been very eager to go global and have been eyeing Entain. So what does that actually look like now that this deal fell through? Thomas Seal, Bloomberg Tech Media and Telecom reporter, joins us. What happened to the deal? Why did DraftKings lose out?
They haven't given a reason explicitly. The offer that they made to Entain was had a very large stock component, and the value of DraftKings stock has been quite variable. So that may have been a factor. And yeah, now they've pulled out. UK rules prohibit them from making another bid for 6 months. So we'll see whether anyone else decides to make a move, because there's definitely going to be more M&A in this space.
Yeah, I was going to ask, should we expect someone else to jump in and try to buy up Entain?
So the talk in the immediate aftermath of this announcement today has been about MGM. They own a 50-50 joint venture with Entain in the US, BetMGM, and that has been seen by many as the sort of crown jewel at the heart of this deal. And it also complicated the deal a lot, because MGM would have had to sort of unpick its ownership or take ownership. So people are saying maybe they could come back for a second offer.
How easy or hard is it if you're a U.S. company to come in and buy Entain in the U.K.?
I think the fact that a lot of that offer from DraftKings was US stock may have put off some investors. No one has come out explicitly and said this. Then again, we've seen plenty of successful US to UK gambling M&A. Probably the best example would be Caesars, another casino company like MGM, taking over William Hill, which is also a really old legacy betting brand in the UK like Ladbrokes.
Thomas, thank you so much for keeping us on top of this. That's Thomas Seal of Bloomberg News. Now, let's turn back to UBS, because Bloomberg's Manus Craney sat down with Ralph Hammers, UBS CEO, following earnings, Alex.
Yep.
on one side you see risk on the other side you see the investor sentiment to be a little bit, careful around the inflation numbers that are coming up, and are seeking advice as to, okay, how do I best protect my wealth against upcoming inflation?
Where do you see inflation topping out? Middle of next year seems to be the building consensus. You agree?
Same here. If you look at the underlying factors causing the inflation, it's clearly the energy prices. It is some of the supply chain hiccups that we see. It is a bit of the friction in the labor markets that we see as well. We do expect, the consumer spend to move away from goods to services. Mm-hmm. That should help lift a bit of the tension on some of these as well. And at that moment, we also feel that the supply chain is probably up and running again. Demand will be a bit lower than for those goods, and then hopefully we'll get in a more balanced situation, and then the inflation will come down.
To China, we're trying to glean leaders like you, your take on where we are. The Evergrande exposure, your direct exposure, is immaterial. You've told that to the market. I want to get a sense from you, has the worst passed in China with Evergrande and the reorchestration of the economy?
Well, they just announced the move to a common prosperity, right, in terms of their policy. So I do think there is probably more policy changes as part of that coming through. This time it was around the property market. I do think it's going to be also around healthcare. It's going to be about some social welfare as well, in terms of unemployment benefits, building a pension system, etc., etc., etc. So I do think more changes will come to the market. Those will be all incremental. Some will have negative effects, some will have very positive effects. So for us, we will go through that. We've been committed to that market for a long time, and we see it as very strategic.
I was with HSBC yesterday. They were sort of almost full bull on China. Are you full bull on China?
I'm strategically full bull on China. Absolutely. Who can't be, right? We know the country very well. We're very successful in the country, both on the onshore business and the offshore business. We have a very good combination of businesses in the wealth, IB, and asset management business, and we plan to invest more.
As UBS CEO Ralph Hammers speaking to Bloomberg earlier, and you had analyst reaction, Danny, that was, a lot of it was quite positive. Citi, for example, says that it was another impressive quarter, and that they note the cheap valuation compared to price to tangible book, and also the fact that it was broad-based. It was investment banking, it was retail, it was wealth management, and it was corporate.
Right, although trading wasn't as strong as Wall Street, but as you noted, it still had very, very strong results elsewhere. I mean, net interest income surprised to the upside. How often do you hear that for banks that they're able to deliver there? I do think, though, it is consequential that UBS basically said, look, we had such strong client activity, but considering all the risks floating out there, we're not so sure it will sustain itself in the fourth quarter.
Yeah, interesting, because a lot of the risks obviously are supply chain problems. But that is something that most banks are relatively insulated from. Maybe their clients aren't, but they are. Like, they don't have the same kind of input pressure, which is also an interesting kind of take on how the financials can fare in that.
Yeah, although that being said, one of the big risks out there is certainly China. And Hammers was just there telling Manus Cranny that he is a strategic full bull, which I guess is a little bit of a hedge on being a full bull in China. But giving us this idea that, Alex, you and I both heard before, that you can't not be in China. To some degree, if you are a big global bank and you're trying to expand your footprint, you have to be there.
Right. It's a question of how you're there. And it's the same thing for any kind of consumer stock, too. We were talking a little bit Engel earlier in the last hour about how smaller companies that cater to the Chinese emerging market consumers are a great place to be for that point. So if you're a big consumer guy, it's hard to not be there as well. But it's still, at the end of the day, going to come with some significant overhang of risk, because we don't really know yet how the redistribution of wealth there is going to play out. And unlike here in the U.S., if China wants to do it, they're going to get it done. Not like here.
Yeah, totally. Totally. I mean, also, I can't imagine like a luxury company, for example, not being in China. I could never see that happening.
Yeah, also very true. All right, well, we're going to stay on the consumer, because you got the maker of Avon and the Body Shop wants the Amazon rainforest to be included in the Paris Agreement. He's probably not alone. We're going to break down Natura's push for sustainable beauty with CEO Roberto Marquez. That's coming up next. This is Bloomberg.
população é uma população importante, é uma população que frequenta a escola também, né? Então é importante que eles também estejam protegidos para o coronavírus, evitando assim a transmissão.
Eu estava esperando muito por essa vacina. Desde o ano passado eu estava torcendo logo para poder minha vida logo voltar ao normal, que eu quero logo voltar para a escola, eu quero voltar a sair com meus amigos, eu quero sair, eu quero voltar à minha vida normal.
A dose foi toda administrada.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
Let's check in on the Bloomberg First Word News now. I'm John Hyland. In the UK, Chancellor of the Exchequer Rishi Sunak will end the pay freeze on public sector jobs and will make the announcement in his budget tomorrow. The pay freeze took effect for 2 million workers in April, and the Treasury cites what it calls the strong economic recovery as the reason to raise salaries. And European Union greenhouse gas emissions were 31% lower in 2020 than they were in 1990. The European Commission says that was due to the pandemic and decarbonization policies. Meanwhile, for the first time in the EU, renewables overtook fossil fuels last year as the main power source. And France sees 1/4 of its auto jobs at risk in the transition to electric cars. That's according to the French auto lobby. It says 100,000 of the 400,000 workers employed in the industry could lose their jobs in the next decade. France is home to car makers such as Peugeot, Citroën, and Renault. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Hyland. This is Bloomberg. Alex?
All right, thanks so much, John. So COP26 begins Sunday in Glasgow, and that's as some of the world's largest companies are coming together to address climate change. Now, Natura is the maker of Aesop, Avon, and Body Shop, and has been sourcing some of its ingredients from the Amazon and has been advocating for its protection. And like most companies, it's also grappling with historic supply chain constraints. Natura and Company CEO Roberto Marquez will be in attendance in COP26, and he joins us now. Roberto, we're going to get to the COP26 part and what your role is in that in just a moment. But to set the stage, what is your biggest supply chain problem right now?
Yeah, so Alex, thanks for having me again. Yeah, for sure. We are seeing that across not only, sometimes delay in getting products in our stores in North America, for example, but also we are seeing pressure in terms of inflation, commodity costs, and especially in developing markets, there are so much that we can do to compensate with price increase. So it is a pressure on supply chain that we don't think is going to go away, at least for the next 6 to 12 months, until we can restore some balance. So we are dealing with that. We are confident that we're going to be able to really continue to deliver superior results. But it is no question about it, some pressure that is coming from different places in the world on supply chain shortage and some constraints.
How do you offset that margin pressures then, especially in developing nations where, as you say, you kind of have that limit in how much you're able to raise prices?
Yeah, no, good question. So one of the things that we always talk about it in the industrial logic of the combination of Natura and Avon is that we have a lot of synergies. For example, in Latin America, we are actually producing already Avon products in the Natura manufacturing, vice versa, optimizing some of our distribution centers. Those synergies are helping us to offset somehow that pressure, not completely, not in total. So we're still feeling, some of the impact, which again, we can do through some revenue management, but not to necessarily absorb the entire impact. So it is a challenge, but I think we are in a strong position because of the synergies that we can actually generate with the combination of Natura and Avon infrastructure.
One more on this one. Do you still see some downward risks for your 2023 EBITDA margin guidance? And I feel like this is an important way to set the stage because transitioning in a COP26 sustainable way is going to cost time and money, and that kind of puts even more pressure on CEOs. What's your margin outlook? Is it still downside risk?
Yeah, so one is we're not going to compromise in doing the right thing, in investing, especially, again, on sustainability and how we find a way to continue to drive that agenda. We have very clear metrics. We have committed to become net zero by 2030. That's 20 years ahead of the UN. So all the investments in supply chain, both the scope 1, 2, and 3, in order for us to deliver against that agenda, we're going to make sure that we continue to drive that. In terms of margins, we're still, working towards our goal to become, mid-teens by 2023, 2024 timetable. We might have a little bit of delay short term because of this pressure in supply chain, but we have a path and we're very confident in delivering those.
In terms of making sure you have a sustainable business, Roberto, I was talking to Nikki Morley of Kantar last week, who ran a study basically saying that consumers, they want to buy companies that do good. They want to buy from companies that are environmentally friendly, but they're very concerned about greenwashing. As a corporation, how do you instill confidence and how do you make sure that you're showing to consumers that what you're doing is not greenwashing?
Yeah, it's a very good question. So I think you have to have, credibility and walk the talk, Alex. Natura, for example, has been working the Amazon region for 20 years. So and we preserve over 2 million hectares of the forest by work with the local communities, by leveraging biodiversity. So I think if you can show to consumers and customers what you're doing and with transparency and really, showing the benefit of, combining sustainable development and economic development, and those things, in our opinion, are not conflicting, is absolutely doable. I think consumers connected well. I always say that before being consumers and customers, they are citizens, and they want to engage, they want to understand. So transparency, sharing that kind of information is super important. Recently, we created a consortium of a lot of beauty global companies to establish some same criteria in how we're going to communicate to customers what they're buying. And that's important because it really, if you want to move the needle, it is about collaboration. We cannot just compete in some of those areas. We need to collaborate even within the same industry, like the beauty industry.
Roberto, a lot of this, particularly as you're so geared to the consumer, is going to rely on how much people like me are willing to pay up for greener products. It feels like every industry is trying to figure that out right now. Do you have an idea of how much more I'd be willing to pay?
I think at the end of the day, you cannot compromise on the product performance. I don't think this is about either or. You got to develop products and solutions that are more sustainable, but at the same time, without compromising on what you're buying, either a makeup or a moisturizer, you still want to have a great experience. One example at the Body Shop, have that now, is our refill stations in the stores. The customers love to have that experience. They're still getting the same product, but they're getting a more sustainable package, aluminum package, versus having plastic and to throw away. So this is just one example in how we can actually be more sustainable with actions, and in the same way, engaging customers and not compromising on the quality and the experience of the customers using our products.
Roberto, if I can change gears slightly, I know in the second quarter earnings call you talked about opening a store in China of Aesop. The hope was for the first half of 2022. Is that timeline still intact?
So we are still planning to do it in 2022. I'm not sure it's going to be first half or second half as we're going through, product registration. We're excited about this opportunity, especially for Aesop, and we'll follow up then with the Body Shop. We already have a presence of Avon in China. You guys were talking before about how the luxury market and prestige market are booming in China. And I think we have great products, especially with Aesop. Just to give an idea, Japan already became our #1 market for Aesop globally. Korea is also doing extremely well. So the Chinese customers, they already know the brand, they love the product. So being able now to be, with physical presence in China without compromising on our non-animal testing policy will be a huge opportunity for us. So we're excited about that.
Roberto, thank you very much for joining us this morning, and safe travels over to COP. That's Roberto Marquez, Natura & Co. CEO. Coming up, we're going to be talking about D.C. and West Virginia's Senator Joe Manchin is key to making progress on getting a deal on President Biden's economic agenda. He's fighting for getting a $1.5 trillion plan. His conversation with David Rubenstein, Carlyle Group co-founder, next. This is Bloomberg.
The growth story in cannabis remains very strong even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're all negotiating. I think in good faith you have to keep all options open or you're not being fair with the other side. I think 1.5 was more than fair since we just did 1.9, since we just did another 1.2. And, when you look, I started looking and thinking about how much, I've never heard $1 trillion even used even when we had the meltdown in 27, 28. They got up to 800 billion, I think, in that neighborhood, 8 or 9. And then we thought it was outrageous. You'd have to spend this much money to keep us from a financial collapse. We talk about billions like chump change. Well, okay, and we talk now we're in trillions like it's expected. And I said, what did World War II cost us? What did the Marshall Plan cost in today's dollars? I was just curious. I don't know how they come to my mind. So I had one of my researchers check it out. They come back and they said, what do you think? And I said, I really don't know. 10, 20 trillion, I don't know. They said 4.7 trillion. We saved the world in World War II. We rebuilt Europe on today's dollars at 4.7. We've already spent 5.4. And we're about ready to spend a heck of a lot more.
That was Senator Joe Manchin of West Virginia with David Rubenstein, Carlyle Group co-founder, joining us there. It's going to be really interesting to see how the next few days pan out when it comes to D.C. Also, we have earnings from Alphabet, Microsoft, AMD, Texas Instruments, and then we get Deutsche Bank on your neck of the woods tomorrow. It's going to be a really busy 24 hours, Danny.
Yeah, we also have U.S. durable goods. There's so much out there, Alex. Certainly a lot that could shake up these markets.
All right, coming up on television, Senator Sherrod Brown will be joining Balance of Power. This is Bloomberg.
As Magnus TV in Facebook, since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I'm playing almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. I'm a little bit worried about it because some people who join this Axie Infinity thinking that this is an easy money game. They can earn a lot on this game. This game can sustain their life, and I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for example, even 5 years, I think.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. This is the week the Democrats have said they'll come together and move on infrastructure and a framework for an overall budget, with Speaker Nancy Pelosi saying she's confident, and Senator Joe Manchin just earlier today saying this morning that he hopes to pass the infrastructure bill as soon as tomorrow night.
I sure do think there's a high probability that's going to happen. And I think that basically this infrastructure bill, we'll call it the BIF bill we all refer to as the bipartisan infrastructure bill. But the BIF bill, I think, and Debbie would be able to tell me better than anybody here, I would like to hope it passes Wednesday evening. The president needs to take something with it by the end of the week.
To give us the state of play right now, we're going to turn to our Washington correspondent, Joe Matthew. He's host of Sound On every single afternoon on Bloomberg Radio. So, Joe, I feel like we may have been here before, but maybe this time it's real, right? Really close to a deal, just not quite there yet.
Yeah, this does feel awfully familiar, David. It also feels kind of like the dark period before a corporate earnings report. We know that talks are happening. We know there's information. Just very few details are trickling out right now, and what really could be the final hours or days before a deal is announced. But I would remind you, we've had deals announced before in the driveway behind me here on the BIF, on the infrastructure bill, and on Capitol Hill, when Nancy Pelosi, the House Speaker, told us there was an agreement on a framework for pay-fors. Neither resulted in legislation landing on President Biden's desk. But we do have some important headlines, as you mentioned. Senator Joe Manchin today predicting a vote on infrastructure tomorrow on Wednesday. Pretty big deal. Steny Hoyer, of course, the Democratic leader in the House, saying earlier that we're just hours away from a framework being announced on the president's tax and spending plan. So both of those would suggest that they are close to agreement on a Medicare expansion, child care, paid leave, and climate. You know, they like to say that nobody rings a bell, David, when the stock market peaks. I think it would behoove this White House, based on the history of false starts here, to maybe ring a bell when we get a deal so we actually know it's real this time.
Yeah, when we know it's real. Exactly right. Those two things strike me as being connected. On the one hand, the vote on the infrastructure bill, and also that framework as you described it, because the progressives we know say we don't want to vote in favor of the infrastructure bill unless we have a framework. But what does that framework consist of? Do they need to write it down? How specific does it need to be to satisfy, particularly the progressives?
Speaker Pelosi has said, yes, we need more than just a handshake on this. They want to see some language. It's not going to be a complete bill, David. I don't think anyone is predicting that, including the progressives who are calling for that assurance before the end of this week. But indeed, some language that codifies the elements that I mentioned: climate, paid leave, child care, and some of the other components that have been in the mix here, including that expansion of Medicare that could take on many different forms or none at all. Once that's complete, then they can move forward with a vote on that bipartisan infrastructure bill. And if you take Senator Manchin at his word, David, that could happen as soon as tomorrow.
Okay, so that's about how we spend the money. How do we get the money? How do we pay for it? There's been a lot of discussion about that. It sounds like they've basically given up on repealing those so-called Trump tax cuts. There'd be some irony if that were true.
Well, absolutely right. And as we spoke when this all blew up a couple of days ago, we're looking as well at giving up on a corporate tax rate hike that, again, from the 2017 Trump tax cuts. But there's still talk about a billionaire's tax, about taxing unrealized gains and somehow offsetting unrealized losses, along with, to Senator Manchin's agreement today in that conversation on Bloomberg, a 15% minimum corporate tax rate. They say those would help to make up the difference without an increase in the corporate rate or the capital gains rate. Not everybody sees eye to eye on these, though, David. Even Richard Neal, the chair of the House Ways and Means Committee, says he would very much prefer doing it the old-fashioned way, putting up tax rates that people can see and predict and count on. There's a lot of gray area in some of the other approaches that we're hearing about now.
Yeah, and Joe, I must say, I think I understand a 15% minimum corporate tax rate, at least theoretically, how you would calculate how you do it. But when we start talking about this so-called billionaire's tax, where we're actually going to tax assets you have that you've not sold, so it doesn't necessarily have a specific value, how would we even go about doing that? And by the way, is it constitutional? I think there's a question about that.
These are great questions. It clearly would end up in court. We would find out one way or the other if it was constitutional. But agreed, to be able to tax unrealized gains would not only change the tax code, reinvent the way that we're approaching this, it would also require likely an enormous amount of hiring at the IRS and a lot of looking into people's bank accounts that makes a lot of people nervous, not just the super rich, but anybody who's concerned about the way we tax and spend here in Washington, D.C. This is new ground, David. We don't have the answers to a lot of these questions, and it's one more reason why this has gone into another week here, because lawmakers are trying to figure this out too.
Okay, Joe, hold on just a moment, because I think that Anne-Marie Hordern, our Washington correspondent, is now able to join us. Anne-Marie, can you hear me?
Yes, I can. Good afternoon, David. Thank you for having me.
Thank you so much for your patience here, Anne-Marie. Really appreciate it. Give us the perspective from Capitol Hill about the likelihood, actually, of this coming to pass the way that Joe's just described, that we actually would have a framework maybe in a few hours from now and maybe infrastructure tomorrow.
Yeah, potentially there could be a framework or this meeting of the minds, which is what Joe Manchin has described this. But the fact of the matter is, even if there is a framework, the progressives have continuously said that they want these two bills, the roads, the bridges, and the social spending plan, to be voted on in tandem. So we don't know yet if the progressives are willing to back down from that, if a framework is enough for them to then vote for the hard infrastructure. But the president would be happy, I'm sure, to take on Air Force One when he heads over to Rome and Glasgow in Scotland, and as well as ahead of that crucial Virginia governor's race. It remains to be seen if that's enough, because all we keep hearing, David, from progressives is that they want to vote on reconciliation before they give the green light on the hard infrastructure.
Yeah, and one question I have, I'm not sure any of us can answer it, Anne-Marie, but let me ask it, and that is, having put the $3.5 trillion number out there, if they come in closer to the $1.5 trillion that Joe Manchin's insisting on, does that look like almost a loss for the Democrats?
You know, it's a good question. I think because originally 3.5 actually come down from 6 trillion, and this will still be the biggest fiscal spending package ever in American history, I think they would accept it as a win. But this, you get at a point, David, of what is so hard about this entire negotiation. It is razor thin majority. So for the Senate, everyone's needs to be met. The president needs to make it tolerable for Senator Manchin, but at the same time, making sure he's not ostracizing Senator Sanders, who originally wanted a $6 trillion package, and he definitely wants an expansion of Medicare. And you have similar issues taking on in the House. A little bit more of a majority, but really Speaker Pelosi can lose, 3 votes? So this is why they need to make sure at some level everyone's needs are met so they can go campaign next year and say to their constituents, I got XYZ, whatever is important for you. So Tom Suozzi in New York wants salt. Bernie Sanders at the Senate in Vermont, he really wants to make sure he goes home with an expansion of vision, dental, and hearing. Doesn't look likely they're going to get everything they want, but potentially a win for someone.
Yeah, it's the nature of democracy, I guess, as a practical matter.
Yeah.
Let's go back to Joe Matthew just for a moment at the White House. And Joe, what about the American people in all this? Do we have a sense of how eager the American people are to have this deal that everybody's working so hard on in Washington?
You know, all of these individual policies, with the exception maybe of the tax component here, David, actually poll very well among a really broad swath of demographics. It's kind of like you hear, though, people love their own Congress member, they just don't love Congress. So when you start creating these comprehensive pieces of legislation, they don't poll quite as well. But to Anne-Marie's point, let's say they strike a deal on the components we're just talking about, which is only with what we know right now. You've got $1.2 trillion in the infrastructure bill, somewhere between $1.5 and $2 trillion on the reconciliation bill. Programs that have never existed before. Democrats could hold a parade celebrating that as a victory. And by the time we get to the midterms, nobody's going to be remembering the back and forth that we've been kind of laboring over here in Washington. That is trillions of dollars worth of social spending and new programs that didn't exist before, David. That would be a slam dunk, according to a lot of Democrats we talked to.
Okay, thanks so much to our crack team. That's Anne-Marie Hordurin, Washington correspondent for Bloomberg, as well as Sound On host Joe Matthew. You can hear him every day at 5 p.m. Eastern Time on Bloomberg Radio. Coming up, we talk with the chair of the Senate Banking, Housing, and Urban Affairs Committee, Senator Sherrod Brown of Ohio. This is Balance of Power on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
When you
look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology and technology companies as partners. So some
not
of our
rivals.
We know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
So Fauci and his team shared data about mixing vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. Senate Democrats have moved closer to an agreement on President Biden's economic agenda. Senator Joe Manchin expressed optimism there could be a deal this week. He's been pushing to shrink the size of the social spending package. Senator Manchin said today he's also optimistic about the infrastructure bill.
I sure do think there's a high probability that's going to happen. And I think that basically this infrastructure bill, we'll call it the BIF. The BIF bill we all refer to as the bipartisan infrastructure bill. But the BIF bill, I think, and Debbie would be able to tell me better than anybody here, I would like to hope it passes Wednesday evening. The president needs to take something with him by the end of the week.
Still, some House lawmakers have raised doubts about the terms of the deal being discussed. A group of experts who advises the Food and Drug Administration on vaccines is meeting today to discuss Pfizer and BioNTech's COVID-19 shot for kids ages 5 to 11. Data from the companies show the shot was highly effective, and the FDA staff the benefits probably outweigh any risks. The panel may focus on myocarditis, a heart-related side effect that's been seen in some younger men after getting the vaccine. Iran says cyber attackers were behind a major disruption at gas stations across the country today. Officials say hackers infiltrated the software that supports a subsidized car payment system used by millions. State-run media in Iran says the disruption may have been timed to coincide with the upcoming anniversary of widespread and violent protests that erupted after the Iranian government raised fuel prices in November of 2019. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. The Senate is hard at work on President Biden's economic agenda, even as it awaits the president's decisions on Fed leadership. Welcome now the man at the center of both of those issues. He's Democratic Senator from Ohio, Sherrod Brown. He's the chair of the Banking, Housing, and Urban Affairs Committee. Senators, thank you so much for being with us. Really appreciate it.
Good to be back. Thank you.
Let me start with the Fed. This is Bloomberg. We really are very interested in the Fed here at Bloomberg. First of all, talk about the timing. Why do you think we don't have a nomination yet? Typically, if you go back in history, we would have heard, particularly with the renewal of a chair. What's holding it up?
Well, nothing's holding it up. The Chair Powell's term ends in February. He's eligible, of course, for reappointment. There's also an empty slot right now in the Fed. There's also another vacancy likely to occur in December and a further vacancy in March. And I think the president probably, as I don't speak for him, of course, but probably waiting and going to put a whole slate forward of who those nominees are, understanding the Fed. President Biden, and I talked to him this the other day, he understands that you want to put workers at the center of our economic policy, and that includes making the Fed look like America, but think more like America, too. Not all. It's got too much Wall Street, too much deregulation, not enough support for climate, for blunting the risk of climate
climate change in the financial sector, not enough emphasis on workers. And I think when the president looks for making up to 4 nominations, maybe including Powell, maybe not, there will be a much greater emphasis on workers.
Well, you said, as you say, Chairman Powell is up for renomination, but it's not automatic. Do you have a view on that? Do you think that he should, given his track record, be renominated?
I leave that to the president. I talked to the president about sort of the whole package of 4, up to 4, or it could be, it's a little complicated, I won't go into. Yeah. But the president's going to make the decision. I think Powell's done a reasonably good job on monetary policy. He's fallen short on, done some things that I think are too supportive of Wall Street when it comes to deregulation, and he's not engaged enough in climate. He knows that, I think that. He and I have had regular conversations. I think it was Bloomberg that disclosed to me that I've talked to Powell more than any other member of the Senate over the last number of years because we talk regularly, we get along well, and we've got to decide, the president's got to decide what that means, both for his future and more importantly for the Powell's future and more importantly for the country's future. A Nobel Prize winning economist said to me, Joe Stiglitz, the other day, that the Supreme Court, the Federal Reserve is really the Supreme Court for the economy. And that really makes me understand the importance of building on Build Back Better with this White House and what the Fed can do to support that.
Well, let's pursue that Supreme Court analogy just for a moment, because the Chief Justice is the first among equals, but there are 9 members on the Supreme Court. When you come back to the question about regulatory authority of the Fed, as you say, monetary policy pretty good. There have been some questions raised by you and by others, some of your colleagues, whether he really has been tough enough on regulation. Does it work for you if you have somebody who's strong on monetary policy as the chair, provided there is that position, which is now open since Randy Quarles has stepped down, that's open for regulatory authority, if you have somebody really strong on regulation in that number 2 position?
Yeah, I'd first say that number 2 position, vice chair supervision, is essential regardless who the chair is. And I am arguing for a couple of people talking, and I'm not going to disclose names here, I apologize, but I've talked to the president about a couple of people in that job. The outgoing member who's just was not exactly demoted, whose term was up as vice chair, was a Bush Treasury official who had some degree of responsibility for what happened to the economy in 2008 and 9. And for me, that's personal. My neighborhood in Cleveland, my zip code had more foreclosures than any zip code in the United States in 2007. Part of that is the deregulation of the Bush administration and the Federal Reserve. So that position is really, really, really important, not just to me, but to the country in terms of housing, in terms of our economy, in terms of economic growth.
Senator, you mentioned climate, and there are also questions about equality and housing, for that matter, with respect to the Federal Reserve. I wonder if you think that really is a primary objective of the Fed, or whether that's a bit of mission creep. Do we need them to pay attention to monetary policy and regulating the banks, but maybe not spend as much time on climate, or do you think it really is central to their mission?
Well, they've spent almost 0 time on climate so far, so it's not a question of they have these 3 things to do and climate's eating away at their efforts and other things. Climate's important for reasons of our planet. It's also important because banks are lending. I mean, you can question how banks, the prudence of banks lending so much to the fossil fuel industry, underwriting mortgages where these homes or businesses are going to be affected by floods and fires and earthquakes and all the things that whose incidence have increased over the last number of years. So banks need to understand the risk of climate change better than they have. They need just like they need regulators to stop them from fleecing consumers, and they need regulators to stop them from discriminating with redlining. They also need regulators that are going to draw a line on climate and say, you've got to be more cautious in the loans you give in the underwriting of these companies that are doing great damage to the country or are going to cost these banks in the end a lot from their bottom line as this risk becomes more and more apparent.
Mr. Chairman, one of the things that has complicated potentially the issue with the leadership of the Fed, the revelations of some of the trading in securities by some of the regional Fed presidents. I wonder if you think we've gotten to the bottom of that. Do we really know what we need to know about it? And the follow-on, obviously, is you're the chairman of the Senate Banking, Housing, and Urban Affairs Committee. Are you going to hold hearings?
I don't know the last question. I assume probably we will. I don't know if we've gotten to the bottom of it. I assume we haven't. I introduced an amendment to a bill 6 or 7 years ago that individual senators could not hold individual corporate stocks. Every corporate stock a senator has is a potential conflict of interest because we vote on everything in the economy. The same with the Federal Reserve. These are 7 very influential people. They shouldn't be spending their time day trading, not to mention the conflicts of interest it presents and the appearance of conflicts of interest. And 2 Fed presidents have resigned, as they should have. I think we need to know more, and I'm working on legislation, as I have been putting together for some time, that would say members of Congress shouldn't be able to hold corporate stocks, reintroduce that, and that Fed chairs and presidents, the governors and presidents are the 12 regional Feds. The governors are the 7 in Washington, from Jay Powell to Lael Brainerd and others, that they shouldn't be allowed to either. Why do they need to buy and sell corporate stocks when they sit on the Federal Reserve and they're serving our country, or where they get the privilege of working in the United States Senate as elected people? Why should they be engaged in stock trading? It just boggles my imagination. Nobody thinks they should be allowed to.
Yeah, I must say, as far as I know, I'm not aware that the regional Fed presidents who came under question violated a law or a rule, which may say something about the laws and the rules, and then that would be sufficient. But as you go forward, when you do get nominations from the White House, do you think the way that the Fed handled this should reflect on either the chairman or, for that matter, the vice chairman? Because as I understand it, Lael Brainerd, one of the members who was actually responsible for overseeing the Fed regional presidents.
Well, we want to look at that. There's not been the attention paid by the chair of the Federal Reserve, the one ultimately responsible, nor has there, frankly, been attention paid by others that might or might not have been responsible. I just don't know that yet. I do know what you just said is exactly right, that they may not have broken a rule or broken a law. Well, those rules and laws need to be clear and transparent and strong, so this stuff, if it's still happening today, it won't be happening once this bill becomes law.
Okay, thank you so much on the Fed. Let's turn, actually, to the big negotiation going up on Capitol Hill. We'd love to hear anything you have to say. We've heard, actually, from one of your colleagues, Joe Manchin, earlier today, saying he's hoping that they're going to be able to get a vote on infrastructure as soon as tomorrow. Where does it sit as far as you're concerned?
Well, I think these 2 bills sit pretty much together and are about ready to go. I'm confident that by Thanksgiving, President Biden will have signed both. I think that, I know the media. I'm married to a journalist, so I understand this, and I never admonish any journalist on how to do your job. But I know the story always is Democrats arguing over this or that. But the issue is what we are going to do, both in the bipartisan bill and in Build Back Better, is going to be consequential. It's going to be transformative. Already from what we did in March with the child tax credit, passed in March, signed in March, up and running by July, cutting the child poverty rate by 40% already. Biggest thing I've ever done in government in the last X number of years. So we are going to do things that really matter. They're going to matter in housing. They're going to matter in transit. They're going to matter in education. They're going to matter in child care. If you believe in infrastructure, it's not just water and sewer and broadband. It's building a foundation so millions of American families can launch their children into a better life. That's what this bill's all about, from saving. We've seen in this country, we've seen executive compensation explode upward. We've seen profits go up. Wages have been flat. And Congress has rarely been on the side of workers. This Congress, in these 2 bills, we're clearly on the side of workers into fixing that.
So, Senator, I won't speak for your wife, but you can always give me notes on how to do a better job. Trust me, I'm open to any suggestions.
As I am from you, so thank you for that.
But let's go back to how we're going to pay for this, because as I understand the negotiations, not a done deal yet, it looks less and less likely that the so-called Trump tax cuts will actually get repealed, something that was a priority for the Democrats. Instead, we may have something like the billionaires tax, as it's called. I understand Republicans are really resisting that, saying it's terribly unfair. What do you think about the tax part of this?
Well, just listen to what you just said. Republicans are opposing vigorously a tax on billionaires, calling it
very unfair. I mean, billionaires, you've had them on the show, or they probably won't go on the show. You have mentioned them on this show. Billionaires that don't pay taxes, decamillionaires that pay lower tax rates than a school teacher in Lisbon, Ohio, or than a firefighter in Youngstown, or than a nurse in Swanton or Mansfield or Lima, Ohio. I mean, the fact is, Republicans 4 years ago, with this giveaway to the rich, with the Trump bill, made this tax system even more unfair than it already is. My goal is to pay for this package and to make the tax system fair. There are 100 different ways of doing it. I would like to be a little more aggressive than some of my colleagues and really make the wealthy pay their fair share. We're going to do a lot of that. We probably won't do it as completely as I think we should. But this tax system, everybody knows that rich people have gained the tax system, and middle-class factory workers and small business people and teachers and nurses have borne the brunt. And those days should be over. We will make this fair. I will not quit. I'm a member of the Finance Committee. After this, and Senator Wyden, the chair, is the same way. After this bill's done, we're not quitting. We're going to continue to work to make this tax system fair.
Okay, great. We'll love to check back in with you, see how it's going. Thank you so much for your time today. Really appreciate it, Senator. That's Senator Sherrod Brown. He's chairman of the Senate Banking, Housing, and Urban Affairs Committee. Coming up, in one earnings call after another, the decision centers on supply chain problems. We talk with an expert, Bindia Vakil of Resilink. This is Balance of Power on Bloomberg Television and Radio.
OECD nations need to end coal use by 2030, developing nations need to follow suit by 2040, and we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
From New York City.
We're here in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
And the fourth quarter were dramatically impacted by the Delta variant. And while bookings bottomed out and we're clearly on the road to recovery now, a lot of the fourth quarter was impacted in business offices that were going to open in September that's been pushed back to January.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. Democrat Terry McAuliffe distanced himself from President Biden earlier this month in a bid for more votes in a tightly contested Virginia governor's race. Now, as polls show an extremely tight race, the former Virginia governor is counting on the power of the presidency to give him an edge in the November 2nd vote. McAuliffe is planning a campaign appearance with the president tonight. It comes just weeks after he blamed Mr. Biden's sagging approval ratings for his own slump in the polls. Law enforcement officials in the United States and Europe have arrested 150 people and seized tens of millions of dollars in an international drug trafficking investigation stemming from sales on the darknet. The Justice Department says the arrests are connected to a 10-month investigation between federal law enforcement officials in the U.S. and Europol in Europe. Investigators seized more than $31.6 million in cash and virtual currency, as well as 45 guns. Risks related to COVID-19 and the economic havoc it wreaked across the globe are keeping corporate executives up at night. That's the takeaway from a new Aon survey of more than 2,300 risk managers and other executives conducted in the second quarter. Cyber attacks were the #1 most cited hazard. More than half of the top 10 risks executives say they face today are tied to the pandemic. Higher education in the United States is suffering from falling birth rates and the coronavirus pandemic. According to the National Student Clearinghouse Research Center, undergraduate college enrollment fell 3.2% from a year ago. The number of international students declined by more than 8%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Supply chain problems are creating problems throughout just about every aspect of U.S. business right now. And when we talked with Union Pacific CEO Lance Fritz last week about the cause, he said it really comes down to workers.
The bigger issue right now is the labor force in the United States, and specifically getting more truck driver and truck capacity and getting more warehouse capacity through labor in our distribution centers. If I could wave a magic wand, if we could get more of our labor force into trucks and into warehouses, I think a fair amount of the problems would start clearing up.
We welcome now someone who has devoted her career to supply chains. Bindia Vakil is founder, chairman, and CEO of Resolink, which monitors supply chains for a lot of major corporations. So, Bindia, thank you so much for being back with us. You heard what Lance Fritz had to say. Is he right? This is fundamentally a labor problem?
That would be one way of characterizing it when you're involved in movement of products, but it's fundamentally a network problem. The network itself is experiencing so many different failure points. If you're a factory, for you, this is a raw material problem. If you're involved somewhere in that transportation chain, it's a labor problem. It's also a fundamental problem in terms of all this normal behaviors that we encounter in supply chain. It's a demand problem, if you will, because we're panic buying. Citizens are panic buying, companies are panic buying. So there's an inflated demand signal that's going around that's causing all kinds of chaos as well. So multiple issues, and it's a very complex network ecosystem, and there are multiple issues at different points depending on where you are in the chain.
Bindia, it's been going on for a while now. Certainly, semiconductors for a lot of us was the first thing that got our attention, but that's several months ago now. We've had the White House have a big summit. They've got ports working 24/7. Is it getting better?
It's not getting better, and in fact, it's going to get worse for a while before it shows any signs of relief. Port clogging is worse. We thought at 40 ships that was a record. Then we hit 70, and we thought that was a record. Then we hit 100. We are now seeing work in process inventory has begun to accumulate at different points throughout the supply chain. Finished goods that are not completely finished, waiting for a part here or there that can be sold. This is a pretty serious issue. issue because when you have inventory piling up like that, it ties up cash on balance sheets for companies that are already paying a lot more for their raw materials, a lot more for labor, and a lot more for their talent. And so this has caused a lot of profit and cash and balance sheet issues for many companies.
But is this a timing problem, if I can put it that way? That is to say, are we having a short-term issue that will resolve itself? And by the way, is it possible we'll have too much goods down the road because people are really, as you say, panic buying?
We are going to see some of that happen because as the supply chain starts to deliver things, we already saw in the automotive industry, companies have revised their demand forecast down, which means throughout that chain, that demand forecast is traveling, the signal is traveling down the supply chain. What this means is people had purchased inventory based on the previous forecast that are now going to have to disposition. If this takes root in a broader way, then we could end up seeing a halt in the brakes, if you will, for all the, across the sector. And this could, really jeopardize our growth momentum across the economy.
Bindia, is there a haves and have-nots here? Because we hear stories, have read stories about some of the very, very large firms, Amazon, I'll pick on Amazon, really doing extraordinary things to get goods delivered. Are the big companies at an advantage here?
Definitely, deeper pockets, lots of cash on the balance sheet always helps because you're self-insuring yourself to some extent against, the higher cost of operating your supply chain, the transportation and freight expedites. You might go lines down, but you have the ability to keep your people employed. You might have to pay 2x for a truck driver. You're able to make those payments. But for smaller companies, this can be a cause for financial distress. We're already seeing profit warnings come out from many companies that have reported financials, and we are expecting to see more of those types of announcements.
And finally, Bindia, we hear a lot of talk about the ports. We see the video of the ships lined up. But what about further upstream? Let's talk about China, for example, and some power problems in China. How does that work its way through the supply chain problem?
Very, very badly, I'm afraid, because if China cuts, power, and the factory of the world does not have power, which means that a lot of the products that we rely on as raw materials into our products, even if they were flown in from China, we still can't get them. Silicon, which is so critical for semiconductor manufacturing, output is getting reduced 52%. That has caused silicon prices to go up by 300%. So this is a huge issue, and there's a ripple effect. This signal does take a little bit of time to flow up through the supply chain, and I think we're looking at really serious troubles because of the energy crisis in China.
Bindia, it's always great to have you on when it comes to supply chains. That's Bindia Vakil. She's Resolink Chairman and CEO. Coming up here, we talk with Raytheon Chairman and CEO Gregory Hayes about his earnings out today, prospects for the aviation industry, and his issues with supply chains. This is Balance of Power on Bloomberg Television and Radio.
Bloomberg surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you look
drop
great.
The bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Extremely thankful. They don't know what to say. Again, they can't even fathom that they're out of Afghanistan. They're still in a state of shock and can't believe it.
process is essentially a mechanism for getting oppressed women and girls out of Afghanistan. So we're actually going to circle up and see what resources we have left, to see what options we have left, what mechanisms we have left, and actually look at potentially trying to get more women and girls out of the country as well.
We've been through a lot, us as a team. I know sleepless nights, but you know what? There's nothing more satisfying than knowing that you've saved many lives, and will continue to support these girls on their missions.
20 countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Raytheon Technologies released its third quarter earnings today, beating expectations on earnings while falling just a little bit short on revenue. And it raised its projected earnings for the year overall. Welcome now, Raytheon Chairman and CEO Gregory Hayes. So congratulations, Mr. Hayes. Thanks for being here. It sounds like you had a pretty good quarter. You're looking forward to some pretty good news coming down the pike. How much does that tell us about where aviation is headed?
First of all, David, thanks for having me on this afternoon. I would tell you it was a very good quarter all around in both our defense businesses as well as the commercial aviation segment. I think most importantly, we can look to the domestic traveler here in the U.S. for an indication that the market is recovering much more rapidly for commercial aerospace than what we had anticipated even 6 months ago. You had 1.6 million people cross the TSA check lines in the second quarter. That was up to 1.9 million in the third quarter. That's getting close to the 2.2 million that we saw back in 2019. So the recovery is real in commercial aero, and we're certainly benefiting from it.
Let's talk about supply chains, because we've heard from a lot of companies during this earnings season that that's constraining what they can do as a practical matter. Is it constraining you? And let me ask you, are you doing better on the supply chains front than maybe some other companies?
So we're not immune from the challenges of supply chain. In fact, we talked about this morning on our earnings call. The fact is, we'll probably see almost $300 million of lower revenues this year because we can't get material into our shops and we can't get the labor that we need to complete some things. So we are seeing an impact. I would tell you it's not, now $300 million seems like a lot of money on $64.5 billion of revenue. You know, it's a very small percentage, but we're managing through it. We've got 13,000 product suppliers out there. We've got another 27,000 non-product suppliers. They're all facing challenges just like we are, albeit on a bit smaller scale. So we're trying to stay on top of it, and we're managing through it. But supply chain problems are real.
Let me talk about another aspect, downstream from Airbus. Airbus is trying to really ramp up its production of the A320. Is it going to be inhibited because of some of these supply chain problems?
So I don't think it'll have a long-term impact on our ability to support Airbus. You know, Airbus is delivering roughly 40 aircraft a month today in the A320 family. There's talk of that going up to 75 in the next couple of years. I certainly think that the supply chain issues that we're seeing today will work themselves out. The question, of course, is will there be capacity in the supply chain to support rate 75? We think we can certainly do that in terms of our Pratt & Whitney business or our Collins Aerospace. But, you know, there probably will be further investment needed in supply chain to meet those kind of very lofty production targets.
Greg, let me talk about a different aspect of supply chain, if I can put it that way, and that's workers. Are you having difficulty attracting and retaining workers? Because a lot of companies are right now.
Yeah, I would say there's two sides to that question. Yes, we are having trouble attracting workers. We've hired about 6,000 people this year. We've got openings for more than 2,000 that we're still trying to fill this year, and it is a war for talent out there. We're pretty well positioned. I think we'll be able to fill all those jobs this year, but it will not be easy. I think the other piece of the puzzle that you have to keep in mind is this vaccine mandate. As a federal contractor, we're going to have 100% of our workforce vaccinated by December 8th. And we know there is a small percentage of folks who just will not get vaccinated. And that's going to create a headache for us probably in December. We'll manage through it. But it's also going to put pressure, I think, more on the supply chain for all the other federal contractors, not the size of Raytheon Technologies, but our second and third tier suppliers who also have to abide by the mandate. So labor shortages are real, and that's what's driving inflation, quite frankly.
As you look in the out months, out years, talk about the Boeing 787 Dreamliner. How much are you tied to that, and how much do you depend on the FAA really getting confidence in that airline? Are you shipping anything related to the 787 right now?
Today, I would say we are not shipping anything. We're on a temporary hold as Boeing sorts through some of the issues they've got with the certification process on the production line. So the 787 is a major revenue contributor to our Collins business. We earn about $10 million of revenue for each aircraft. So if you think about 2 years ago, 2019, Boeing was building 12 a month. It's now down to 5. We fully expect as international travel recovers in the next couple of years, traffic continues to grow, you'll see 787 production rates continue to go back up towards that 12. It won't happen here in the fourth quarter, certainly, and probably not even into next year. But got confidence in the Boeing company, their ability, first of all, to deliver the aircraft, but also to make sure that they deliver the aircraft to the FAA's very exacting standards.
So finally, Greg, let me ask about something that's very popular to talk about right now. That's hypersonic missiles and gliders. We've seen demonstrated by China now. My understanding is you have tested one of those now. What is the future of hypersonic for you and for the United States of America?
So I would say clearly the United States is behind the Chinese and the Russians as it relates to hypersonic weapons. We recently, for the first time, successfully tested a scramjet hypersonic missile, and hypersonic means something that goes more than Mach 5. It was the first time we were able to demonstrate to the Defense Advanced Research Project Agency, DARPA, and the U.S. Air Force that we could successfully fly that missile, which was great news. The Chinese, at least the reports from the Financial Times were, launched a hypersonic glide vehicle. This is a vehicle that goes into orbit and skips along the atmosphere as it circles the Earth. So we're talking Mach 5 or so for a hypersonic missile. A hypersonic glide vehicle is 22,000 miles per hour. So different technologies, same problem. How do you defend against them? And that's really, I think, our focus is we will have weapons to challenge the adversaries. But most importantly, I think our focus is how do we develop counter hypersonics, because that's where the challenge will be.
How important will that be to your business, do you think, going out 5 years, 10 years down the road?
I think it'll be a significant portion of our missiles and defense business, and there won't be one single answer. I think again, there will be a layer of defense to protect against hypersonics, but we clearly see this as the most destabilizing threat to the homeland, which is the employment of hypersonic missiles, because the time to react is very, very short. It's not like a long-range bomber or even an intercontinental missile. These things are going literally, through the atmosphere. If it's, again, even Mach 5, you don't have a lot of time. So we have to have automated systems to defend the homeland, and we are focused on that right now.
If you pay attention to the media, which I don't always recommend, you'd say that we're behind the Chinese. From what you know, are we behind the Chinese in this technology?
I would tell you we are behind the Chinese in terms of investment and the technology. We understand how a hypersonic glide vehicle works. We understand hypersonic missiles, how they work. We've demonstrated it. The Chinese, however, have actually fielded hypersonic weapons. They've tested the hypersonic glide vehicle. We are at least several years behind. We can't really, on this program, go into the classified nature of that threat. But I would tell you the threat is real, and we are behind.
Yeah, I certainly wouldn't want you to reveal classified information, but thank you so much. This has been very helpful. That's Raytheon Chairman and CEO Greg Hayes. Coming up, we hear from West Virginia Senator Joe Manchin on what it will take to get a deal on infrastructure and build back better. That's coming up next on Balance of Power on Bloomberg Television and Bloomberg Radio.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Earlier today, West Virginia Senator Joe Manchin talked with David Rubenstein. He's the co-founder, of course, of the Carlyle Group, as well as the host of Person to Person right here on Bloomberg. Talked to him at the Economic Club in Washington. And the discussion was about what it will take to get a deal on President Biden's economic agenda and what the negotiation process really looks like from inside.
We're all negotiating, and I think in good faith you have to keep all options open or you're not being fair with the other side. I think 1.5 was more than fair since we just did 1.9, since we just did another 1.2. And, when you look, I started looking and thinking about how much, I've never heard $1 trillion even used even when we had the meltdown in 2728. They got up to 800 billion, I think, in that neighborhood, 8 or 9. And then we thought it was outrageous. You'd have to spend this much money to keep us from a financial collapse. We talk about billions like chump change. Well, okay, and we talk now we're into trillions like it's expected. And I said, what did World War II cost us? What did the Marshall Plan cost in today's dollars? I was just curious. I don't know how they come to my mind. So I had one of my researchers check it out. They come back and they said, what do you think? And I said, I really don't know. 10, 20 trillion, I don't know. They said 4.7 trillion. We saved the world in World War II. We rebuilt Europe. On today's dollars at 4.7. We've already spent 5.4. And we're about ready to spend a heck of a lot more.
So the pay-fors for this bill that's either 1.5 or 1.7.
Whatever it is, yeah.
Whatever it is. There's been some proposals floated around. Do you have anything you can comment on, the taxes that might be imposed?
It's still floating.
But you haven't signed off on any...
I haven't. You know what? In this, I think, and the Senate's responsibility is we're going to do a deep dive, and we should do a deep dive, and that's why I've always said, when you do reconciliation and things such as this in such a manner that it's all partisan, you don't go through regular order. It doesn't go back to the committee. There's not a hearing. You don't have a chance for all of you to come in and testify and tell us what's working. This could have this ramification. Did you think about this? You think about... We don't have all the professionals. Basically, you just have a few staff from the leadership trying to put things together and massage it the way they want it. And I just thought that wasn't a good way. So do I think I know? I don't know. I went 25% on corporate net. I went 28 cap gains all in. I thought get rid of carried interest, some of the loopholes. I know you've been hearing this wealth tax has got everybody totally excited to a certain extent. And the only thing I've ever said about taxation, it should be fair.
The wealth tax, in your view, is something you're supporting?
The wealth tax, I don't know. I haven't seen the text on it. But the only thing I've said this, I'm all for a minimum 15% corporate. I think every corporation should pay a minimum tax in America. And I think every individual, no matter how wealthy you may be, everyone should participate. So when they start setting, well, if you're 250, there's nothing going to affect you if you make less than 250,000. Now it's 400,000. The way we're moving pretty soon, anybody's not a millionaire, don't worry, we're not fooling with you at all. We're going to get all these people up here. That's not America. Last time we had a balanced budget, last time we had surpluses, it was under the Bill Clinton, and that was Erskine Bowles and John Casey. Put all that together in 1996, 97. We spun everything off to where we had surpluses. We'd have been debt-free by 2006.
That was West Virginia Senator Joe Manchin speaking with peer-to-peer anchor David Rubenstein. If I said person-to-person before, David, I'm sorry. That was at the Economic Club of Washington. It happened just this morning. Check out the Balance of Power newsletter on the terminal and online. Today's top story is about how governments around the world are dealing with social media regulation. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk with Maya McGinnis of Committee for a Responsible Budget. We're going to talk about exactly what Joe Manchin was just talking about. How much are we going to spend? How we're going to pay for it, and whether that budget overall really works. This is Balance of Power on Bloomberg Television and on radio.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating. I am no Sinophobe, very far from it.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases, or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm Mark Crumpton with Bloomberg's First Word News. A group of experts who advises the Food and Drug Administration on vaccines is meeting today to discuss Pfizer and BioNTech's COVID-19 shot for kids ages 5 to 11. Data from the companies showed the shot was highly effective, and the FDA staff, the benefits probably outweigh any risks. The panel may focus on myocarditis, a heart-related side effect that has been seen in some younger men after getting the vaccine. House Speaker Nancy Pelosi says Democrats are at a decision point on what will be included and what will be left out of their economic agenda. Speaking after a meeting with House Democrats today, Speaker Pelosi said lawmakers are hoping to move forward with a sweeping social spending package and a vote on a separate infrastructure bill as soon as this week. President Biden is hoping to have an agreement before he heads to Europe. With their latest tax proposal, Democrats are going after an elusive target, U.S. billionaires. More than $5 trillion is held by Americans worth at least $1 billion, according to the Bloomberg Billionaires Index. Yet, as their wealth soared, their tax bills didn't rise by the same extent. Democrats are now weighing a, quote, billionaires tax, which would be an unprecedented annual levy on the investment gains of America's richest. European Union greenhouse gas emissions were 31% lower in 2020 than they were in 1990. The European Commission says that was due to the pandemic and carbon policies. Meanwhile, for the first time in the EU, renewables overtook fossil fuels last year as the main power source. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 1 p.m. in New York, 7 p.m. here in Berlin, 1 a.m. in Hong Kong. I'm Matt Miller. Welcome to Bloomberg Markets. Here are the top stories we're following for you from around the world. Another big day for big tech and really for the markets. We're going to preview what to expect from today's earnings after the bell. Microsoft, Twitter, and Alphabet, or Google, all report. Plus, we're going to get a glimpse into the market for combating age-related diseases with James Pyre, the CEO of Cambrian Biopharma, which just closed a $100 million Series C funding round. And later in this hour, we're going to go just outside of Silicon Valley to Napa Valley and speak with the CEO of the famous Silver Oak Winery. David Duncan talks to us about the state of his business amid inflationary pressures and the supply chain and labor crises. First off, let's take a quick check at what's going on in markets, and we have a new all-time high on the S&P 500. 4576 is a level we're trading at now. We were trading around 4,600 for much of the session, so we've given up some of the gains, but we're still up there. The U.S. 10-year yield coming down to just under 162 at 161.67. The dollar right now, little changed at 11.57, and NYMEX crude gaining almost $1.91 to 84.67 a barrel. But the real focus is on technology. Twitter, Microsoft, and Google all report earnings after the U.S. market closed today. Joining us for a preview of what to expect is Angelo Zeno, CFRA analyst. Angelo has a buy rating on Twitter with an $85 price target and a buy rating on Google with a $3,200 price target. And Angelo, I guess safe to say you could have had a buy rating on any of the mega cap tech stocks. They've all done very well. Why do you think they continue to outperform even in the face of, regulatory concerns as well as inflationary pressures?
Yeah, and if you kind of look at year to date, clearly Alphabet has been the big winner among the group, among the big FANG names out there. But when we kind of think about just what we've seen in the last couple of days, I mean, Snapchat clearly came out there last week and rang some kind of alarms out there in terms of what's going on within the social media space, specifically as it pertains to ad tracking and Apple's iOS upgrade there. Clearly Alphabet is not as exposed there as you would imagine relative to kind of the Snapchat as well as the Facebooks out there in the world. But our view here is yes. I mean, there are significant regulatory concerns out there, as well as what I just highlighted on the iOS side of things. And we do expect growth to decelerate here in the coming quarters. So it all depends on the type of investor you are out there. But if you are a true long-term investor out there, this continues to be just a great place to be overall, and that's big cap tech.
If we look year to date, you're right. Google has been the big winner overall. Google, I mean, if you take out Tesla, obviously, from any of these calculations, Google has beaten out Facebook, Apple, Netflix, Microsoft, and Twitter, especially Twitter. It hasn't done nearly as well. It's still up 13% year to date. Why is it lagging?
Yeah, no, I think that's a great point. I think, it's in our view, I mean, it shouldn't be lagging. We do continue to believe in the shares here over the long term. We do think this represents, a fairly attractive entry point for investors out there, despite the concerns out there in terms of the iOS ecosystem. So our view is, listen, it's underperforming and unjustly so. So we would be buyers of the shares here at this point.
Microsoft has done very well, up 40% year to date. I mean, Google kind of distorts the picture as well with a 60% gain this year. But if you look back over a 5-year view, Microsoft is the leader of the non-Tesla big cap tech stocks as well. Is Satya Nadella, you think, going to continue to outperform? I mean, this guy's got to be in the Hall of Fame.
Yeah, I mean, as far as Microsoft is concerned, I mean, you look over the last decade and clearly we've seen that kind of multiple expansion story out of Microsoft. But, naturally, we've also seen some nice earnings growth coming out of the company here as well. But when we start thinking about broader tech in general and really, what probably the most attractive the most attractive growth story here over the next kind of 5-10 years, it really has to do with kind of on the enterprise side of things, enterprise software. And that's kind of the bread and butter of Microsoft, of what Microsoft is all about. So whether or not Satya Nadella can continue this, we think absolutely so. And in fact, it probably is our strongest conviction call in terms of our recommendations. We do have a strong buy recommendation on the shares. So we like it a lot. We think on any type of pullbacks, investors should definitely be buying up the shares.
Are there any areas that you think are overvalued? I think of one car maker that has had an incredible order over the past couple of days, but I'm still not sure if it should be worth more than $1 trillion. Does it make sense to you, everything in the big cap tech space?
Yeah, I mean, as far as Tesla is concerned, our analyst does have a hold recommendation on their shares. So, I mean, to your point, we do have concerns about the valuation of the company. Clearly, when you think about the growth story of Tesla over the next decade here and whether or not they can kind of continue that 40-50% top line growth rate, I mean, that's really the story as far as the company is concerned. And we do have concerns on the valuation side of things, but there's no way we're going to tell investors out there to short it or even not own the shares, to be honest with you, because of the growth potential of the company. When we kind of look at maybe some concerns within the market out there or within the tech side of things, we definitely are more optimistic, I'd say, on the software side of things than we are on the tech hardware or supply chain side of things. Clearly, supply chain has been a great area to be in over the last 6 to 8 quarters. But as the cycle gets longer in the tooth here, typically more of the kind of semiconductor-oriented names start to underperform, and they're going to lap some very difficult comparisons over the next kind of year. So as a result, outside of a name like NVIDIA, which could probably grow through some of the concerns out there, we would probably start to lighten up on some of the chip-oriented names.
Yeah, I mean, Apple has been the clear underperformer of the whole group. It's only gained about 12, almost 13% year to date, and they face, I guess, the biggest headwinds with regard to the supply chain. How much longer do you see those headwinds persisting?
At least through the holiday selling season. I mean, our concern, or our belief was you would kind of hit max pain point in terms of the supply chain issues kind of in the second half of this year, and that's exactly what you're seeing. We would expect as kind of some of the demand side of things start to decelerate into early 2022 as consumers start to focus maybe outside of technology purchases as we go through 2022. I think at that point we start to see some sort of flexibility or available capacity out there for a lot of companies out there, whether it be an Apple or other aspects of some of the supply constrained areas, semis, specifically the automotive type of end market.
Let me finally get your take on inflation. There was an interesting discussion between Cathie Wood of ARK and Elon Musk of Tesla on Twitter, and her argument is that with innovation in everything from AI to the human genome, that's really a deflationary force. What do you think about inflation, Angelo?
Yeah, I mean, to be honest with you, listen, you're talking to a tech-oriented guy here. So, given where my roots are, I would actually side with Cathie Wood on this. I mean, we do believe that tech is just naturally deflationary in nature. It historically has been. Whether or not you're looking at an iPhone or whether or not you're looking at, let's say, kind of the food supply chain out there, but tech in general has definitely kind of been deflationary in nature. And even if some of the transitory issues that maybe we highlighted on the semiconductor side of things, we do think some of that does dissipate just naturally as kind of the cycle starts to cool. So our view is over the next couple of quarters, you do see some of those inflationary pressures start to ease. Now, of course, there are definitely some more permanent aspects of the inflationary kind of commentary out there, specifically as it relates to just higher pay rates out there. But from a broader side of things, me being more tech-oriented in nature, I would absolutely side with the Cathie Wood commentary out there.
Angelo, great to get some time with you. Thanks so much for joining us. Angelo Zeno of CFRA there on the Big Tech Week. Let's get to that story that really caught my eye this morning, the back and forth on Twitter about inflation. The debate involved actually three notable names, starting with Jack Dorsey of Twitter, who said last week that hyperinflation is going to change everything. He said it's happening. That drew the attention of Cathie Wood as well as Elon Musk. As part of the debate, Musk wrote yesterday, I don't know about long term, but short term, we are seeing strong inflationary pressure. And Wood answered by partly by saying that new technologies are going to help bend the curve on inflation, despite recent supply chain bottlenecks related to COVID-19 and oil supply constraints. She pointed out she is doubling down on her deflationary outlook, and it was a really interesting conversation to follow. Maybe that is just one of the big benefits of Tesla. Coming up, of Twitter. At Tesla as well as ARK. Coming up, Senator Joe Manchin of West Virginia says that taxes need to be fair and all options have to be kept on the table. As Congress looks to agree a spending deal, you'll hear from him next. This is Bloomberg.
Natanggap ko po ang inyong nominasyon sa akin bilang kandidato sa pagkapangulo ng Republika ng Pilipinas. I am a fighter, and I will always be a fighter inside and outside the ring.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Virus is here to stay for quite a bit because has been spread all over the world and has this ability to create mutations and variants.
This is Bloomberg Markets. I'm Matt Miller. After months of trying to get the U.S. infrastructure bill passed, Senator Joe Manchin still remains skeptical on many parts of Biden's economic agenda. Earlier today, he sat down with David Rubenstein, co-founder of the Carlyle Group, at the Economic Club of Washington, D.C. to discuss whether he supports a 15% corporate minimum tax.
I think, and the Senate's responsibility is we're going to do a deep dive, and we should do a deep dive, and that's why I've always said, when you do reconciliation and things such as this in such a manner that it's all partisan, you don't go through regular order, it doesn't go back to the committee, there's not a hearing, you don't have a chance for all of you to come in and testify and tell us what's working. Did you think about this? You think about, we don't have all the professionals. Basically, you just have a few staff from the leadership trying to put things together and massage it the way they want it. And I just thought that wasn't a good way. So do I think I know? I don't know. I went 25% on corporate net. I went 28 cap gains all in. I thought get rid of carried interest, some of the loopholes. I know you've been hearing this wealth tax has got everybody totally excited to a certain extent. And the only thing I've ever said about taxation, it should be fair.
The wealth tax, in your view, is something you support?
The wealth tax, I don't know. I haven't seen the text on it. But the only thing I've said this, I'm all for minimum 15% corporate. I think every corporation should pay a minimum tax in America. And I think every individual, no matter how wealthy you may be, everyone should participate. So when they start setting, well, if you're 250, there's nothing going to affect you if you make less than 250,000. Now it's 400,000. The way we're moving pretty soon, anybody's not a millionaire, don't worry, we're not fooling with you at all. We're going to get all these people up here. That's not America. Last time we had a balanced budget, last time we had surpluses, it was under the Bill Clinton, and that was Erskine Bowles and John Kasich. Put all that together in 1996, 97. We spun everything off to where we had surpluses. We'd have been debt-free by 2006.
That was Senator Joe Manchin of West Virginia speaking with David Rubenstein, Carlyle Group co-founder at the Economic Club of Washington, D.C. I think pretty much everybody in the world who's following U.S. politics and spending plans right now does know how important Joe Manchin is, the swing vote, so to speak. Still ahead, can the fountain of youth be found in a pill? We'll talk to James Pyer, the CEO and founder of Cambrian Biopharma, which is working on treatments for age-related diseases. This is Bloomberg.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
This is Bloomberg Markets. I'm Matt Miller. Let's turn to Silicon Valley's search for the fountain of youth right in the heart of the Big Apple. Cambrian Biopharma has just closed a $100 million Series C funding round to help develop therapeutics for age-related diseases. Joining us now is James Pyer, the CEO and founder of Cambrian Biopharma, and he comes to us from our studios at 731 Lex. James, it's a fascinating topic, obviously has been since even before Ponce de Leon, but tell us exactly what you're working on.
Thanks for having me, Matt. Yeah, so there has been a revolution in the last few years in understanding what the real causes are that drive the things that make us sick and ultimately die of aging and age-related diseases. And there are about 13 different topics that we focus on within Cambrian, each of which has the potential not just to treat these diseases, but actually to prevent them. And if we're ever going to create a cure for a disease like cancer or Alzheimer's disease, it's going to happen by really getting to that disease before we get sick. And that's the theme of all of the drugs that we're producing here at Cambrian.
So what's our best hope right now?
So aging isn't caused just by one thing. I like to think of it almost as a systems collapse, right? There are so many different things that go wrong with us little by little as we get older. And as that happens, one thing will eventually break and cause us to get sick first. But in order to make someone live healthier longer, for example, healthy lifespans beyond 100, we are going to need to fix a lot of different things, bit by bit, with a whole series of different drugs. And that's why we have not just one, but 14 different programs under our umbrella at Cambrian, partnered with different researchers all around the world. And by combining those 14 different breakthroughs together, we think we can make really good medicines for individual diseases in the short term, and in the long term create a solution to let people live not just a few years or a few months, but decades longer healthily than they're living right now.
So you have a PhD in stem cell biology. It's not like you're a Wall Street guy who's dipping his toe in pharma, really I guess the other way around in a sense. How do you do a clinical trial on the kind of drugs that are in your pipeline?
It is, I think, the key question that you've just asked. And this whole field, in order to reach its potential, right, really needs to have a way of getting to the market as fast as we can possibly do it. And so the way that we do this at Cambrian is you have an individual breakthrough, a drug that could be a treatment for one of the causes of aging and age-related diseases, and instead of running a trial right away in healthy older people, which is super hard to do, we find a disease that drug can be a treatment for today, show that drug can be safe and effective at treating that disease, and after you have that safe and effective drug, then you can reposition that drug and say, hey, look, now let's take this safe, effective thing and treat healthy older people to prevent disease and approach that disease proactively instead of reactively. So it's a two-step process. We call it the stepping stones to get to treating aging.
So Silicon Valley millionaires and billionaires famously have been chasing this holy grail for a long time as well. Does that make it easier for you to get funding?
It certainly doesn't hurt. I mean, as we approach this general topic, right, of what we're going to do about the age-related diseases that are killing 42 million people every single year, right now, if you go to a doctor and ask, what are you going to do about, or what can I do to stay healthier longer? Doctors can say two things, right? Have a good diet and exercise regularly. But even if you're, a vegan yogi, you have a 90% chance of dying before your 100th birthday. And I think Silicon Valley is famous for recognizing where the world is going way before we get there, and building that future. So it's not an accident that we have some investors that were the first investors and key players in Tesla and SpaceX and other companies that were way ahead of their time. But this revolution in longevity, it's something that's really happening globally. And so we've been able to work with groups across the US and also in Europe. We have 100 people working across 4 continents to bring these drugs into patients.
This is, I know you studied it in Texas, but when I think of the cutting edge of medical research, I think of the East Coast, Johns Hopkins, and of course, Harvard and Yale. Where's the most important work or the best work being done?
So we actually have forged partnerships with many of those institutions. But there's something interesting that happens in academia, which is that all of the greatest professors aren't just holed up in Harvard or Stanford or Hopkins. They're actually spread over institutions, great institutions, all across the US and also all over Europe. The biggest challenge that we've seen from the kind of the intersection between breakthroughs at the research side and development of drugs and funding of the development of drugs is, do those research groups have access to capital? Which is why we've been able to work with these early stage scientists that have made some fundamental breakthrough and then create a drug development program under the Cambrian umbrella for those groups. And it's really been, a great way to bridge this gap that's sometimes called the biopharma valley of death, where so many innovations come to die.
James, it's a fascinating topic, obviously. I hope we can get you back on. James Pyre there, Cambrian Biopharma Chief Executive Officer and Founder. This is Bloomberg.
Something wrong with her eye. When I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone. And I couldn't get one anyway for like another week. I was just quite worried about, the complications of leaving it for so long.
We've seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
it is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
Supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I'm Mark Crumpton with Bloomberg's First Word News. Democrat Terry McAuliffe distanced himself from President Biden earlier this month in a bid for more votes in the closely fought Virginia governor's race. Now, as polls show an extremely tight race, the former Virginia governor is counting on the power of the presidency to give him an edge in the November 2nd vote. McAuliffe is planning a campaign appearance with the president tonight. It comes just weeks after he blamed Mr. Biden's sagging approval ratings for his own slump in the polls. The United States will expand visa processing efforts to accommodate an expected spike in applications under a new policy that loosens restrictions on vaccinated travelers. The U.S. will open its borders to fully vaccinated people with recent COVID tests next month. Visa delays mounted throughout the pandemic as consulates closed, creating a backlog that could be made worse if applications pick up because of the new policy. Iran says cyber attackers were behind a major disruption at gas stations across the country today. Officials say hackers infiltrated the software that supports a subsidized card payment system used by millions. State-run media in Iran says the disruption may have been timed to coincide with the upcoming anniversary of widespread and violent protests that erupted after the Iranian government raised fuel prices in November of 2019. The United States and Chinese governments have made some incremental progress in their economic and trade negotiations. Treasury Secretary Janet Yellen and Chinese Vice Premier Liu He held their second call in about 4 months. Beijing described the conversation as pragmatic, candid, and constructive. China has repeatedly said the U.S. should lift tariffs on Chinese exports imposed during the Trump administration. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Hi, I'm Amanda Lang. Welcome to Bloomberg Markets.
And I'm Matt Miller. Welcome both our Bloomberg and our BNN Bloomberg audiences each day at this hour. Here are the top stories we're following for you from around the world. U.S. sports betting giant DraftKings jumps in trading after a potential $22.4 billion merger unravels. We'll bring you what's moving on the back of those failed talks in our stock of the hour. And we're going to take a look at the global economic picture as companies in the world's second largest economy face record defaults and China looks to clamp down on excessive leverage. Plus, we go from Silicon Valley to Napa Valley and speak with the CEO of Silver Oak Winery, David Duncan, about the state of his business amid labor shortages. Amanda, I am looking forward to that discussion.
That will be interesting. Quick check on the averages here, Matt, and we are seeing something of a mixed picture. That NASDAQ has been in and out of positive territory today. We're back into positive territory. For the S&P 500, it tells the story a little bit because the fastest moving subgroup is utilities today. So still a preoccupation, and we'll get a read on inflation this week. But also a lot of focus on the individual earnings stories that we're seeing, and there are some big swings in that regard. One of them, of course, is Facebook today. It is trading lower on the day, but it's interesting to note that as part of its earnings report, Facebook, of course, said it's upping its CapEx, and Bank of America says today that will benefit chip stocks, and most particularly NVIDIA. And NVIDIA is going for a big ride as a result of that on the day today. Lockheed Martin down really sharply, 11% last time I looked, Matt, on the outlook that it's facing slower sales in 2022. So we're definitely seeing some big moves based on individual stories. And, of course, one of those individual stories that might cause some moves is is our stock of the hour. DraftKings has decided that a $22 billion bid for Entain was not worth the odds, but analysts think that the run in sports books is not over. Our Kriti Gupta has a look at this deal. Kriti, over to you.
Well, Amanda, Entain, $22.4 billion. Really interesting to talk about the fact that this is the owner of Ladbrokes and Party Poker over in the UK. For those of you who aren't familiar, this is the firm or the company that used to actually own Hilton Hotels brand outside of the United States in the late 1990s and the early 2000s. Now, really much a big target for a gambling company. Really important to talk about the fact that Entain has actually rejected a bid from MGM earlier in the year, $11 billion. So the $22.4 billion was quite the figure that they were, of course, after. This is going to be crucial, especially as we start to see more M&A after the Supreme Court really let sports betting expand in 2018 outside of Nevada. Let's talk about DraftKings in particular, though, because this is a booming business after all. In just 3 years, revenue expected to hit $3 billion. Let's put that into some context. That's essentially 1 year of ad revenue for LinkedIn. So really important to talk about the fact that sports betting is a growing business, and this is why it's such an important target. But M&A, this is just the latest in a whole year of where you start to see that. DraftKings has been on quite the tear when it comes to acquisitions in particular. In the last year, they've actually already had 2 acquisitions. So Entain was just going to be potentially the third one, and that's really where you can see DraftKings trying to get bigger and bigger. I really want to end here and talk about the market reaction, though, because the casinos have actually been doing quite
Can I just jump in first of all and commend you for saying acquisition, because the term merger is just so wrong for this kind of combination. I find it hard to believe that any combination can really be called a merger. I was raised in the Daimler-Chrysler era, but certainly it has to at least be pretending to be a combination of 2 equals, right? DraftKings was going to buy Entain. This was not a merger at all. So now, tell us after that rant about how the gaming industry has reacted.
Indeed, an acquisition DraftKings was, but it's not anymore. Now you're starting to see them walk away. And remember, I said Entain was a really big deal for the casino kind of industry. It was actually a target. So you are seeing this going to be rising in sympathy with DraftKings shares. What isn't doing so well, though, Matt, is going to be MGM. And the reason why is because they already have a joint venture with Entain. So when Entain lost a little bit of that potential deal, MGM shares down on sympathy.
All right. Thanks so much, Kriti. Appreciate it. That's our stock of the hour and our Kriti Gupta. And for what it's worth, Bloomberg Business Week analysis of 15 global cities and how they rank for women, particularly career women, shows there are failings for all of them. Matt, I'm happy to say, though, that Toronto was ranked first. Before we get too excited, the score was a 3.66 out of 5. So clearly some ground to cover. Your town, Berlin, 6th. Sao Paulo, last, a total score of 2.68. Now, the narrow lead Toronto shows is because of high marks for equality and also good ratings on maternity and wealth. Poor mobility score, that's actually traffic, aging subway systems, things that make kind of quality of life deteriorate. But it's interesting to see this data trying to be gathered and compared. I don't know how we use it. I don't know whether this will change anything, but it's definitely interesting to see what life is like for women in different cities.
Yeah, well, I mean, I do have to say I've been struck by the lack of gender equality in Germany ever since I moved back here in 2016. Spiegel did a big, long report on it, and you would expect this modern kind of socialist society to lead the way in gender equality, but Germany really doesn't. That's not a surprise. The surprise to me is the safety issue. I mean, I can't imagine many large cities being any safer than Berlin. On the other hand, probably as a man, I'm just completely ignorant to these kind of safety issues because even in a dangerous city, I don't really feel that threatened. So I think it's a fascinating, really an eye-opening story and a fascinating perspective that a lot of men need to get their heads around.
Yeah, it's interesting. And, you know, of course, the stats in terms of the percentage of women that make up managerial roles are always worth looking at. All of these things more complex than the surface would allow. I'm fascinated, obviously, to be reminded that Europe, which can seem so progressive politically, can still be a little less so in the corporate boardroom. We know that's true in other countries of Europe as well. But interesting to hear you say that about Germany.
Yeah, well, hopefully that's changing. Certainly a lot more focus has come to this issue during and post-pandemic, if we can say post-pandemic yet. Coming up, Beijing urges the billionaire founder of Evergrande to use his personal fortune to pay down company debt. He must have seen that coming. We'll have the latest on the evolving crisis next. This is Bloomberg.
TV in Facebook since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I'm playing almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. I'm a little bit worried about it because some people who join this Axie Infinity thinking that this is an easy money game, they can earn a lot on this game, this game can sustain their life, and I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for even 5 years, I think.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is Bloomberg Markets. I'm Matt Miller with Amanda Lang. Now, China is telling the billionaire founder of Evergrande to use his personal wealth to alleviate the property developer's deepening debt crisis. Bloomberg has learned that Beijing's directive came after Evergrande missed an initial September 23rd deadline for a coupon payment. Here to discuss this and more is Bloomberg New Economy editorial director Andy Brown. Andy, I can't say that this is surprising. I mean, Evergrande has plunged Chinese property developers, in a sense, into a crisis. This guy can't expect to be let off the hook, right?
Yeah, exactly. So this is the final chapter in the Hui Ka-Yan's
rags to riches story. He grew up dirt poor, ended up as one of the richest real estate developers in the world. At his height, he was worth $42 billion, and it now looks like it's going to be a rags to riches, back to rags story. They're going to clean him out.
In terms of the situation right now, how does it look? Because the big concern obviously was contagion, and we've started to see that.
Well, you are seeing contagion. You're seeing other real estate developers getting into trouble, but of course, none are in deeper trouble than Evergrande, which has got debts of $300 billion. And even if you clean out the founder of this company, it doesn't get you very far. Nobody knows quite what he's worth. Probably we think, Bloomberg reporters think that he's worth something around $8 billion. But you know, he is in a dangerous, risky position right now. He is in the crosshairs of President Xi Jinping's campaign to build a more egalitarian society, what he calls common prosperity, just when that campaign has reached a critical phase, which is when he's trying to figure out what to do about the biggest driver of inequality today, which is the real estate market.
Well, he's not the only one that, I mean, everybody in not only China, but globally is asking the question, what does this mean for my business, for our industry, for the economy? And you've got a conference coming up. I assume that this is going to be, the main topic on your agenda. Tell us about your conference.
So we're bringing together 300 or so of the world's most influential business and government leaders to Singapore. Singapore are using us to demonstrate that they can reopen their economy safely. And for sure, one of the major topics is going to be China and the outlook for the Chinese economy. And real estate is going to be a part of that conversation, because there's no question that whatever decision they make on how to tackle the real estate conundrum in China, growth is going to suffer. And if growth in China suffers, then the countries that sell into the China story, most particularly in the case of real estate, commodity producers, including Australia, Brazil, and others, are also going to take a hit.
And of course, we do know that there is this sense, as you said, that Xi needs to take control of this and show that he is doing so. In many cases, doing the right thing politically and doing the right thing economically can line up. If you sell it properly, it can be popular to do what's right. Is that likely to happen with the reforms that are needed here?
You know, President Xi has an awful dilemma. Because if he wants to bring down the price of real estate, he also has to bring down the price of land. High land prices account for high property prices. The problem is that local governments are dependent on land sales for their revenues. How's he going to replace those lost revenues? Well, one idea is a property tax, and he's talked about this, and they're going to trial it. The problem is, if you make that tax too high, you tank the property market and you destroy the wealth of Chinese middle classes. That's where the wealth of China has been invested. And if you do that, you're going to end up with enormous social unrest. So they're going to have to calibrate this very, very carefully. But the first act in this drama is going to be to take down the chairman of Hui Kai-yen. He's going to be a scapegoat for a lot of the problems that afflict the property market in China, even though, of course, he was merely a part of a state capitalist system which has given rise to this incredible inequity within Chinese society.
It is fascinating. Great to have you with us for this, Andy. Appreciate it.
Thank you.
That's Bloomberg New Economy Editorial Director Andy Brown. And check out the New Economy Daily from Bloomberg Economics that's focused on what's driving the global economy. You can sign up for the New Economy Daily newsletter at Bloomberg.com. Coming up, no time to let it breathe. Wine is flying off the shelves this holiday season. We are talking to Silver Oak Cellars CEO David Duncan on how the pandemic has changed the wine we drink. That's next.
Engine Number One was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year. Yeah. And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Markets. I'm Amanda Lang alongside Matt Miller. And with the holidays fast approaching, demand for wine is still skyrocketing. That is not new. It comes at a time, though, that the industry is being hit by supply chain bottlenecks and food price inflation. And, of course, let's not forget extreme weather causing a bit of damage to crops. David Duncan is the CEO of Silver Oak, one of California's most iconic producers. Great to have you with us, David.
Thanks so much.
So let's just start here with the trends that we've seen. I mean, we definitely know that through the pandemic, stay at home turned out to mean drink at home. But what are you seeing as lasting trends at the higher end of the wine spectrum? What do people want these days?
Well, I think one of the things that happened during the pandemic was people, had additional spendable income because they weren't spending money on going on trips and flights and airplanes and hotels. And there was sort of this flight to quality that if you were going to open a bottle of wine at home, you were going to open something great and enjoy it with your family and friends.
What is the labor crisis, the shortage of workers, the supply chain issues? What does all of that mean for wine producers right now, David?
Well, I think in the U.S. wine industry, we just finished harvest. We didn't see a lot of big labor problems. I think we're facing, the industry in general is facing the same kind of labor problems that the hotel industry is, hospitality, restaurants. Finding people to work in the tasting rooms and enjoy those moments with our customers is definitely become a bigger challenge.
I mean, shipping is my main concern, right? I'm going home to Granville, Ohio for Thanksgiving. Am I going to be able to find Silver Oak in our local stores?
I think, Matt, that we are really on top of that from a Silver Oak standpoint. I think for the industry, for the country at large, obviously supply chain is a huge issue. I was reading this morning that there are 100,000 trucker jobs available. But we do our own fulfillment at the winery. So our direct-to-consumer, getting wine into people's hands in their homes is still something that we're able to do pretty successfully.
One of the observable trends in the last couple of years has been that U.S. wines, but especially California wines, David, got very expensive. The really high end of that market got really, really pricey in ways that a lot of people hadn't expected or seen before. Will that continue? Is this sort of a new maturation for the region?
Yeah, I really think, California wines, Oregon, Washington, these North American regions are really coming into their own. And, for so long, people were chasing the old world and thinking about, France in particular. French wines, by comparison to California wines, are way more expensive at the high end. So California wines remain an excellent bargain. And I think the industry in general has done so much work to improve quality. And so I do believe that you've got a great value proposition and you're getting what you're paying for, for Napa, Sonoma, California wines in general.
I want to talk to you about some of the extreme weather you've been dealing with, extreme events. You've got fires going back to 2017. We've got really recent heavy weather. How is that affecting the grapes, and what years, how will the different years be affected over the past, say, 4 or 5 years?
Well, I came from California yesterday, so I sat through the storm this weekend, and we got as much rain over the weekend as we got in the entire rainy season of last year. So it was pretty crazy. But I think, we're super happy that fire season's over this year. That is completely done. And hopefully we'll have a pretty normal pattern. That's what the sort of long-term forecast says. I think we made it through a year without any fires that really affected, Napa and wine country. It affected our state in a really big and meaningful way. And having been through that personally, I feel for the people that lost their homes and lives. But I think we're getting on top of it. There's so much activity that's happening in the industry, particularly in Napa Valley. I'm on the board of the Napa Valley Vintners and serve on our Firewise committee. And there's just a lot of work that's being done by a lot of people to, mitigate fires, to prepare and think about it in a whole new way.
What's interesting to me about Silver Oak, and you were talking before about how you deal, in a sense, with your own logistics, and I know that your dad, Ray, founded the business so that you would have your own, you're the only, I think, winery with your own American oak cooperage there. Why is Silver Oak so self-sufficient? How did you realize that was the right way to run it even before we had things like the COVID pandemic come along?
I think for Silver Oak, we are all about what is in that bottle of wine and quality. And so controlling our grape supply chain was a way that we started by acquiring vineyards, making sure that we could grow and produce wines that were excellent, would always be in our bottle. I think the cooperage was the next thing, was to be sure that we could produce barrels that, would be of excellent quality for our American oak style of wine. And we're joking now about making our own glass, but I don't think that's going to happen.
It's great to have you with us, especially ahead of the holidays. David Duncan, CEO of Silver Oak, thanks for that. And that does it for us. Matt Miller, I know that you are a fan. Sounds like you might even be partaking of some Silver Oak in the upcoming holidays. I hope you enjoy.
I'm very thirsty. Maybe in the upcoming hours even, Amanda.
You know what? It's an evening in Berlin. Enjoy. Matt Miller, have a great day. I'm Amanda Lang. Stay with us.
So the 1972 Madison Square Garden eyelet jumpsuit, which is arguably, from what we're finding out, probably one of the most important jumpsuits of Elvis's entire career. So it marked so many milestones, really, for him. It was used for an album cover. It was used when he performed Madison Square Garden, and he was the first performer to ever sell out 4 nights straight in Madison Square Garden. So he really started that whole thing that we see now in pop culture, where when you make it big, you do Madison Square Garden. So we're super honored to have it. I can honestly say that COVID has been unbelievable for internet-based and e-commerce businesses, because we have a captive audience. We have people home that really want something to do and need entertainment, so we do our best to try to give it to them.
20 countries, Francine, that are the equivalent, that equal 80% of all the emissions. Those 20 countries, above all, have to step up.
So Fauci and his team shared data about mixing vaccines. The vaccines can be mixed safely, and that's very good for people who got not Moderna vaccine, but want the Moderna vaccine for a booster because it's of a higher dose.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. House Speaker Nancy Pelosi says Democrats are at a decision point on what will be included and what will be left out of their economic agenda. Speaking after a meeting with House Democrats today, the Speaker said lawmakers are hoping to move forward with a sweeping social spending package and a vote on a separate infrastructure bill as soon as this week. President Biden is hoping to have an agreement before he heads to Europe. Law enforcement officials in the United States and Europe have arrested 150 people and seized tens of millions of dollars in an international drug trafficking investigation stemming from sales on the darknet. The Justice Department says the arrests are connected to a 10-month investigation between federal law enforcement officials in the U.S. and Europol in Europe. Investigators seized more than $31.6 million in cash and virtual currency, as well as 45 guns. Risks related to COVID-19 and the economic havoc it wreaked across the world are keeping corporate executives up at night. That's the takeaway from a new Aon survey of more than 2,300 risk managers and other executives conducted in the second quarter. Cyber attacks were the #1 most cited hazard. More than half of the top 10 risks executives say they face today are tied to the pandemic. Singapore is taking another step toward reopening borders and reviving its economy. The country will allow fully vaccinated people arriving from Australia and Switzerland to enter without having to quarantine starting November 8th. Singapore recently opened so-called travel lanes with 10 other countries, including the U.S., UK, and Germany. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
It is 2 p.m. in New York, 7 p.m. in London, and we are live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Taylor Riggs. And I'm Sonali Basak, in for Romaine Bostick.
And he misses equities trading yet again at record highs. U.S. stocks in the green, just about. This is earnings, they trickle out. Twitter, Alphabet, Microsoft, they all report after the closing bell. Stick with us, we're going to count you down. Plus, we dive deeper into the results from industrial companies like GE, 3M, Lockheed. They're all report. And how is the global supply chain crisis clouding their outlook? We'll discuss. And then let's deep dive into the global economic picture as companies in the world's second largest economy face record defaults. That's as China looks to clamp down on excessive leverage. Well, that, so much more coming out this hour. But first and foremost, let's check in on those record highs, guys. S&P 500 just inching that much further higher. Europe closed basically just close to a record high over across the pond as well. The mood music is bullish. We have some pretty strong data coming out. And I know Taylor will be running us through some of the statistics there. But therefore, are we in search of a haven? The dollar pushes higher, but the yen is out of vogue. And we're seeing, what's that, a flattening yield curve, Taylor?
Very interesting, Caroline. I know that I'm going to get into the two-year bond auction a little bit later, all as we push forward to what yields mean, Sonali, for some of the big tech earnings, and then we continue to push forward to a Federal Reserve next week. But interesting that today, I think all eyes, unfortunately, not on the bond market. We go all equities.
Yeah, we go all equities, and there's a few other names we'll be looking out for, like Robinhood, where people are expecting a bit of a revenue moderation there. You have backed another retail favorite, rose to more than 200% yesterday, down more than 20% today.
Let's get into it, you guys. We start, as we always do, with some of the economic data. As Shonali points out to some of the earnings, of course, that we're awaiting after the bell. Let's do this first with consumer confidence. Very interesting. Caroline, you got an improvement on consumer confidence. We haven't seen that in a little bit. Improved up here to 113.8. That's ahead of last month and ahead of expectations. The present situation improved, and it improved despite the fact that 1 year ahead inflation expectations, yes, they now rise to 7% in October. I'm going to let that number digest with you, what 7% means.
Is your burrito 7% more?
Yeah, it is. My kale and my cauliflower rice is too, but we get ahead of ourselves. The 2-year auction does not get ahead of itself. We had a $60 billion bond auction an hour ago. This was as the markets are already pricing in 2 rate hikes in a pretty rapid rise. Very strong demand, Caroline, 80.4% going to non-dealers and a really strong bid to cover ratio. So this is as yields, at least here on the 2-year, they're climbing a little bit higher. Really interesting as we push forward to a Federal Reserve.
And we push forward to an equity slant on all of this with Anna Han. She joins us from Wells Fargo Securities. She is, of course, a key equity strategist that we love to have on. And Anna, in this scenario with new record highs, where are we in this great rotation? Because I can't work out whether we're meant to be moving into tech, out of it, whether we're liking industrials, whether we're not.
Well, I think really with earnings season, it's hard to stay focused, right? A lot of earnings reports coming out, like you mentioned this morning. But right now, our focus, and it still remains, is that in these more COVID-sensitive, cyclical sort of exposed groups, you want to stay, especially with banks, these leisure industries, something more about travel. I think these are the areas that are going to benefit, especially as you see yields pick up on the back of expectations that tapering will begin, and we're continuing to see improvement both on the labor front and in inflation.
Okay, talk to us about the inflation front. If we're expecting higher inflation, if that's your belief, where do you go?
Well, it's interesting that we are seeing pressures where you have higher input costs. We know that supply chains remain an issue, and you're seeing that labor shortage are still very much on people's minds. But what we also have to recognize is that we are seeing pretty inelastic demand. That consumer confidence number this morning, the buying intentions baked in there was also up. It's showing you that people are willing to pay that price. So as long as we're seeing these sort of costs passed along, which earnings confirm, and margins remain firm, then these are the kind of things that tell us that these input costs are helping extend the economic cycle. It's putting this sort of cyclical phase and making it longer and well into the beginning of next year.
Anna, that's really interesting, and I'm wondering how that idea of that consumer willing to spend more flows through to the consumer stocks. Will they get more love going into the holiday season, especially as we see so many more going public and also getting, eye-popping surges on their first day?
Yeah, you are seeing some nice premiums for these deals coming to market. So for these consumer names and for how consumers are thinking about spending, there is rumor around that people are thinking about spending or buying early, getting those Christmas presents a little ahead of time, just in case things are running out, because we still have these supply chain issues. But that firm demand is going to help these earnings for corporates. And that earnings growth we've been seeing, that EPS growth, remains firm. So for us, that's a positive sign. And I think going into the end of this year, that's going to help equity markets reach our price target of 48.25.
What about earnings per share growth into 2022? Citigroup putting out a note that they feel perhaps the global economy won't be as growing as fast that year. The economists pulling back their overall growth forecast, and therefore earnings per share is basically the growth is as good as it gets from here, Anna. Does that mean that we're going to lose a little bit of confidence into 2022?
We might lose a little confidence, but I would say it's pretty consensus expectation for us when we have such an aggressive recovery from lows that eventually you're seeing a lot of those earnings pulled forward, so that slowdown is natural. But the question is at what pace? When we have tapering finish, our expectation is tapering finishes around June, then we start to think about rate hiking at the end of next year, then is it going to put markets in a situation where earnings growth is zapped away or just notched down down a little bit. So for us, in the first beginnings of the first few quarters of next year, I think earnings will slow down, but not so much to the point where it's going to derail equities. It's going to put us in a stress situation. Some multiple compression expected, but a full negative EPS growth, I think, is a little bit of a not such a risk to the market.
Take us cross-asset, if you will. You get a steepening, and then today you get a flattening of the yield curve. You get auctions that put some yield higher on the short end of the curve, a 10-year yield that's actually been pretty stable in the last few weeks. What portion of the curve are you looking at? What signals is it giving you for your equities?
Where I like to look first and foremost is the 10-year. And with the 10-year, we can look at nominal yields, but you also have to pay attention to sort of that implied inflation, or we call the break-even rate. And what's been interesting is in the past few weeks, you've seen real yields actually go from negative to more negative, but the drive higher nominals has been from the actual inflation expectation portion. I think part of that is coming from anticipation of tapering starting to begin, but also broadly speaking, what that does, it helps our main call here, which is being long banks. It's pushing these sort of more cyclical and sensitive sectors of the market higher.
You really seem to like the financials, which, is my bread and butter. How much really is left to run in the bank trade? They are still trading pretty well right now, especially the biggest names.
I think what we have here is that leading up to now, year to date, you've seen that the sentiment went from pretty sour and pretty skeptical to better, to okay, to a little more confident. But now what we expect going forward is it's not just that banks have recovered, it's that we expect to see multiple expansion for the group. We think the group still screens pretty cheaply. And so going forward, if you see these continued buybacks, these better improving stories, you saw they released some of their reserves, a lot of that good news now can boost multiples, and I think that's going to be the driver going into year end.
The driver going into year end. What's the drag going into year end, Anna? You feel pretty optimistic in general. Are you worried about the rebalancing at the month end? Are we going to see a bit of volatility around that?
We do expect to see volatility around that, but I think the big risk for me, Caroline, and what's on my mind right now is if our demand is zapped away. Right now, I mentioned that we have sort of an inelastic demand situation going on, and that's helping corporates pass along price, keep those margins nice and fat. But if demand is zapped, if demand decides that we don't want to pay that price anymore, or suddenly demand for goods and that buying intention starts to weaken, now we're going to have an imbalance. And that's something for us where we think will be a risk to corporates, a slower down in EPS growth than we expected. That's going to be something that I keep an eye on for sure.
Anna Han of Wells Fargo Securities, really appreciate your time. Thank you for joining us. Coming up, we're going to continue on this theme and take a closer look at some of the quarterly results and guidance that we got today, all from some of the major industrial players. We've GE, 3M, Raytheon, and Lockheed. Plus, listen to this. The government of China tells the billionaire founder of Evergrande used his own personal wealth to solve the company's debt crisis. Okay, we'll have the latest. And we're going to have an exclusive interview with Stan Pavlovsky, the CEO of Shutterstock, as the company beats third quarter estimates and raises its full year adjusted earnings forecast. All that and more coming up. This is Bloomberg.
Energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
So if someone wants a leader, is it better to find a general or an admiral?
That's like asking me to say, who do you love more, your son or your daughter?
So it's been a fair few months of trying to get the US infrastructure bill passed. Senator Joe Manchin says that the debt ceiling should not be used as a political weapon. Earlier, he sat down with David Rubenstein, co-founder of the Carlyle Group and host, of course, of Peer-to-Peer, the economic club of Washington, to discuss whether he wants to eliminate that debt limit.
It is crazy for us to use that as a political weapon. It is absolutely insane. I think that basically the thing that we should do is come to an agreement, call a truce. And David, what I would say is the thing that bothers me more, I don't see our leadership working together. I don't see people talking, having dinner or coffee, or even having a conversation on the floor. You'll see a few of us going back and forth and this and that. If you're watching, if you are, you're more trouble than I thought if you're just watching C-SPAN and seeing us going back and forth. But the bottom line is no one's working and talking. So if you're not going to talk and communicate, then the easy way to do it, get rid of the filibuster. That's easy. Sure. All this is easy.
Would you be in favor of eliminating the debt limit, just get rid of it? Because
the debt limit should be done this way. The debt limit should be 14th Amendment, where the president has the right to make that decision. We have the right to override if we think he went too far. That, to me, is the simplest. It takes all the politicians out of it making a deal. The thing that we got caught in the conundrum right now, the Republican says, well, fine, I want you to set the debt limit. It's going to be 31 trillion, 32. We're right at 29 trillion now. So who's going to set the one? The one we have right now is 28.4. And that's going to slide into December. And basically, the only way we can do it right now is if the Republicans would not agree. And I don't think that we should change the rules by ourselves, which is called the nuclear option. This should be something that's done, that's going to hold, and saying, okay, president has that authority. We have the authority to review and override.
Based on your experience, you would expect that sometime in December they'll figure out how to extend the debt limit.
Before that, I'm pushing it now. Okay. We should do it now. It should not come down to the limit again. So if we can't do it and they don't agree on that, the Democrats have the responsibility, being the majority party right now, to do it through reconciliation. And when you do reconciliation, you've got to set a number. And that's our responsibility, and I would take that and do it.
That was Senator Joe Manchin speaking with David Rubenstein, Carlyle Group co-founder and host of Peer-to-Peer. You can catch the David Rubenstein Show 9 p.m. New York time on Wednesdays. In the meantime, we want to get a check of some of the other business flash stories that we're following at this hour. Elon Musk's soaring net worth now makes him more valuable than ExxonMobil. According to the Bloomberg Billionaires Index, the wealth of the world's richest person jumped to more than $288 billion yesterday. The $36 billion gain followed a big surge in Tesla's stock price. This, of course, after that news we've been talking about. After Hertz, they ordered 100,000 of those Tesla cars. And ARK Investment Management founder Cathie Wood, she is doubling down on her stance that deflationary forces will overcome some of those supply chain-induced price pressures. Wood reinforced her position in a tweet. This is after Elon Musk responded to her initial tweet on deflation, saying he doesn't know about long-term, but in the short term, we are seeing some strong inflationary pressures. And I know in about just over an hour's time, we have a series of tweets, and we're really going to pull out the debate on this one. Sad that Romain isn't here because I know that he's a big sort of deflationary person. I perhaps maybe am on the other side.
Are you on Musk's side on this one?
Inflation feels real to me when I take a look at my bills. But Sonali, really interesting conversation with these 2 or 3 people really going at it at Twitter.
Yeah, and I spent an hour and a half talking to Kathy Wood about this just a couple of months ago, and really she cites some places where costs are decreasing. And remember, guys, we were talking about lumber just a couple months ago. Even those prices have moderated. So I think you really need to look at where in the economy inflation is happening and where it isn't, right?
And what the definition of short term is for Elon Musk, what the definition of transitory is for everyone else.
Like what Chris Ailman said.
Or hyperinflation if you're Jack Dorsey.
I mean, we're talking demographics here. That takes time. And when we're out in Milken, some of the longer term investors certainly are saying, look, longer term, these technology trends will come back. But for here and now, you're saying 7% you saw this morning?
Consumer comfort, 1 year ahead inflation expectations, 7%. Dare I say that number was 4.5% in February 2020.
Whatever it is, it's above the 2% target.
Thank you, Caroline. Yes.
Coming up, well, there's a company that actually is in the midst of all this supply chain angst and indeed whether they can pass on the cost to the consumer. Up 0.1% is 3M. We're going to be seeing an improvement in raw material supplies, but the company's still expecting to continue raising prices in its fourth quarter. We'll have the latest on 3M and some of the other key big industrial names reporting today. Stay tuned for it. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, what the challenges with getting people back into the workforce.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Not just big tech after the bell, but earlier this morning, it was all about the industrials when it comes to earnings. 3M saying that, well, listen to this, it will continue to keep raising prices in the fourth quarter, even though they are seeing some improvement in the raw material supplies. They're seeing a lot of cost pressures in labor, logistics, and materials. Echoes similar comments from GE, saying that they have significant inflation pressure that is going to last into 2022. We do all of this as we continue to focus on supply chains and inflation, this time with Bloomberg Opinion columnist Brooke Sutherland, of course, who's been covering pretty much all of these industrials. And what is that telling you? What are some of these CEOs saying that's giving you an indication of how much this is lasting and how long?
It's certainly a lot of pressure in the short term. I mean, 3M was talking about 65 to 80 cents of impact on its EPS this year from supply chain pressures as recently as September, and it came out today and it had to increase that just because things are moving so quickly. It's really seeing the cost pressure hit it. I do think we're starting to get some interesting commentary, though, from these CEOs about how long these pressures will last. 3M and GE today were a little bit more cautious, but if you look at Lennox's results yesterday, they're an air conditioner maker, and their CEO, Todd Bluedorn, was adamant that the peak has passed. We have seen the worst of these supply chain pressures, and we're going to come out starting to see some relief here. Honeywell had talked about the semiconductor shortage starting to ease, and so you're seeing a little bit of a divide here between the CEOs.
A divide, and in fact, we had the CEO Raytheon on a little bit earlier talking about how they're not immune from some of the supply side challenges and, of course, some of the wage inflation that's going on as well. Just take a quick listen.
We're not immune from the challenges of supply chain. In fact, we talked about this morning on our earnings call. The fact is, we'll probably see almost $300 million of lower revenues this year because we can't get material into our shops and we can't get the labor that we need to complete some things. So we are seeing an impact.
Love the transparency of a CEO who can sort of come up and say, we are losing business because of this. Are you hearing that more and more, not only just on the supply side in terms of tangible goods, but people, but talent?
We are. I mean, I think we're hearing a lot about short-term revenue getting pushed to the right because of these supply chain pressures, or because you simply don't have enough people around to make the products that customers are ordering. Now, CEOs will tell you that that revenue is not lost. They're very confident that that is going to come back, whether that's in 2022 or 2023. I think that remains to be seen. There was an excellent quote from a Barclays analyst, Julian Mitchell, about how there's no lost and found department for industrial revenues, and I think that's very accurate. It depends on how long these inflationary pressures and supply chain challenges last. Like I said, some CEOs are optimistic that we have started to see things turn, but I think that is very much an open question mark. Just one thing on the Raytheon CEO, I think it's fascinating that we're seeing these challenges in the aerospace sector, and they've really cut production to deal with the COVID doldrums, and now some of these suppliers are having issues ramping back up. We saw the government step in and provide payroll support for the airlines. You did not see that in the aerospace supply chain, so a lot of these companies substantially cut their labor force, and it's going to be interesting to see how they're able to ramp that up in this tight labor market.
Well, in that labor market, too, I mean, does that mean there could be more pain ahead in terms of cuts if they can't get that on the top line or the bottom line, that relief at all?
You know, I think one interesting comment that the Raytheon CEO made is that they may see some pressures from these vaccine mandates. As a government contractor, they're required to have all their employees vaccinated by December 8th. It's not just Raytheon, but also its subcontractors. And so they expect a little bit of disruption, but he was pretty clear that this is not likely to be a major impact for them in the scheme of their $64.5 billion in revenue this year. And also, vaccine mandates help the aerospace sector because, you know, it puts us faster on a path to normalization.
Brooke, always great to be able to weave all these narratives together. Brooke Sutherland, Bloomberg Opinion, thank you so much for making the time on what was an incredibly busy day for her. Meanwhile, let's have a look at the rest of the markets, because we get these mixed pictures when it comes to supply chains. We look at, well, maybe searching out the dollar a little bit. We're only up about 1/10%, but we're certainly piling back into equities, whether it be in the S&P 500 here in the US, but also over in Europe, Taylor.
Yeah, and I think it was so interesting what Anna Han said earlier. Like, we're watching the 10-year, watching the steepness of the yield curve. We steep yesterday. Today we go flat. Pretty much unchanged here to 117, Shanali.
Yeah, and passing on some of those cost pressures. You can see it in the consumer, but not as easily in the industrial. So not all the same for everybody.
Let's have a look at what's happening with the yen, though, because clearly we're not needing a haven there. Yen currently lower versus the dollar by 0.4%. Some movement into the commodity FX instead. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Google is saying it has accelerated innovation in the country and it's planning to appeal the FTC's decision. What's your take on this and how do you plan for further scrutinies?
We are going to see what they make and what changes they actually bring to this market.
I'm Mark Crumpton with Bloomberg's First Word News. A panel of experts who advises the Food and Drug Administration on vaccines is meeting today to discuss Pfizer and BioNTech's COVID-19 shot for kids ages 5 to 11. Data from the companies showed the shot was highly effective, and the FDA staff says the benefits probably outweigh any risks. The panel may focus on myocarditis, a heart-related side effect that's been seen in some younger men after getting the vaccine. With their latest tax proposal, Democrats are going after an elusive target, U.S. billionaires. More than $5 trillion is held by Americans worth at least $1 billion. That's according to the Bloomberg Billionaires Index. Yet, as their wealth soared, their tax bills did not rise by the same extent. Democrats are now weighing a, quote, billionaires tax, which would be an unprecedented annual levy on the investment gains of America's richest. Higher education in the U.S. is suffering from falling birth rates and the coronavirus pandemic. According to the National Student Clearinghouse Research Center, undergraduate college enrollment fell 3.2% from a year ago. The number of international students declined by more than 8%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets, the close. It's that time of day, just past 2:30 Eastern.
Ooh, are you taking it today, Caroline?
Yeah, I'm going to take your ball of commodities close while Remain is off. I'm going to run with it. New York crude up more than a percentage point. $84.63 is where we stand. Of course, all eyes have been on, well, the inventory levels where we're in. Highest since 2014 as we're still awaiting that U.S. supply data, whether, of course, the inventories are tightening further over in Oklahoma. And we're going to look also at what's happening in terms of aluminium, down 1.6%. This is, it's at its lowest levels in 6 weeks. Retreat across the board, really, in base metals today. Cooling in China demand is there. I thought yesterday we were overexcited about the stimulus there, but today we're now worried too about the China's economy, showing signs of yet further slowdown. The housing sales there dropping in October. Gold off by 0.7%. Remember, we've had a bit of a run, a 4-day run in gold. Today we put that just on ice as we continue to look at the rallying stocks, maybe a little bit more risk on. You get out of gold. You get in out of wheat at the moment, though, but we actually were trading higher. Wheat down by 1.25%, but keep a close eye on some of these inflationary pressures when it comes to food. Spring wheat in the US at one point today hit its highest since 2011. But interesting what's happening in terms of the metals, Taylor.
And it's all transitory, right, Caroline? Speaking of China, let's talk about some of those metals that Caroline was mentioning. China, of course, trying to put a cap on some of these prices to stop some of this commodity inflation that we've been seeing. There's also been some concerns about demand from China as well. They've been seeing a little bit of a slowing economy. Aluminum, as Caroline mentioned, falling to about a 6-week low. Our Bloomberg New Economy editorial director, Andy Brown, joins us now to talk about, well, the property sector as well. But if you can talk generally about, well, just the economy and any concerns that we continue to see and the pressures that China is facing.
On commodities, wait for it. Xi Jinping is taking aim at the property sector in China, the most important sector in the Chinese economy, therefore the most important sector in the global economy. And if he gets it wrong and tanks the market, you could see a serious disruption in its imports of everything from steel to copper to aluminum and everything else. And that is actually quite possible.
quite possible that he'll misfire? Are we seeing a recalibration of how just being all focus on certain industries that he felt got out of whack, in particular on the right sizing of the social equilibrium, but it did feel that it took investors off guard, taking the markets off guard? Is he recalibrating how he takes on the property sector, for example?
He's got to calibrate this very, very carefully. The essential problem is he's got this campaign on for common prosperity. That means he's got to bring down the cost of property. Property is one of the biggest, if not the biggest, driver of inequality in China. To do that, he's got to bring down the price of land. It's high land prices that drive up the cost of property. If he brings down land prices, he tanks the revenues of local governments who are reliant on property sales to fund their social programs as well as their infrastructure spending. If he puts in a property tax that's too high in order to plug those revenues, property tax is a very good idea, actually, in theory, in economic theory. In practice, if he gets that wrong and he puts it too high, he could tank the property market, thereby creating all kinds of social unrest, because property is where Chinese people put their money.
So putting this all together, you have this slowing of the economy, you have the property issue as well. What does this all mean for the capital markets at large, especially international investors who are forging forward with a lot of their expansion plans in China?
So it really depends on whether you think that Xi Jinping is going to be able to pull off this very, very difficult balancing act. If I had to bet, I would say that what we're going to see on property tax is a few trials. The tax is not going to be very high. It's going to send a message to the market that you better dampen your expectations for growth, but he's not going to actually tank it. However, a lot could go wrong. We're now seeing the final chapter, of course, in the story of Hui Kai-yen, who is the founder of Evergrande, and the news today that they're going to force him to cough up money. They're basically going to clean him out in order to help repay creditors and help complete the 1.6 million apartments in China that people have bought, but he hasn't delivered.
I love this. Just when you think you've seen it all, you wake up to more headlines saying that the founder is now going to be responsible for debt payments from his personal wealth. This, though, hits on that inequality that you started this segment talking about, and that being a big issue that Xi Jinping is tackling right now. What signal is that sending when you wake up to those headlines?
You know, bringing down billionaires is quite a popular thing in China, right? I mean, look at what happened to Jack Ma. Even though he seems to be out of hot water, he was been floating around on his super yacht in the Mediterranean recently. Where Hui Kai-yen is right now is the most uncomfortable place in China. He's right in the crosshairs with Xi Jinping's campaign for common prosperity, which has reached a decisive phase precisely because it's now reached the real estate market, and they will make an example of him. And if he loses it all,
poverty, didn't he? He sort of was initially the sort of how you can make it as an individual. Like he talks about how he sort of studied under a thatched roof and water would leak in on him, and he then was, you know, the bright hope of anyone in China.
Classic rags to riches story. Grew up dirt poor, did menial jobs in the cement industry, in the steel industry, built one of the world's largest fortunes, was worth $42 billion at its height in 2017. Rags to riches story is now rags to riches to rags story. They will take him down. And he would consider himself lucky if he just lost all his money, because there are far worse fates that await business tycoons who fall out of favor in China.
Do well. Don't do too well. And do well by playing fair.
Exactly. Support common prosperity.
Andy Brown, always love his cultural read when it goes on to China. He's, of course, Bloomberg's new economy editorial director. Check out the New Economy Daily. It's from Bloomberg Economics, focused on what's driving the global economy. Sign up for the New Economy Daily newsletter at Bloomberg.com. Meanwhile, we got some breaking news for you. This on, well, the future of the US economy from a political standpoint. Chuck Schumer, of course, leader of the Senate, is saying that they believe the final deal is within reach. This is when it comes to an economic package. This is a much smaller economic package, of course, to the tune of about $2 trillion. We understand much shy of the $3.5 trillion, the spending and taxation plan that has been so hard for, closer to reaching an agreement on the economic package. So says Majority Leader Chuck Schumer as he's speaking, as you can see, in a news conference. He's just been handing over the reins there to some of the other leaders over at the Democrats at the moment. So clearly we'll see how this continuation is on the political front, and they believe a final deal is within reach. Still ahead, delivering profits, shares of UPS climbing after e-commerce strength drove profits higher in the third quarter. So let's look at the hour. That's next, and this is Bloomberg.
第18条第2項におり本院において内閣総理大臣に指名することにこの際暫時休憩いたします。
When you look at technology, how should we be looking at big banks and technology?
Technology is our friend. So it's helping us transform the bank fundamentally. And in fact, we're speaking, I think, as we speak, to our shareholders around what we've done and how we've transformed the bank. We also see technology, and technology companies as partners. So some
not
of our
rivals.
You know, we know that there are big parts of what have been our business historically that will be absorbed into convenience platforms. And by convenience platforms, whether that's Amazon or Facebook or Alibaba or Tencent or something like that, those are platforms that are just very convenient for people to conduct their day-to-day financial affairs. And it'd be very difficult for a bank to compete with that. Now, in some cases, I'd say, let's say in Africa, we are setting up a competing platform to the convenience platforms. And we're working with technology companies and mobile telephony companies and others to create a platform of our own. But for the most part, we're going to be playing on somebody else's platform.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
In the fourth quarter were dramatically impacted by the Delta variant. And while bookings bottomed out and we're clearly on the road to recovery now, a lot of the fourth quarter was impacted in business offices that were going to open in September as they pushed back to January.
Time now for some of our top calls, a look at some of the big movers on the back of analysts' recommendations. First up, Kimberly-Clark downgraded to a hold from a buy at Berenberg with a $127 price target. The analyst citing a lack of catalysts and supply chain disruptions, but still, you have the shares up about 2.5%. Next up, Rosenblatt upgrading Facebook to a buy from a neutral and leaving the price target at $400. The analyst telling investors that the stock looks oversold following the quarterly earnings earnings. Shares, though, still may be oversold, off almost 5%. Finally, Upstart downgraded to a hold from a buy at Jefferies, but they doubled the price target to $330 a share. The analyst is citing long-term factors following the recent appreciation in the stock's price. Shares were off 11%, Caroline. Those are some of your top calls.
Some of the top calls, and we dig into another key corporate in the stock of the hour: rising margins, higher prices, strong cost controls. Well, this is UPS we're talking about now. A new high after third quarter earnings. Kriti Gupta has a story. I mean, supply chain issues are hitting every single part of this market at the moment, but UPS seems to be weathering it.
Absolutely. I mean, there's so many reasons to be kind of pessimistic about the future, unless you're UPS, and that's a really great point right here. Having a really good run in the last couple of months, because remember, we're coming in this background of e-commerce, of people shipping to their homes, working from home. I for sure have a ton of packages just waiting in my lobby at the moment, but a big part of that is going to be the price hikes. They had a 13% increase in revenue per package, and this isn't the end of that. They're expecting even more next quarter as well, but a 2% drop in package volume. They're changing their strategy and raising their margins, focusing more on those higher margin businesses like healthcare, for example, as opposed to, say, shipping directly to the consumer. And that's really going to be a key part of their new revenue model, essentially a better service rather than bigger in terms of quantity. So really important there. I want to talk about market share, though, because UPS is the second largest shipper, the third being Amazon. What's interesting, though, is that 13% of UPS revenue actually comes from Amazon. So it's really interesting that when you start to see more and more people, and especially Amazon, start to look into the shipping and the logistics business really expanding, whether it's cargo jets or through other ventures, they're actually saying, UPS is saying, well, let's take a step back. Let's focus on things that aren't Amazon, diversify our business a little bit. And they have plenty of candidates where they can go do that.
Now, to your point a little earlier, UPS has already risen quite a bit this year, about 20% and then another, almost 10% today, bringing them above the S&P. So what's special about this story now, and why hang on to it?
Well, so we talked about the e-commerce boom. We talked about the higher prices, but something we haven't talked about is labor in particular. This is a little known fact. Apparently, UPS pays really, really well. So when you see the rest of the market, see their competitors, FedEx, for example, dealing with those labor shortages and trying to retain talent, UPS doesn't have that problem just yet because they're able to keep their talent and recruit a little bit more. So a little bit more insulated on that front.
Bloomberg's Kriti Gupta, thank you as always for joining us. Caroline, let me see if you can figure out this pun. Okay. Looking at the whole picture.
Oh, love it.
See? We thank Marissa Dunn, I believe, for coming up with the puns, as she often does. We're going to be speaking with the Shutterstock CEO on the company's third quarter earnings and the launch of 2 new workflow applications. All of that is next, and lots of puns still to come. This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Let's talk Shutterstock now. Beat estimates on its fiscal third quarter earnings, announcing the launch of 2 new workflow applications, helping customers basically plan, collaborate a little bit faster. This is all about creativity, of course. Joining us now with an exclusive interview, the CEO of Shutterstock, Stan Pavlovsky. It is great to have some time with you, Stan. And revenue up 18% year on year. You're seeing growth. But talk to us about the creative economy that you are harnessing, because we think of photos, we think of imagery, but what really is Shutterstock trying to provide right now?
Hi, Carolyn. Thanks for having me. And you're right. The creator economy is in full effect. More and more, you don't need to have large creative teams to create extremely high quality content. And that's a big part of why we're transforming the company and really going after the workflow of creatives. So the combination of an acquisition that we did this quarter of PicMonkey, which is a creative editing platform for small and medium businesses, as well as the 2 applications that you mentioned that we just launched that are powered with also powerful recommendations, content recommendations. We really believe that we're solving the primary problem that creatives have, which is what content is going to work in this ocean of content that I have to choose from. So we're very excited about our quarter, and we're very excited about the portfolio that we're building.
Talk to us about the portfolio. I think on the analyst call, of course, the total revenue growth with all the M&A activity has been great. If you strip that out and just take a look at some of the organic revenue growth, where do you see, if it's coming in a little bit lighter than usual, those opportunities for future growth?
Yeah, absolutely. So, when you look at our business, historically, we've been heavily tied to the stock market category, which has grown at about a 5 to 7% clip. Now, we've done a pretty good job of sort of growing ahead of that over the past couple of years. But at the same time, we want to, take advantage of faster growing areas like creative workflow and tools. And really where we think our secret sauce is going to be is really around the data. And the application of AI in really bringing recommendations to our customers of where, which content is going to work for which audience. And so these acquisitions are a part of our growth strategy. So, even, for us to grow faster than that kind of stock market rate of growth, we're going to have to continue to do acquisitions.
Speaking of acquisitions, forgive me here, I'm a little bit plagued because I've covered the investment banking industry for so long here. What acquisitions could you do next? I mean, what scale and what type of things are you looking to buy?
Yeah, so a lot of it is tied to basically 3 tenets of our strategy, which is content. So if you look at our TurboSquid acquisition that we did about 10 months ago, we are now the largest 3D model marketplace in the world, in addition to our image, footage, and music content. We now have PicMonkey as part of our application suite. We also launched Plan and Catalog today so that creatives can manage and store their content. And we also did 3 data deals to bring what we call predictive performance, which is a fancy way of saying that we want to make really good content recommendations for our creatives. So if you look ahead, we want to continue to look at everything from consolidation within the content arena, but also, video is a growing area for us. Additional technology acquisitions centered around artificial intelligence and data will be a continued focus for us. We want to be an end-to-end platform, a one-stop shop for creatives. So we're going to continue to look at, good small to medium-sized acquisitions that allow us to continue to also, do some of the things that we're doing from a capital allocation perspective in support of our shareholders.
Stan, who are your creatives? Who are your clients exactly?
Yeah, so our clients are everyone from, your individual influencer who's, trying to make a name for themselves on social media, to the small business down the street that's going to use our PickMonkey application, to the largest agency holding companies and the largest corporate clients. We're doing, with our studios product, we're doing full director-led commercials for some of the biggest clients in the world now. So our company has really changed and transformed, but we really do serve clients large and small.
As part of that transformation, talk to us about a pivot to more of that subscription-based model from a more transaction-based relationship with your customers.
Yeah, absolutely. Customers want flexibility. This year alone, we launched several new subscription products that are all tied to being much more flexible. Flexible in pricing, flexible in terms of being able to access all the different asset types that we have. In fact, today we announced a flexible subscription within our e-commerce channel. The beauty of subscriptions is that flexibility comes with also a higher retention by customers, right? Similar to how customers are used to using Netflix and other subscription products. When they have that flexibility, when they have the right price, they tend to be a lot more sticky. And with some of our other acquisitions that we've just done that really help with the creative workflow, we're going to couple those within our and bundle those within our subscription. So we think we're going to really become a predominantly subscription company over time.
Stan, last time you spoke with us, you talked about crypto being here to stay. Is everybody going to be transacting in the creator economy with digital assets?
It's interesting. It's something we continue to monitor, and it is something we believe in. Today, a big part of our business focuses on the rights and clearance around assets. So, for example, within our 3D space, we've had some really interesting, stories, whether it's Beeple, who sold, an artwork that was based on art that came from our 3D marketplace for $69 million. Yeah, I mean, there's just some really outlandish and amazing things that are happening in the creator economy, and we'll definitely be there. But crypto has to become much easier to transact with. Today, it's not as easy. It's highly regulated. It's something that has to evolve, but I definitely believe it's here to stay.
Shutterstock CEO Stan Pavlovsky, really appreciate your time. Thank you for joining us. All as we push forward to the last hour of trading, Caroline, and we are at record highs on the S&P, you're at record highs on the Dow, and at one point earlier, record highs on tech. Not quite there yet, but we're just a few points away from that.
Yeah, Facebook perhaps tugging us a little bit lower, off by almost 5%. That's Bloomberg.
Thankful. They don't know what to say. Again, they can't even fathom that they're out of Afghanistan. They're still in a state of shock and can't believe it.
built through this process is essentially a mechanism for getting oppressed women and girls out of Afghanistan. So we're actually going to circle up and see what resources we have left, to see what options we have left, what mechanisms we have left, and actually look at potentially trying to get more women and girls out of the country as well.
We've been through a lot, us as a team. I know sleepless nights, but you know what? There's nothing more satisfying than knowing that you've saved many lives, and will continue to support these girls on their missions.
This virus is here to stay for quite a bit, because it has been spread all over the world and has this ability to create mutations and variants.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm Mark Crumpton with Bloomberg's First Word News. The Democrats' idea for a new billionaires tax to help pay for President Biden's social services and climate change plan has quickly run into criticism as too cumbersome, with some lawmakers preferring the original plan of simply raising the top tax rates on corporations and the wealthy. Once Democrats agree to the tax proposals, they can assess how much is funding available for Biden's overall package to expand health care, child care, and other climate change programs.
When the president proposed his initial Build Back Better agenda, he rolled out a series of tax reform initiatives that were as important to him as the investment initiatives, because he feels that our tax system is unfair, that it's outdated, and that it was long in need of reforms.
Majority Leader Chuck Schumer opened the Senate with a simple message, quote, "We're working to get it done," end quote. The United States will expand visa processing efforts to accommodate an expected spike in applications under a new policy that loosens restrictions on vaccinated travelers. The U.S. will open its borders to fully vaccinated people with recent COVID tests next month. Visa delays mounted throughout the pandemic as consulates closed, creating a backlog that could be made worse if applications pick up because of the new policy. Democrat Terry McAuliffe distanced himself from President Biden earlier this month in a bid for more votes in the Virginia governor's race. Now, as polls show an extremely tight race, the former Virginia governor is counting on the power of the presidency to give him an edge in the November 2nd vote. McAuliffe is planning a campaign appearance with the president tonight. Iran says cyber attackers were behind a major disruption at gas stations throughout the country today. Officials say hackers infiltrated the software that supports a subsidized card payment system used by millions. State-run media in Iran says the disruption may have been timed to coincide with the upcoming anniversary of widespread and violent protests that erupted after the Iranian government raised fuel prices in November of 2019. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets The Close with Caroline Hyde, Romaine Bostick, and Taylor Briggs.
Counting you down to the close. That's an hour to go until the end of trade.
I sound like a broken record, but just like yesterday, we're still at record highs. Another record high and a pretty broad-based rally here, too, among the sectors. You have divergence in individual names, but energy really leading the pack higher. Only 2 names in the red, and that's industrials and communication services. Taylor.
I want to talk about some of these highs that we're seeing here, Sonali, but first, take a look at shares of Beyond Meat, Caroline. We know that this is one that we often talk about. You're only off about 1%, but they got a downgrade from Credit Suisse earlier today after that third quarter miss on revenue. So those shares are off just a little bit. Cody, though, to the other side of that, you're up more than 6%. This is after they actually got an upgrade at Deutsche Bank, citing this valuation after a recent decline in shares of this company. So it actually looked attractive from a valuation perspective. Intel is one, Caroline, it just cannot catch a break. This is just now another downgrade from BMO Capital Markets. It is just the latest firm to downgrade this company following those third quarter results. Just really struggling here to get analysts excited about this. You want to speak about what to get excited about? It's shares of Facebook. Of course, we know that we did this yesterday, but it continues to be a big story all as we push forward to, well, some other big ones. If you want to talk about ad revenue, I mean, it's Google, right? It's Twitter. We're going to get some of those and any other commentary.
And we're going to be digging into all of it on What You Miss. Full focus on the advertising community right now and where they're putting their dollars to work. Interesting, and where you should be putting your dollars to work, because Taylor was just outlining how Intel's got some analysts looking a bit glum on the stock. Could we see actually an overall downgrade cycle come in when it comes to analysts' view on earnings per share across the board? This is an interesting note coming from Citigroup. I referenced it a little bit earlier, but basically the company analysts over there saying, look, we're already seeing perhaps economically a downshift. We saw Citi economists downgrade where it sees the US economy growing. Therefore, is that going to trickle down into a downgrade mode for earnings per share? Could we see 5% growth in earnings per share for 2022 rather than the 7% that is currently consensus? First time this could happen since July 2020. Look, it's not necessarily fatal for markets, so says the key analysts over there, but it might be yet another kind of headwind as we try to refocus on where these markets continue to push. Do they go to the higher side? Omar Aguilar's with us. He's Chief Investment Officer at Charles Schwab Asset Management. And Omar, as we look towards perhaps a few concerns, whether it be inflation, whether it be supply chain, whether it be, well, the downdraft on earnings per share growth coming from analysts, are we able to look through that? Are we able to push higher because there's no other place to put your money right now?
Yes, thank you. And the market seems to be telling us that, yes, we should be looking through. If you think about, what markets normally do is markets are a discounting mechanism, what the, 6 months or 8 months down the road. And yes, as you well mentioned, there's a lot of reasons of why volatility should be higher and why should be concerned down the road, from, the high levels of inflation to the potential of higher interest rates to, commodity prices, hitting all-time high, to a deceleration of growth of the economy and a deceleration of earnings that is coming in the next 3 quarters. So it's very easy to actually paint a very negative scenario. On the flip side, though, what the market seems to be, comfortable with is to think about that, raising rates in an economy that is growing is not the end of the world. The combination of increasing interest rates as well in an economy that, yes, is not growing at the same pace that it was growing, 2 quarters ago, but still above trend, it is actually not a bad combination as long as inflation doesn't get out of the hands of the Fed. And I think that's sort of a little bit of the mechanism. And when you think about and combine that with the fact that, consumers are pretty healthy and spending is probably the best that we have had in a long time, and the corporations telling us through their earnings numbers that things are actually in good shape, I think the market is thinking that, things will actually work out.
What do you do then with valuations? We're back at record highs, but hard to get excited about a 10-year at a 162. What do you do?
Well, this is a perfect example of the big uncertainty about how fast is this cycle. If you think about where we go into the cycle, going from the beginning of the pandemic in 2020, when we went into a quick recession and back to a full recovery, and now we passed the recovery into expansion. Valuations tend to actually get extended and stretched during the expansionary part of the economic cycle, and that's where we are now. That doesn't necessarily mean that a bear market is about to happen and and that we need to start moving towards being defensive, what it does mean is that we have to be very careful on how we choose, where we allocate assets, diversifying risk, and understand that, yes, growth is going to be rewarded down the road, but this is still a good time for actually picking and choosing those areas that are still in the process of expansion that could be actually rewarded.
What about outside of the United States? Because we have that slowdown we see in China, concerns about the Delta variant. Where are there opportunities in emerging markets, if at all?
Well, I would probably say that on one hand, our position has been that the U.S. will continue to lead the future economic growth globally, and it will provide a stability. We have seen that, for the last couple of years, and I think going into this phase, I would probably say that the U.S. is probably like 3 to 4 months ahead of developed markets, and certainly, much ahead than emerging markets. Emerging markets are a tricky, component right now. They did have a great third quarter because of a little bit more control of the coronavirus, and I think as they started to go into that reopening phase that we had, way back, in the beginning of this year, they were in this reopening phase that helped a lot of the economic activity. That being said, a lot of the challenges of supply chains and a lot of the challenges of imbalances are starting to hit emerging markets. And you combine that with the fact that we have significant headwinds out of China and the potential of slowing down with China, it does affect emerging markets. So we will be a little bit more cautious into expanding or being put bigger positions into emerging markets. On the other hand, developed markets, provide a very interesting opportunity because they do have, that extra runway on the potential for, expansion that is a little bit behind what the U.S. are. So diversification internationally is definitely, a good opportunity to think through right now.
Is there any play to be had around the economic package that we're likely to get signed off soon enough? Chuck Schumer saying they're close to reaching an agreement on what is like to be a much scaled back tax and spend policy, but nevertheless money to be put to work in the US. Is there any more investment opportunities around that, Omar?
Well, there's clearly, one piece that will be taxes will not go down, and that's for sure. And I think what this does is the market seems to be pricing in, a more moderate, package of what is going to be signed. I would probably say that there's going to be probably little upside in speculating about the political landscape and how that's going to play out. And it will provide volatility. And unless there is a big surprise, which again, given how far we are into this process and given that infrastructure is part of these negotiations, I would probably think that volatility will probably be the only thing that will be rewarded. Other than that, I think the market seems to be going through that and pricing it correctly.
Omar Aguilar, always great to have some time with you, Chief Investment Officer of Charles Schwab Asset Management. Of course, keeping a close eye on that tax and spend. Meanwhile, coming up, we're keeping a close eye on those markets as well. We push towards the closing bell. Doug Ramsey's with us, Chief Investment Officer of the Luteville Group. Get his take on whether you should be playing into some of the cyclicals or not right now. We're also going to be deep diving into Senator Joe Manchin of West Virginia, talking about tax and spend deal that's closing in. He, of course, been a key kingmaker in all of this. David Rubenstein, the Economic Club of Washington, is going to be speaking with him. We'll hear what Manchin said about a minimum tax rate for corporations. And a big day for tech earnings. Yet again, Texas Instruments, Microsoft, Google, Twitter, just a few of those companies reporting after the bell. We'll do it all for you as the results break. This is Bloomberg.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies?
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Minutes to go until this market closes, and it's new record highs on the S&P 500. We push on higher. Utilities, some of the real estate companies doing pretty well today, up on the back also of earnings coming thick and fast. But we look at the European market doing pretty well as well. They hit records at one point in the day, up 0.4%. Dollar managing to cling into the green at the moment, even though we're not really searching for a haven in this market. We are seeing a bit more of a risk on tone. We're seeing a flattening yield curve. In fact, after a 2-year bond auction, we saw yields just push higher slightly on the front end of the curve, yields coming down on the 10-year ever so slightly. So we do see that flattening after we hadn't been seeing increasing steepening in terms of the overall US Treasury curve. I'm looking at the NASDAQ up 0.2%, even though Facebook's having still a bit of a woeful day. Russell 2000, though, today your laggard of choice, off by 0.4%. Some of those industrial-related names perhaps not faring quite so well. Some of those consumer discretionary names also falling after yesterday's standout performance. We're seeing, as I said, no flight to a safety. The Japanese yen down by some 0.4% against the US dollar. Crude, though, continuing to push on higher. We've still got those inflationary pressures. Let's talk options as well, surrounding all of our market views. Where are you playing it in the options market? Options Insight, 40 minutes until this closing bell, and we want to get you up to speed with some of the trading on the day. Matt Rao is with us, Nomura Securities International Executive Director. What do you make of market sentiment right now? Where are we buying this record rally continue?
Yeah, I would describe it as investors broadly being reluctantly aggressive. I think people, because yields are so low, they feel that equity beta and equity exposure is something that you just can't go without. So being uninvested is not a very good choice right now. So a lot of investors are finding ways to do it with a little bit better defensive characteristics, or to try to take out some of the really nasty scenarios that might exist. And they're getting pretty creative in the ways that they're trying to do that.
Okay, explain more. What are those defensive characteristics?
Well, you can look at things like equity beta replacement trades or just S&P replacement trades. One thing that I think looks relatively interesting at the moment, and there are others out there who agree, are being long via calls or call structures where your downside is limited because you're buying a contract that's going to pay off in a rally. So you have a bit of levered upside, but you have limited downside because you don't own the underlying security. So adding in pieces of trades like that can change the risk-adjusted return profile of your overall portfolio. And I think that the concept of reluctantly aggressive really does apply, because we also have this big push-pull and tug-of-war going on in the market between inflation versus deflation. Most recently, Cathie Wood and Jack Dorsey got into it on Twitter about that. So, there are different ways to express those views, whether it be in interest rates or in equity markets. But with yields as low as they are, being uninvested is not a good choice.
Matt, you're talking about long side when we're still flirting with record highs here. How do you protect on the downside?
Yeah, I mean, there's definitely a persistent bid for downside protection in the form of just puts and put spreads. If you look at the implied volatility differential between downside protection in the form of puts, or put skew as we would refer to it, or upside in the form of calls, you've got a little bit of a weird relationship from a historical perspective, where put skew, or the steepness of that demand for puts, is very high, especially relative to calls. And call skew is relatively low because people like to sell calls for yield when there's not much else to be had. So you've got some interesting nuances to the market as compared to historical norms, but I think it's fair to say that where we stand right now is not historically normal, and we've got some unique challenges and questions to answer.
Matt Rowe, Nomura Securities International Executive Director, really appreciate your time and thank you for joining us for Options Insight today. And still ahead, President Joe Biden and Senate Democrats moving closer to an agreement on his economic agenda. We're going to head down to Washington and bring you a conversation with Senator Joe Manchin of West Virginia and Carlyle Group co-founder David Rubenstein. That is next. This is Bloomberg.
Bloomberg surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you
drop
great.
The bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Supply chain team, they became unsung heroes of our pandemic timeframe, where they just came forward with all kinds of creative workarounds, risk management, diversifying our supply chain.
In Washington, Republicans and Democrats are debating the corporate tax rate. Senator Joe Manchin of West Virginia, well, he's part of that process, of course, but he was also sitting down with David Rubenstein, Carlyle Group co-founder and host of Peer-to-Peer at the Economic Club of Washington. Here's why he was discussing the push for a 15% rate.
I think, and the Senate's responsibility is we're going to do a deep dive, and we should do a deep dive, and that's why I've always said, when you do reconciliation and things such as this in such a manner that it's all partisan, you don't go through regular order. It doesn't go back to the committee. There's not a hearing. You don't have a chance for all of you to come in and testify and tell us what's working. This could have this ramification. Did you think about this? You think about... We don't have all the professionals. Basically, you just have a few staff from the leadership trying to put things together and massage it the way they want it. And I just thought that wasn't a good way. So do I think I know? I don't know. I went 25% on corporate net. I went 28 cap gains all in. I thought get rid of carried interest, some of the loopholes. I know you've been hearing this wealth tax has got everybody totally excited to a certain extent. And the only thing I've ever said about taxation, it should be fair.
The wealth tax, in your view, is something you support?
The wealth tax, I don't know. I haven't seen the text on it. But the only thing I've said this, I'm all for a minimum 15% corporate. I think every corporation should pay a minimum tax in America. And I think every individual, no matter how wealthy you may be, everyone should participate. So when they start setting, well, if you're 250, there's nothing going to affect you if you make less than 250,000. Now it's 400,000. The way we're moving pretty soon, anybody's not a millionaire, don't worry, we're not fooling with you at all. We're going to get all these people up here. That's not America. Last time we had a balanced budget, last time we had surpluses, it was under the Bill Clinton, and that was Erskine Bowl and John Kasich. Put all that together in 1996, 97. We spun everything off to where we had surpluses. We'd have been debt-free by 2006.
Senator Joe Manchin of West Virginia, of course, there with David Rubenstein, the co-founder of the Carlyle Group and host of Peer-to-Peer. Make sure to catch the David Rubenstein Show, Peer-to-Peer Conversations. It happens Wednesdays, 9 p.m. Eastern. And we continue this conversation with our Bloomberg tax reporter, Laura Davison, at the Capitol there in Washington. Laura, I think my favorite quote, I got this emailed in from an investor, I won't name names, Ray Dalio and Larry Fink, saying that they'd pay more in taxes only if the funds were spent well. Shouldn't the funds always be spent well?
You know, one would think, but there's really a whole bunch of conversation happening here in Washington about how to go and raise taxes. And the one things that Democrats can't seem to agree on are what sort of ways they want to do it. You know, they talked about raising the corporate rate. Kyrsten Sinema doesn't want to do that. There's talk about a billionaire's tax. This would be a tax on unrealized gains for the wealthiest Americans. House Democrats really don't like that idea. There was an idea to ask the banks to report account flows to the IRS so they could find tax cheats. Joe Manchin doesn't like that. They're really Democrats are really scrambling to find enough ways to raise taxes to pay for all the spending that they want to do.
Now, how are they going to fund the plan without rolling back some of these cuts?
So they, are looking at a couple different things. They're scaling back the size of the package. Remember, a couple months ago, they started at $6 trillion, then down to $3.5 trillion. Now they're looking at somewhere south of $2 trillion. So that helps on one side. And that's really the question. There you see a bunch of competing plans coming out right now. Ron Wyden, who's the chairman of the Senate Finance Committee, is putting out a plan tonight on this billionaire's tax. There's a lot of questions about, one, if it has the political support, or two, if it's even constitutional. They're really scrambling to find, all sorts of ways, or try if they can twist the arms of some of their colleagues and say, hey, Kyrsten Sinema, can you agree to a little bit of, raising the rates on the corporate side? So far, she's not been willing to do that. Another option on the table is a stock buyback tax or this corporate minimum tax that Joe Manchin was talking about. This would be sort of a floor level of taxation for companies. We haven't had that before. It'd be a really, sort of new and novel idea. So they're still working on even just getting that drafted.
And of course, you've been front, out and centre in terms of all the scoops for IRS reporting, making it more transparent, beefing up the IRS to be able to ensure that they're taxing efficiently. And that seems to be something Joe Manchin was pushing back on in terms of banks reporting on that.
Yes, he really came out today and he said, it was a screwed up proposal. He said that to the president. This was the idea that the IRS would get the information of the inflows and outflows into a bank accounts above a certain threshold. They set $10,000, subtracting wages from that, and basically said, look, this is an invasion of privacy. This was Manchin's position. And Democrats have really been feeling a lot of political pressure, both from voters as well as Republicans who have said that this is really government overreach. So this was going to raise, hundreds of billions of dollars, almost, $500 billion to fund the plan. It's unclear whether they'll be able to move forward with this. Senator Warren, who's a big proponent, said they're still negotiating, but they have to have Manchin. So they either have to find a way to get him on board or find another way to get that $500 billion.
Laura, we love getting you on because you can really sort of digest the insanity that's happening. My favorite latest proposal is the SALT cap proposal is 2 years off and then 4 years on. What the heck does that mean?
So really the way this would work is they're just sort of delaying the SALT cap to later years. The reason they're doing this is because it's really inexpensive from a congressional budgeting standpoint. Instead of having to just lift the SALT cap, it would cost them, probably a couple $100 billion to apply to that $2 trillion total. They can say, oh, instead of, in 2022 and 2023, we'll just push that later down and people will pay the taxes then. The hope is that they can then repeal it by then. Of course, there's no guarantee. So they're really just kicking the can down the road on the SALT cap and hoping to solve it later, which is, of course, the same sort of tactic we've seen with Congress, from everything from the infrastructure bill to the debt ceiling.
Push it all back. Nothing matters anymore. Bloomberg tax reporter Laura Davison at the Capitol there in Washington. Really appreciate your time in helping us digest some of this news. And in all seriousness, you guys, I make jokes and I laugh, but higher taxes, you heard it from Omar Aguilar there. Taxes aren't going down. They're only going up. What does that mean if you're an investor? Today, we brushed it off. We're at record highs on the S&P.
I think it's mainly the focus of every single CIO. What's the one thing the clients are worrying about? Taxes. Listen, Bloomberg.
OECD nations need to end coal use by 2030. Developing nations need to follow suit by 2040. And we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. Securities and Exchange Commission Chair Gary Gensler is on a collision course with some of Wall Street's biggest names as his plans for overhauling stock trading rules take shape. Elaborating on a report the SEC released last week scrutinizing January's meme stock craziness, Gensler said that bankers, or rather brokers, may be using algorithms to goose trading in a way that hurts investors' returns. Gensler spoke during an interview for an upcoming episode of The David Rubenstein Show, Peer-to-Peer Conversations, that was recorded on Monday.
In this space, whether it's a robo-advisor or a brokerage app, if they figure out by giving you, David Rubenstein, a certain signal, a certain color, a certain prompt, a behavioral prompt, that you might trade more or you might buy a higher revenue product for them, therein lies a potential conflict. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns?
And you can watch The David Rubenstein Show on Wednesdays at 9 p.m. New York time, right here on Bloomberg Television. A group of experts who advises the Food and Drug Administration on vaccines is meeting today to discuss Pfizer and BioNTech's COVID-19 shot for kids ages 5 to 11. Data from the company showed the shot was highly effective, and the FDA staff says the benefits probably outweigh any risks. The panel may focus on myocarditis, a heart-related side effect that's been seen in some younger men after getting the vaccine. Law enforcement officials in the United States and Europe have arrested 150 people and seized tens of millions of dollars in an international drug trafficking investigation stemming from sales on the darknet. The Justice Department says the arrests are connected to a 10-month investigation between federal law enforcement officials in the U.S. and Europol in Europe. Investigators seized more than $31.6 million in cash and virtual currency, as well as 45 guns. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
The most crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romaine Bostick, and Taylor Briggs.